We've been engaging the banks, the senior leadership teams of banks, both Union Bank of India and PNB, in putting together onboarding journeys. What we showed yesterday was the transaction side of UPI, but a larger heavy lifting which is happening is on the onboarding part. We have been getting great inputs from both the bank senior leadership of the banks of both PNB and Union Bank of India. We thought this would be a great forum to showcase that product. So without much ado, I will have my colleague, Mr. Sunil Das, and his team, who have relentlessly worked on this product day and night along with the stakeholders. Thank you, Sunil, and thank you for all the efforts put in. So let's start. We'll have a small AV to put the momentum on this program. So, Aparna, over to you.
Hello. This works? Hello. So, good morning, everyone. I'm Sunil Das, and I lead the InSolutions product, issuance product at InSolutions Global. In the next few minutes, what I'll try and do is showcase some of our capabilities in the issuance space by walking you through some customer journeys. Now, these customer journeys, what we've tried and do is split it into 4 parts. Okay, we start off with the customer onboarding journey, ending with a virtual card issuance. Then the highlight of the day, which is attaching that same very credit card to a UPI VPA, then performing a transaction, and viewing that transaction in the issuance app and the dispute management capabilities around it. So this is the app that the applicant downloads, an applicant who is wanting to have a credit card of a specific bank. The app comes with multilingual options. Various local languages are covered in it. So we start off with this opening screen, wherein we start off by asking whether the customer is an existing customer of the bank. The whole idea behind putting this up right up front is, by leveraging our connects with the core banking system, whatever KYC details of the customer is available in the core banking system, we fetch that so that the customer does not need to re-put in the details. So we capture details like the name, mobile number, annual income. We then go on to do a email ID authentication, followed by a mobile number authentication. We capture the PAN number, the Aadhaar number, okay. A word out here that this is the point wherein ISG's proprietary product, ISG Authify, kicks in. This is the product which is integrated with all the agencies like UIDAI, like PAN, that is the NSDL, ITR, EPFO. Okay, so it's a completely digital journey. The whole idea being that the applicant need not walk into a branch and dump a whole sheaf of papers to apply for a credit card. One more thing, this entire workflow is completely, customizable and configurable. So what we do is, after meeting with the bank, we decide the workflow which is, adhering to the bank's compliances and needs. So we've come to a stage where we have captured the Aadhaar number, the PAN number. We do a PAN number validation in the background. This is the point where we do the eKYC authentication of the customer. So the mobile number saved on the UIDAI database, against that Aadhaar number, an OTP has been triggered. We also fetch the CIBIL score. Now, basis all the data points that we have captured so far, what we do now is offer an option to the customer, rather the applicant, to choose a number of variants, card variants, which is eligible for the customer. So the customer chooses one of them, then starts the next journey of actual document upload. Just one word over here. We are also integrated with our VKYC partner. The whole VKYC journey also takes place. So the customer uploads the PAN card, the Aadhaar card. The OCR capabilities that we have, has digitally read the Aadhaar number from the Aadhaar card that was uploaded by the customer, and so the same applies to the PAN card. This is the point where the virtual card has been now created for the applicant. The next obvious step for the applicant is to download the issuance app, do a SIM binding process, configure a new MPIN to access the app, activate the card, log in with the biometrics. Okay, now the details are shown. Now over here what we try and do is, we leverage the features, the card control features that the app offers. So now the customer is able to set limits on various channels, be it UPI, be it ATM, be it POS, and choose whether to enable or disable these channels. We also offer an ability wherein the customer can choose certain MCCs on which the customer chooses not to do transactions. So what we have tried and done is offer the entire card control features at the tip of the customer. The customer also has the option to now apply for a physical card. Now that the card is created, the next flow that we look at is the Bhim flow, where the customer is able to attach the credit card to the UPI VPA. This is the flow which was showcased yesterday during the launch, so I'll just breeze through that. Customer logs in to Bhim. Okay. So far, you were able to attach a debit account. Now you get the option of attaching a credit account also. The applicant chooses the bank. Now in the background, what has happened is that the bank's card management system powered by ISG has returned the card number details. The customer chooses that credit card account, creates a VPA. This is the standard Bhim flow. And thus, the VPA has been created. The customer goes on to create the UPI PIN. Again, the PIN is created basis the last 6 digits of the card number is what the customer needs to enter along with the expiry date. The UPI PIN is set over here, and now effectively the customer is ready to do a transaction. Over here we look at a BQR scan. We look at a transaction that's happening on a merchant called Petals. It's a transaction worth 1,500 rupees. The customer clicks on confirm to pay, enters the UPI PIN, and lo and behold, the transaction is done. Now that the transaction is done, the next step for the customer is to view the transaction in the issuance app. This is the issuance app. The specific transaction that we looked at, that is the Petals one, is visible over here. Now let's assume a situation where the customer wants to log a dispute against that transaction. The transaction details are present. The customer just right-clicks on that particular transaction, logs in the dispute details. We offer some standard dispute reasons which the customer can choose. And the dispute is logged. Dispute reference number is offered through which the customer can track the life cycle of the dispute on the app itself. So this essentially was a quick walkthrough of our customer onboarding capabilities, okay, and the powering that we do behind the scenes for RuPay credit card on UPI. Just a point on the whole frictionless experience. A lot of thought and work has been put into ensuring that the entire UI UX is frictionless and seamless. We worked with a leading design agency to put this flow together. These entire flows are configurable and adheres to all the compliances. So while this has been a quick fire walkthrough of our capabilities, we'll be very happy to meet you in our booth and have some detailed and engaging conversations on how ISG can co-create some fantastic products for all the banks. Thank you.
So thanks, Sunil, for putting this very elucidated showcase of your product. So Adelia, can I now request you to just, considering we have constraints on time, please. Yeah.
So I'm doing the thank you ceremony. Let me tell you, this gives us great pleasure to acknowledge with gratitude our 10 years plus association with Punjab National Bank, Union Bank of India, National Payment Corporation of India, NPCI, and which has actually enabled and helped us to launch this product. We thank Shri Sanjay Vachni, CGM PNB, Shri Mahendra Dohare, GM PNB, Shri Vinish Chawla, DGM PNB, Shri Nitish Ranjan, ED, UBI, Shri Sanjay Narayan, GM, UBI, Shri Gyan Narayan, AGM, UBI, Srimati Pravina Rai, CEO, NPCI, Shri Kunal Kalavati, Gaurish Kargaonkar, and Chaitanya for taking this precious time and having graced this occasion. We place on record our gratitude to Punjab National Bank and Union Bank of India for giving us this opportunity, and NPCI for the support that we received from them to successfully launch this product. We take pride in enabling our Genius platform to be the first launchers and to participate in the first initiative taken by the regulator and NPCI jointly along with the leading nationalized banks to come out with a product which is a game changer. We have historical background of the RuPay credit cards. We also have the UPI success. Now what we see is a collaboration between these two great products which are going to be game changers in this ecosystem. We thank our regulators, our government organizations who have continuously innovated, who have continuously encouraged innovation and made these products absolutely secure. A time is soon going to be seen where every citizen of this country would aspire to own this product. And this is something which I would like to place on record, the leadership provided by Shri Dilip Aswaji under ma'am's leadership, Pravina, whose team has continuously worked round the clock and supported the banking industry and players like us to come out with digital products which definitely have a future. What we see in this ecosystem is innovation that is continuously happening. Every consumer like you and me would like to see a product which is widely accepted, which has got security inbuilt, and which is going to give a delight in terms of a wallet which is convenient. We definitely look forward to more innovation in this space and contribute to the innovation in terms of our own platform, and would like to assure the industry that our focus for the next couple of months would be to see how do we scale, how do we give you the security, and make sure at the end of the day this becomes truly a consumer delight. With this, we would also like to thank our organizers of the Global Fintech Festival, IMAI, and all of them who have brought out this kind of a launch at the time of a great product that we are also equally launching, and making this a grand occasion for us to really truly appreciate and promote this product big time. Thank you very much, and we thank everyone here, the teams in ISG, the teams in NPCI, the teams in Punjab National Bank and UBI who have worked round the clock. Without teams' effort, tireless effort, and round-the-clock effort, we would not have been able to launch this product. Thank each and every one of you for your support, for your good wishes, and we look forward to this continuous support. Thank you.
Thanks, Adelia. That's very inspiring. Pravina, may I request you to say some few words? I know it's not a part of the script. Okay. The only challenge is we have been told at 10:35 we're going to get shooed away from this place. So, okay, so please. I mean, no occasion is complete without a few words from you. Thanks.
Hey, thanks, Anup, and really nice to see this event warm after the governor's launch yesterday, right? So it's like really full of the same energy. And without you guys stepping up and supporting both PNB and Union, this would not have been possible. And we are so proud to have PNB Bank and Union Bank at the forefront of the launch yesterday. I can't tell you what a difference it makes to us, because the two banks that have been formed as a part of a big merger, and I'm sure the bank has aspirations, but we have more aspirations for them. So it was very, very heartening to have these two banks at the launch yesterday. And we are very hungry for agile tech organizations that can power the pace and power the innovation that we need in the payments industry in India today. I'm saying India, but it could be a lot more than India. But for now, right, let's just say that we need to do this for India. So the ambition is high. The possibilities are immense. Very, very happy to see ISG here. Hello. So I think we were just talking about how fantastic it was to have Union Bank on the stage yesterday. It gives us great pride and pleasure. So we have a lot of expectations and aspirations together to grow this business. And wonderful to have tech players like ISG step up to power this journey. So all the best to the team, to Adelia, of course, very old friend and counterpart in the payments industry. Of course, Anup, old friend too. And the organization is one that I've known for long years. So really, this is like a version 2, and we're really looking to do a lot of good work together. All the best to the teams.
ED sir, again, not a part of the script. I'm sorry we had to start it because I was just telling everybody that we're going to get shoot away at 10:35. So can you please give us some few words from your end? Yeah, please. Thank you.
Good morning, everyone. Respected Adelina Castellino, MD of ISG, Mr. Anup Nair, CEO, Mrs. Pravina Rai from NPCI, and all my friends from ISG, Union Bank, NPCI, and ladies and gentlemen. It's indeed a pleasure to be here today after being part of a game-changing initiative which was launched yesterday in the august hands of Governor Reserve Bank of India. That's about UPI on credit card. It gives us more satisfaction that the two partner banks which were sharing the dais with the Honorable Governor for this launch yesterday, actually they were powered by ISG. So thank you so much, ma'am, and your team for making this possible. Our partnership with ISG is for many years, more than a decade. And through these years, we have seen that how both the organizations have grown together. In fact, in Union Bank of India, once a service provider or a vendor is onboarded, it's no longer a service provider or a vendor. And I think, ma'am, you'll agree and your team will agree that we are really a partners in growth. So your success is our success, our failure is your failure. That's the mantra we do with every partner that we have in our banking space. Credit card business is indeed a very aspirational business for the country. And it is also a business which comes and which brings the status symbol, because you go to the airport and you can access launch, these kind of things. But today, the credit card market is highly underpenetrated. So if you compare with the number of debit cards, which is close to 800 million, and the number of credit cards is hardly 35 million. And a better comparison is about 150 million people actually do shopping on e-commerce, but only 35 million are having credit cards. So you can imagine the gap which is there. In fact, I was talking to a fintech player a few days ago, and he told me that last year, 80% of the applications for credit cards were rejected. And that 80% number is around 40 million. And the reasons for rejections are not that they are not creditworthy. Yes, maybe they are not having the CIBIL score, but because they are new to the credit market. But more reasons are that they are self-employed. And when we say self-employed, they may be doctors, they may be chartered accountants, they may be lawyers. But banks generally don't give to them because you don't have the credit score and like that. And then credit card market somehow, unfortunately, has not gone beyond tier 1 and tier 2 cities. Reasons are many, and one of the reasons is that the collection capabilities of the lenders beyond tier 2 market is very limited today. But I think things are unfolding. This one initiative led by NPCI for UPI on credit card, I think it is really going to be a game changer. It will not only push the issuance of more credit cards, more particularly into the hinterlands of the country, but also increased uses. And this is further promoting the RuPay credit cards, for which all of us are very focused, and we are marketing it very, very aggressively. So many things are happening, and many things will happen just by one announcement of UPI on credit card. Future is very bright. Best wishes to each one of you, and all of us will work together to make our country and take our country on the steep curve of digitalization. Thank you very much.
Thank you, Edie, sir. This is really motivating and inspiring. Before you came in, sir, we have actually put together, you've been a huge proponent of a seamless journey from onboarding for customers. We have taken that inspiration and put together some journeys. We'll come and discuss this in person. Take your final view. The last journey that you discussed has gone into production as on yesterday. Yeah. So hopefully we have kind of lived up to your expectations on that. So with this, Duhare Sahab, can we have a few words? Again, not a part of the script. So please. Yeah.
Thanks, Anup. Nitish Ranjanji, ED Union Bank and his team, Pravina Rai ji and team from NPCI, Adelia Madam and team ISG. I really give a big thank to Adelia Madam and his team, particularly people behind the show who has made this possible. And I'm really grateful to Pravina Madam for considering PNB to be part of this product offering. Certainly now the responsibility which has come to us is to increase the numbers on this product, because the expectations from the regulator, the expectation from the market is very, very high. And not only expectation, the kind of opportunities are there with UPI on credit card. That's going to be a big, big success and business for the banks. So not only in a record time, this product has been designed, the team, all the teams had worked relentlessly day and night and brought this product into the market. So big thank to all the people connected here for making this product successful, and best wishes for the success of this product. Thanks a lot.
Thank you, GM sir. Thank you very much. So now I'll just, as if we come to the final part of this, Sachin, if you could just come. Sachin is a great friend, a great colleague, has been a great motivation for me in my tenure in ISG. He also is a Chief Strategy and Transformation Officer. So yeah, please, if you could just do the facilitation, please. So can we have... Yep. So Pravina, can we come? Please, just to have just a small token. Thank you so much. Go ahead, sir, please. Thank you so much. Thank you. Vijay, sir, please come. Vinesh ji, please.
Thank you.
Please, please. Okay, okay. Mr. Vijay sir from Saraswat Bank, can you just come on stage, please? Yeah. Mishra ji, CM sir, please. CJ Mishra, please. Please come. Sorry. Ready for the first time. Thank you so much. Yeah. Kunal? You could. Yes.
Not happening today. Fine.
Thank you. Thanks. Dalin, thanks for making it 10:20. Yeah, please come. Thank you so much. Thank you. Anybody I missed? Gyan, sir, please. I'm sorry about this. We're very bad in protocol, yeah? So excuse me. Thanks. Thank you so much, sir. Thank you. Yeah. Thank you very much. Thank you, everybody. Thanks for making it. Yeah. Thank you.
Well, I think the right amount of inspiration and motivation to have had kickstart this lovely day. Thank you, everybody, for your kindest presence. And we have yet another lovely product showcase powered by HSBC coming up in the next session. So the ones who would like to retain your position here are most welcome to attend the next one as well. Right in my next announcement, we shall begin the next session. Once again, thank you very much for attending this one. Looking forward to a great productive day. Check. Well, I assume a lot of networking happening over, but we would request you to vacate the room, please, for our next session, which is about to begin. Ladies and gentlemen, welcome back to Global Fintech Fest 2022-23. This is your host, Drashti, and I welcome you all once again. A quick mention for all our partners. Well, we have our theme partner, WhatsApp, co-powered by Amazon Pay, spend management partner Encash in association with Perfios, payments partner Cash Free Payments, and CEO's dinner partner HSBC. Well, talking about HSBC, of course, our next segment has a lot to do with them, as we have many product showcases coming up your way, and these startups are, of course, supported by HSBC and are nominated by UKFO. So right here, ladies and gentlemen, I think once I have a heads up, we shall begin the very first presentation up here. Are we good to go? All right, I think, yes, we are good to go. So let us begin. I would like to invite for this product showcase our first entity here, that is Earth ID. I would request Mr. Sharat Chandra to step up on the stage. He's a research and strategy guy, so I'm sure a lot coming up from his way. Please put your hands together for Mr. Sharat Chandra.
Thanks for the introduction and good morning, everyone. So I represent Earth ID, a decentralized identity management platform. We are a UK-based company and we're expanding in the US, India, and we are also looking at newer markets like APAC and Middle East. In India, we're working closely with partners like Tech Mahindra, Mindtree, and in Europe, we're working with Fujitsu. So our GTM is more towards working closely with system integrators and Big Four firms to take our solution to the end customers. Now, coming back to this particular platform, we are a decentralized identity management platform, and what we do is we help organizations and businesses make it seamless and easy to onboard, verify, issue digital credentials in a secure and seamless manner. So without any further ado, I would request to maybe get this video started. It's a short video for 3 to 4 minutes. Thank you.
Great capabilities of Earth ID platform, including reusable KYC. As you can see on the screen, we have the Earth ID app on the right-hand side. The user can select the language preference. Now, the user can register his Earth ID either by scanning an ID card or by providing some basic information manually. In this demo, we will go with the manual registration. As you can see, the Earth ID of the user is generated and they can download a QR code as a backup, which can be used for porting or recovering their Earth ID in the future. Now the user can set the security of the app using Touch ID, Face ID, or passcode. Here we will go with the Face ID option. Now the user can digitize any of their existing ID cards by scanning or uploading it from the phone. Let's move on to the reusable KYC piece. As you can see on the left-hand side of the screen, we have a browser with the bank's portal. The user can now authenticate themselves using passwordless authentication by just scanning a dynamic QR code. After logging in, the user can share their KYC documents by scanning a QR code. The user receives a notification on the app to authorize sharing of the requested information. Once the user provides consent, the requested information is shared with the bank using selective data disclosure model. The bank can then issue the user a KYC token on successful verification. As you can see, the user has now received a KYC token in his wallet. Now let's use this KYC token to apply for an insurance. The user can just scan a dynamic QR code on the insurance portal to share his KYC token to prove that he has already completed KYC. Once the insurance department receives the KYC token, they can verify its validity against the ledger. The user journey can be customized as per the needs. I hope this demo has been useful. For any questions, please reach out to us. Thank you.
Thank you everyone for your time. Just wanted to inform that this particular reusable KYC we're exploring with one of the leading financial companies in APAC. And a couple of Indian banks have also shown interest how they can tweak this and get it done in the Indian context. Any questions, anyone? I'll be more than happy to answer. Yeah, yes, please.
Yeah, we understand that there is a platform to create unique IDs called as Earth ID. But see, today India market use Aadhaar because Aadhaar is, everybody accepts Aadhaar. So how do you make sure that this is accepted at multiple places, or then if it is not accepted, what is the point of having Earth ID?
See, so our goal is to make sure that the digital IDs or digital documents which are, or let's say even physical documents which are issued, right, they can be made more tamper-proof with respect to verifiable credentials. So there's a concept of verifiable credentials native to blockchain technology, which allows individuals and organizations to convert a digital document in a tamper-proof manner using cryptography, so that your data cannot be tampered.
RBI or NPCI today, Indian regulatory bodies accept this?
So this particular, yeah, so if you look at Aadhaar 2.0, the new Digital India team, they're also looking at certain elements of selective data disclosure, and that's where the concept of zero knowledge proof, and that's where this verifiable credential comes in. If I digitize a digital document using verifiable credentials, I can share that certain pieces of that particular document to say that, okay, I'm more than 21 years of age, right? Rather than actually revealing my exact date of birth. But in the current context, in the Aadhaar XML will reveal much more than what is required, right? Let's say if you look at your address verification, right? So the current XML will reveal your, let's say, flat number, your street number, your PIN code, right? And that's where the Aadhaar 2.0, the new version of Aadhaar, will be looking at zero knowledge proof, how you can use zero knowledge proof to only specify certain elements, just the PIN code number, just the block, right? Not exactly the flat number. So that's where selective data disclosure can be made possible using zero knowledge proof, verifiable credentials, and I hope Aadhaar will be able to drive that further.
Okay. And see, for example, today the biggest use case is that when you are driving and somebody's asked your driving license.
Right.
And you might not carry a digital, or even people don't even carrying a wallet or a purse with them these days, right? So how do you replace? Are you thinking that you will be able to replace such scenario, or say that the police will start accepting the Earth IDs?
I don't see that happening in near future, because we already have DigiLocker, and DigiLocker is already being accepted. But if you look at even the future of DigiLocker as a wallet, and that's where even the Aadhaar team is working with Open Wallet Foundation. So Open Wallet Foundation was launched by the Linux Foundation, an open source foundation where they're looking at making privacy preserving interoperable wallets. So the future of DigiLocker essentially will be a composite wallet where, as of now, it's a document wallet, right? Document repository.
It's a document,
but
yes.
Can the future be a Web3 wallet where a DigiLocker can evolve to become a composite wallet? I can make payments using that wallet. When I say payments, not only the digital payments, but payments in the Web3 space, let's see. Can I use a central bank digital currency or a stable coin? Because stable coins are a reality, right? If you look at the payment landscape, they're already a reality. And Aadhaar team, Mr. Pramod Verma statement is out there. He has kind of accepted or acknowledged the importance of verifiable credentials. If you can just Google out Open Wallet Foundation. And we as Earth ID are one of the contributors to the Open Wallet Foundation.
Okay.
It's an open source community, and being an identity player, identity has a bigger role to play when it comes to mainstreaming Web3 adoptions.
Okay, got it. Thank you.
Thanks. Any questions, anyone? Yeah. Thank you.
Thank you, Mr. Sharath. And also for our next presenters, may we please request to follow the guidelines over the time constraint. That is one thing that we would really want you to be specific. And of course, we can address a couple of questions if time permits. Well, coming up right next for the product showcase, we have with our CEO Doreming, Mr. Masahiro Takasaki. Please put your hands together for Mr. Masahiro.
Hello, everyone. I'm Masa, CEO of Dreaming. We believe our everyday hard-working history is the power of better financial services. Yeah. Oh. Let's go through. So why India followed the same as Japan in 1960 when economies are booming? We forget environment and people. And when we ask the government body, and they say not enough money. So how are we able to secure funds? We have two for this solution. One, government borrow wages from workers and repays later with interest. There are three benefits. One, secure funds initially. Two, reduce foreign debt. Three, giving millions of workers for the first time earning interest. And two, when we actually make payment and transaction, taxes are automatically collected not to the store, but paid to IRS tax office in real time. Our founder Yoshi used to be a chef for 10 years and franchise manager for 10 years. The deadly earthquake changed his life and started his own business, which is focusing on increased quality of life of the workers. The system is built by the person who really knows what's on the ground. Our competitive advantage is the system which is helping employer to motivate and retain their people. You get another 200 rupee when you go delivery during the raining, and you get 20 rupee when you peel shrimp. So you want to peel as fast as possible to get motivated. This was one of the best practice when he was managing his franchise stores. Our product is all-in-one HR payroll platform that allow employee to get paid today, and we are also helping the government to collect taxes in real time. We have localized to Telangana State, Vietnam, UK, and Saudi Arabia. Remi is a comprehensive HR and payroll management features, from HR attendance payroll to annual returns and more. Any-day payday is invented to fight against payday loans. It's currently used average 5.6 times a month, and it helps the company to attract and retain their peoples. We are account aggregator to streamline people work and access. And we are helping users instantly find job for loan repayment. And let me show you a demo. So here's employee pratique. So you actually clock in, clock out. When you finish work, you actually check and confirm your attendance. Now his boss is approving your attendance and payout. And he's actually starts, pratique and check. And these days he starts work from 8 to 6 p.m. Okay, it's confirmed. And now boss is going to also approve for the payout in advance. Select pratique, and again, just one click, confirm, and allowing pratique being able to advance payroll. And for the pratique, so he can actually see how much he has accrued of his earned wages. And now he's actually transferring his earned wages from employer to him. And once he actually sends to his earned wages to his payment wallet, he can go to the store and he can actually make payment. And let's assume 300 rupee worth of groceries. And once he make payment, the point is that the taxes are also sent to IRS tax office in real time. Okay, can you go back to the slide? So the key is it's real-time, automatic, accurate with hassle-free for company to deal with taxes. When we serve blue-collar workers in India, South Asia, Africa, and South America, when the government borrows at 5% of wages from workers, it's estimated $294 billion. And when we make payment, when the government collects taxes in real time at 10%, it's estimated $500 billion. These are the amount that the government can invest into infrastructure and create jobs. The market size of microfinance is estimated $589 billion. We lend hard workers to buy their tools. Our business model is monthly subscription of our HR and payroll platform, and transactions on financial services such as microfinance. We want to create safe and secure society with dreams and hopes by partnering with NGOs, banks, ESG investors, and government. Our team had 25-year experience in HR, payroll, and banking integration. Our R&D is conducted in India and Japan, sales and marketing in the UK, cyber security in Northern Ireland and Israel. Our team has committed to make social impact on 2 billion workers globally through collaboration. After we reached 200,000 users with $3 million, we have been expanding to 5 geographies: US, UK, India, Saudi, and Singapore. We have 23 patents of new financial services, including revenue share, finance, and any-day payday. And to child poverty and inequality, we are looking for partners with financial institutions. We are also looking for investors. So let's talk. Thank you. Any questions? Okay, thank you.
All right, indeed an insightful presentation that we just witnessed. And coming up next for the next product showcase, I would like to call upon founder and CEO Egvesto, Mr. Swastik Nigam, on stage, please. Please put your hands together for Mr. Swastik.
Hi, thank you all. Egvesto is basically providing global banking and investing as a stack to financial services providers here in India. I just hope I get to do this right. Excellent. So who are we? We are regulated by the UK's regulator, the FCA. We're regulated as a payments bank as well as a broker. Each of the leadership members have at least 15 years of experience in global financial services. Who do we work with? We work with payment gateways as being the collection agents for them globally. We work with banks to, again, similarly provide them an offshore banking ecosystem, a quasi-branch network which they would otherwise not have. We work with wealth managers to provide them with their offshore investing and wealth management stack, and to brokers in providing them their overseas brokerage stack as well. When we think of the challenges today, one of the key challenges is transparency. When you receive money from the rest of the world, when you're trying to make transactions in the rest of the world, the forex charges are unclear. And if you do figure out a way to be able to receive them, international payment gateways may charge you an arm and a leg and may shylock you out of it. There's a lack of control. You don't know when your domestic bank may receive the money, what's finally the amount that you would get as well. What do we bring to the table thus? We provide you the offshore banking stack together, an offshore investing stack, and unique productized offshore solutions as well, nuanced for each and every use case based on your needs with the rest of the world. And how can you use an investor? If you're an individual, you'd use it to diversify your wealth. You'd use it to save for future milestones, for example, for your children's education internationally. Today, you can't do anything other than rupee savings domestically. Egvesto would give you an overseas bank account, and then you can systematically save up inside that in dollars, pounds, euros, in over 37 plus currencies. You can think of migration by investment, EB5 programs, or citizenship and residency in Europe by saving up inside here. And if you're a freelancer, to receive your foreign income into India. If you're a business and you're serving exporters, or you're an exporter yourself, we have a large number of exporters who use Egvesto's product stack to receive collections locally in the US, UK, Europe, Canada, and very soon Singapore, and bring it back far more seamlessly to India. It allows any Indian entity to start thinking globally as part of setting up their subsidiaries, their international legal entities as well. If you're a D2C product and you're looking at expanding globally, this is perfect for you. And not to mention, if you think of bank accounts for representative offices, which a traditional bank in that geography would not provide you. We are really, really quick with onboarding. You can open your international brokerage account or your bank account within a matter of minutes. Your onboarding process itself will take no more than 2 to 5 minutes to fill out your forms. And while we do this, we leverage the India stack. So it's no more than your PAN and Aadhaar card, no SSNs, no passports required in opening your international accounts with us. So as we spoke, we have global banking, global investing. I'm just going to drill down briefly into global banking. You get a named account after your onboarding process, which lasts just a few minutes, within 1 to 2 days. Very low transparent fees, commissions, everything is clear. Unlike traditional banking networks where you might only find out tomorrow how you were fleeced yesterday. You can bank in over 34 currencies. You have free local receipts in dollars, pounds, euros, sterling as well. And even though you have all of these as local currencies, there's no limitations from how many countries you can bring this in from. So rather than going country to establish a new payment rail, you can already collect from over 180 countries through Egvesto. And while all of that's great and happening in the rest of the world, you get local support here in India. All of our customer support, compliance team sits here in India. We understand India KYC really well. What are some of the features of the multi-currency account? Like we mentioned, you've got local US accounts. You get an ACH Fedwire capability locally in the US. You get a UK sort code account number. We're part of UK Faster Payments in that. You get a SEPA account in euros, right? Yes, Brexit's happened, but we're still part of SEPA, right? We get a local CAD account in Canada as well. And if none of these 4 currencies are what you're looking for, you still get one SWIFT account in which you can hold over 34 plus currencies. When we think and we stand in the shoes of exporters, right, you get far greater transparency. You receive funds far quicker than in traditional SWIFT networks as well. And it's very easy to reconcile because you're not getting bulk payments and then FX'd already into your local accounts. You can view each and every line item very clearly. But then think of the customers of those clients, right? Your buyer who's sitting in the US is making a local payment. Your buyer in the UK is making a local payment. Your buyer in Europe is making a local payment. And thus it settles far quicker. It's a far greater user experience for them too. We are regulated by the FCA, but we don't hold and custody the cash ourselves. The cash is custodied with other third-party banks. There are 3 levels of regulated entities which are protecting your money. So, God forsake, should anything happen to us, your money is still going to be safe. May touch upon the global investment stack. We work with investment advisors to give them an offshore wealth product on demand. Today people are looking for frictionless global investing, you're diversifying their client money, looking at standalone bank accounts where needed to make themselves look like a full stack global private bank. And finally, they want a place where they can manage all the admin with respect to the international bank investing themselves too. Today, we already have a self-directed US brokerage product, very soon going into being completely zero commission. We have research and content as well that we provide to give, as not only are we giving access to new markets, but customers in India don't know where to invest. We give a daily free newsletter, which the rest of the world pays for, to our customers as part of their journey in becoming global investors too. How can you work with us? If you're a payment gateway, or if you're a payment gateway, you have an OPGSP license, you can work with us through being your global collections partner. If you're a bank, we serve your HNI, your wealth franchise, as well as your SME franchise for their global collections too. If you're a wealth manager, we become your embedded international private bank. And if you're a domestic broker, we give you a plug-and-play offshore brokerage product too. In building this, we've been advised with some of the best names, from India across legal, finance, as well as from fintechs in the UK as well. And we were most recently awarded the most innovative fintech product for UPI-based cross-border investing, which we launched at the end of last year. This was part of the RBI second cohort and has now been regularized in the last few weeks. So we always ensure that we're making multiple firsts. Not only was that the first, we launched the first ever multi-currency account for an India customer on the India stack. And we launched the first ever global collections product to complement an Indian OPGSP stack as compared to anything that was provided before too. That's a very quick, product showcase about what we do and the breadth of it. Our vision is to provide the whole broad financial services offshore stack for an Indian customer, an Indian partner, but we also, value our British heritage, and by extension, are also looking at working with other Commonwealth countries, right? Significantly beyond just India too. You can scan that QR code to get in touch with us very quickly, should anything interest you. But very happy to take a few questions. We have, I think, about 3 minutes for it. Yes, please.
Firstly, congrats, Swastik. Phenomenal progress and incredible product. I'm
Thanks.
interested from a potential customer point of view, as a business customer. I've had like a horrible experience with one of the high street banks in the UK to open a USD denominated account. So I would be delighted to even get one account with you guys, let's say in a week's time. That's still incredible. I think you guys can do it much faster.
Yes.
But that'll be...
In fact, 20% of our customers have come organically, and our British customers as business customers itself. We'd be very happy to help you. Sandeep here heads product in my team, and you can of course just trade contacts, and we'll get you up.
Wonderful, wonderful. We'll do that. Thank you.
Sure. Any others? Great. Well, if there's any partnership opportunity, please feel free to reach out to us. Delighted to be here. Thank you very much.
Well, give it up for Swastik. Thank you. And of course, Sandeep is here. So one, in case if you would like to network around, that is surely an opportunity to look forward to. Up next, ladies and gentlemen, I would like to invite founder and CEO, Asset Vault, Mr. Vishnu Teja Chandi with us, please.
Hey guys, I'm going to try and keep this as conversational. It's wonderful to get so many audiences here. Quick question, what is the one thing that we all have in common in this room? You can take a guess. Yeah, and what else? We're all Homo sapiens, so don't give me that answer. Other than that, phones? Sure, but not everybody has assets. Well, the answer is death. We're all gonna die, for sure. Like there's no second thoughts about it. And I want to start on a very positive note. So I figured, why don't we talk about death? The reason we exist as a company is because I lost my uncle 5 years ago. And unfortunately, his death taught me something. He passed away without a will and testament. And it took us nearly 18 months to just understand what all his assets were. And eventually, it led to an ugly family dispute that could easily have been avoided. With that as a background, I think the other point I would like to make is we're all working extremely hard. I'm probably in one of the most highly financially aware audience in the country today. All of you guys have digital assets, physical assets. You're working super hard, hoping for retirement and saving as much as you can. But did you know that there's nearly 25,000 crores of rupees lying unclaimed in FDs and insurance policies in India alone? And the future is digital, which means your family will have no clue about your pension, your digital funds, your crypto accounts, and of course, even your FDs. There's not going to be a paper trail for that. So we are introducing Asanville in India. For those who don't speak Hindi, Asanville means easy will. And will is the simplest financial document that ensures that intergenerational wealth transfer is done seamlessly. So we're picking a very old problem, a very archaic problem, and a problem that addresses each and every one of us. However, we're using technology to make it easy. So we are India's first truly end-to-end digital-first provider. It's extremely simple to write a will with us. The one-line pitch, if you only remember this, is it takes you probably 10 minutes to get a 100% legally valid will from the comfort of your home on a phone or a desktop, and you can get peace of mind. It's 5,000, but more importantly, you can rest assured that your assets, plus your legacy is in good hands. So after extensive research in the Indian market, we've discovered that the consumers are actually looking for help. Now at this point, I'd like my second question. How many of you have heard about a will? Yeah, it's quite a lot. How many of you have written a will? That's one in probably 25 audiences in India's most, or one of the world's biggest financial hubs. Now let me ask you another question, because I've established that we're all going to die. Would your family members have any clue about your bank accounts, crypto accounts, your personal wealth, should something happen to you? So I see a lot of people nodding their heads that that's not the case. So this is precisely the problem Asanville is solving. We're post-revenue, we've already signed up, and I'm proud to tell you that we've helped several Indian families already in just the last 1 quarter. We've raised a 7-figure round from one of the world's leading media investment platforms, and we will be bringing this to India B2C, and our mission is to ensure that we are promoting the awareness. This is a product, it's not for the wealthy. We're going after the middle and upper middle Indians who are 300 to 400 million audiences. That's several UKs, probably like 1.5 US. And this is the India that's going to build a lot of wealth for itself and its family. So these are some of the customers. I see lots of women here. I'm actually going to highlight this. Did you know that if you are a working woman and you've acquired your own self-acquired property, in the absence of children, if you're married, without a will, all your wealth goes to your husband. And if you don't have and in the absence of your husband, it goes to the husband's heirs. It doesn't go to your parents. It doesn't go to your siblings. It's game over. And of course, there are several high-risk segments, such as cohabiting couples, the numbers of which in India is increasing at an exponential rate. People are getting married later. If you guys buy something together without a will, once again, it goes to the blood relatives. You wouldn't get anything. LGBTQ, India has 135 million people and counting, no marital rights. And of course, people who've recently recovered from COVID and are going through divorce, another huge legal hassle. Simple product. This is what a will actually looks like. I don't know how many of you have seen a will. I thought I'll show it to you. This is the Asanville template, and it's ridiculously simple. If somebody can just click on that and play. Ah, cool, that works. So it takes 30 seconds for sign up. And that's it. You're into the step 1, which is you just need to let us know who your spouse is, if you have kids, if you've got any basic assets. Once you give us that information, I've got our legal head, Monica, here, and Saket, our ops lead. Please come and talk to them. She basically gets the information. All the information is confidential because she's a lawyer, and nobody else, even I don't have access to this. And the way we've designed the system is to ensure complete confidentiality. And that's it. By the end of this journey, it's super simple. You get a will draft from Monica and her team. And if you guys are happy, then you can get the final will draft. And we will get it notarized in your city, 30 minutes away from home, and even registered in your city. So we are already live in all the metropolitan cities in India, and tier 2 and tier 3 as well. So for us, I think success would be, by the end of the day today, I want you guys to think about this as a concept. And because Indians are horrible at talking about death, but unfortunately, the last 2 years, if they've taught us anything, it is to make sure that we plan for the worst. These are some of the ads that we've posted earlier this month. So as you can see, very simple, straightforward. I would love to get some ideas from this audience, because I think we are trying to create a product in a market that doesn't truly exist. And I would love all the guidance and suggestions from everybody here across multiple languages, countries, and of course, different demographics, age groups. So please meet us and tell me what you think. What is the resistance? If you've not made a will, why haven't you made? And if you've made a will, I would love to know why you've made one. For us, it'll be a phenomenal success if we are able to at least protect a few families from the hassle of running around courts, spending like nearly several months and thousands of rupees. And that's it. Really, the last point I'd like to make is we are actually building a repository of assets. So some of the seasoned folks here already understood it. We built all of your rich customer data that we can help essentially add value to you through the rest of your life. So wills is just the acquisition harpoon for us. What we are really building is the asset database. So thank you very much for your time. I'm not sure if you've got any time for questions, but please meet us later if you don't.
Well, quite a thought-provoking session, or rather a showcase that we just witnessed. We wish the team all the very best. Up next, ladies and gentlemen, I would like to invite Business Development Executive. We have with us Ms. Shering Chukitamang from Egvesto for the next presentation. Please put your hands together for the lovely lady in pink.
Thank you so much for the wonderful introduction. Hello everyone, I'm Shering Chukitamang, and I'm Business Development Executive in Egvesto. So we as Egvesto, we believe in building a better planet with food security through sustainable agriculture. And as Egvesto, we are a UK-based insurance broker company who have recently expanded their journey in India as Egvesto Limited, Indian Limited, Private Limited, and Egvesto IMF. When we talk about problem, there is like massive increase in population, there is increase in globalization resulting in global warming, and that leads in decrease in food, water, infrastructure, and resource availability. We are trying to focus to bring down the solution. Countries have already issued, they are practicing on self-development, sustainable development goals, but we need to think higher than that. We need to change our thinking from developing, emerging model to cross-border model where investment and insurance can be taken. Like I said, Egvesto is a UK-based insurance company. Egvesto is a technological business that is offering parametric insurance protection to the farmers and agribusiness against climate-related natural hazards. Here are the three areas where Egvesto is planning, they are focusing. First we have mobilization of capital. Second area is providing insurance for crop protection, rural health, machinery, logistics, and trade credits. And in third area, we are focusing on trade exchange. So this is what as an Egvesto we are working on. Egvesto has 4 segments that is targeted. First is agriculture, second is aquaculture, third is livestock, fourth is energy. Egvesto is targeting in this whole sector that we are providing end-to-end coverages from seed to sale. In producer, that would be from seed to the harvesting. We are providing production weather insurance. We are providing shortfall insurance. And when the produce is ready from the field, it is taken by a logistic, where we are providing logistic machinery cargo insurance. And when it reaches to the agri companies and product manufacturers, there we have trade credit insurance. Here are some of the partners we are working on. As said before, Egvesto has its branch already in UK and USA. It has extended its branch in India, where we are working with retail channels, aggregators, NBFCs, and banks. We have, in the right-hand side, you can see these are the biggest brand we have partnered with. In the last slide, we have product. As a broker, UK-based company, we are not only a broker, but we focus on product creation as well, where Egvesto collects the data and information looking at the historical loss, farm productivity, earth observation, weather station, and land profile. All this information and data is gathered, and then we sit with the underwriters and we help them in creating a product. This is the nutshell, like a short summary of Egvesto, and we are here to make a change, and we seek partners who can join along with us. Thank you. If there's any question, you are free to. If it's not, fine.
Well, that was Egvesto's pitch. And last but not the least, we have founder, MortgageCart, Mr. Amol Karve with us. Please put your hands together for Mr. Karve to lead you through his showcase.
Hi, morning everyone. I'll just give a minute for the presentation to come up. But I'll just quickly introduce myself. My name is Amol Karve. I'm the founder and CEO of MortgageCart. We are a UK-based mortgage intermediary. And over the next few slides, I'll just take you through the product that we have recently developed. So let me just use this. Okay, so quick snapshot of MortgageCart. We are a digital mortgage intermediary based in the UK with all our development center in India. So we develop software in India and actually deploy it in the UK. At the moment, we have a captive mortgage brokerage that serves UK customers and helps them find mortgages for their homes. But we've got another side to our business, which is that we are actually starting to develop as a B2B SaaS provider for the platform and the technology that we have developed for other insurance brokers, for mortgage brokers, and eventually even banks. Our customers at present are UK individuals, limited company, special purpose vehicles that have mortgage or life insurance needs. But going forward, we will be also trying to rope in banks and other financial intermediaries to use our software. And then the final part is that we're actually starting to develop a business to actually attract overseas high net worth individuals as clients wanting to invest in the UK. Basically, at the moment, our revenues broadly come from the mortgage brokerage, but we are starting to see some revenues come from the B2B SaaS side as well. We've got a team of about 25 people spread across both UK and India, and we're growing at present. So the software team is developing, and we've just recently developed a new product, which I'd like to showcase next. So the product that we've developed is called Mortgage Alert. Basically, customers today don't monitor their mortgages actively. And a mortgage typically is the biggest financial product that most of us buy. It certainly has the most amount of cost across our lifetimes because our homes tend to be the most expensive things that we end up buying. So many customers tend to be on suboptimal rates because people don't actively monitor their mortgages. They don't necessarily understand what choices they have and how they can actually improve their costs. They don't think about their cost of debt over the lifetime of the debt. It's just a transactional arrangement or a transactional decision that is often made. They miss opportunities to consolidate unsecured debt and reduce the overall cost of their debt. And finally, they don't understand how to use leverage to actually benefit and improve their financial situation. So what we have developed is Mortgage Alert, which is a direct-to-customer monitoring tool that helps customers like you and I be on top of their home loans or their mortgages. The idea is very simple. You take one-time data from the customer and you help them understand what better deals exist in the market, not just now, but on a continuing basis as their mortgage balances change, their home prices change, as well as the supply or availability of mortgages and interest rates in the economy changes. We have already used this tool on about 1,000 clients, and we can see a much better retention and engagement with clients who are actually on the tool. So we can already see that people who have signed up to the tool are engaging with it frequently, are giving us good feedback on how they're getting better ideas on perhaps debt consolidation or looking for the right deals, or even being alerted to refinancing in time as interest rates, certainly in the UK markets, seem to be going up and up and up. We've also developed a B2B2C proposition, which we are now starting to showcase to clients in the UK, but we believe that this application has got legs in India as well. So at the moment, we are talking to a couple of fintechs in the UK, challenger banks basically, who can use this product as a way to actually acquire mortgage relationships or even test their way into the mortgage market and understand as to how receptive or how rate sensitive their clients are. So there are some early steps that we have made to understand how to penetrate the B2B market, and that's still a work in progress. We're still evolving to that point. What I'd like to now show is a quick demo of the beta version. It was a tool that we built during the hackathon that we recently participated in, but I'll just give you a sense of what that tool does. Hopefully that will kind of get the concept right.
A mortgage monitoring service. Over the next few minutes, let's go through the key features of this Android journey. This tool can sit inside a mobile banking app where, given the customer is already signed in, no further authorization is required. The tool is presented here on the landing page of the app alongside day-to-day banking accounts, or could also be shown as part of a menu of options. There are 3 simple steps. The customer confirms their details. Alternative options are evaluated instantly and presented. If there is a better deal available, they can initiate the switch straight away, or they're notified when a better deal is available in the future. The customer's personal details with the bank are displayed here. These details are pre-filled using the current KYC data on the customer, with the option for them to be editable if anything has changed. Their address can also be pre-filled using existing data on them. If the user wants to update this address or is monitoring their mortgage for another property, they can edit this. In this example, a UK address API service is used, but this can be substituted for another API such as Google address or can be manually entered. The next screen has 3 questions which have a default selection made based on the most common mortgage types, or these can be manually answered. Questions can also be changed dynamically based on customer response. Bear in mind the customer has so far not keyed anything in, they've only confirmed answers. The next screen is to confirm the lender. This can be pre-filled with the user's payment data or with CIBIL data, or the customer can manually select the provider. If external data points are not easily available, customers can input some details, as all mortgage details may not be available on the CIBIL. The current interest rate is pre-calculated, as this is not something many customers necessarily remember, but they can override this number if they so wish. So, the user has keyed in about 5 or 6 answers, and the rest have all been pre-filled. On to the results now. At this point, all inputs are saved and details of the current deal are displayed. The next time they wish to monitor their mortgage, they will be brought straight here. Customers can edit their details if they think something needs changing. They can also set alert thresholds so they receive notification only when the saving is meaningful. Finally, the customer is shown the best deals available and how much such a deal will save them in monthly payments and overall cost. They can also commence the switching process straight away if they find a better deal. This tool is being extended beyond mortgage monitoring to sharpen eligibility by asking for more details and learning more about the customer, or helping them calculate how much they can borrow additionally against their mortgage, or for financial coaching by helping them understand the impact of overpayments on their mortgage.
Okay, great. Hopefully this gave you a perspective of what the product is all about. Can we go back to the presentation, please? Thank you. So with, for example, a bank which has, a significant presence, there is a potential for banks to actually improve, home loan penetrations for their, CASA clients, as an example. It can also create the ongoing engagement that I mentioned with their own, either home loan customers or, for that matter, their broader, customer group, and facilitate reduced customer attrition. So there are many advantages that banks can have, in three terms really. One, improving, sales. Second is improving engagement, and third is improving retention. So all of these, benefits banks can get straight away, and therefore we believe that this is a good product for banks to actually, partake in. I'll stop here. Happy to take any questions. Okay, thank you.
Well, with this, the product showcase supported by HSBC and, of course, nominated by UKFCO comes to an end here. Thank you, ladies and gentlemen, for joining in and being a part of this lovely product showcase. Up next, we also have an interesting workshop coming up as our future presentation, talking about the future of supply chains and how digitalization of payments can actually be really helpful. So the ones who would like to stay back are most welcome. Thank you for your time and have a great day ahead. All right, hello and welcome back to Global Fintech Fest Day 2. We have a lot going on around, and thank you for your kind presence, the ones who've already joined us. Up next, ladies and gentlemen, we are moving forward to an interesting workshop. As you can rightly see, the theme or the topic, the future of supply chains, why companies should digitize payments. And to talk about the same, we have with us Ms. Bhakti Zaveri, Director, OrientPro Payments, OrientPro Solutions, alongside with Mr. Snehal Pandit, Head Supply Chain Management, OrientPro Solutions, to talk about the same. Please help me welcome them with a round of applause.
Hi, good afternoon, everyone. I know you will be waiting for lunch, but we'll have a 30 minutes good session. Right? Okay, why supply chain, right? And being in a fintech event, and we are talking about here supply chain. So any guess like why we are doing supply chain? But then I've been doing supply chain for last 15 years, right? And that's why that was the best topic to get in. And secondly, it is more relevant to the payments arm, right? So when we talk about supply chain, it's about suppliers, it's talk about buyers, right? It's about invoices, purchase orders, it's about how we can improve the cash flows, right? The working capital of the supplier buyers and the ecosystems within that. And that's where the supply chain and the payment digitalization is very key, right? And as part of OrientPro Group, we are into that, providing the supply chain and banking platform for last around 25 years. And that's where we bring all in one as supply chain and payments as one platform itself. So with that, what I would like to start is purely on to how traditional supply chain was been there and what has changed in the last few years. So when we talk about traditional supply chain, it was more focused on services, right? So we were more focusing on like, okay, how I can provide 3PL service, how we can provide warehousing services, right? It was more on to how to reduce the cost. That was always one of the key factor, right, as part of providing the logistics and supply chain segment. It was more onto the quality, right, and always it has been, right, any businesses, right, wants to improve the quality, right. Similarly, the services of supply chain, how we can improve the quality of the services. So these were the three key factors as part of the traditional supply chain. But what has been changed, right, is the resilience, agility, and sustainability, right. And when we talk about agility, it's like the change of the behavior of the customers has been changed, right? It has been consumer-centric. Every customer requirements are different, right? Their SOPs have been different, right? With that change, right, it is a need to bring an agility into the supply chain industry. It has changed on the resilience, right? So global supply chain is becoming very key nowadays. Earlier, it was very focused on to like buyers have been focusing on to the buyer supply chain, suppliers have been focusing on to suppliers, distribution centers, manufacturing, they have been all working as a silo. But now supply chain is global, and that's why the resilience has also been key factor as per the new supply chain. And finally, the sustainability, right? Everyone is talking about go green, right? Reduce the carbon, right? Everything has been talking about how we can do the green supply chain. And that's where the sustainability has been playing a key role here. So this is where the next normal strategy has been changed in the last around 4 to 5 years as a new supply chain model. And with that, if you can see, the total growth of the supply chain has been very substantial as part of the global supply chain, right? Not only that, you had seen in the last few years with after the pandemic and within the pandemic situation, the e-commerce boom has been increased, right? The number of shipments onto the volumes, onto the Amazon, the Flipkart, and all the marketplaces, it has been drastic, right? We at a home now, we don't prefer go to the Kirana Mall and buy the materials, but we actually order all the materials online. Our kids are actually not going to toy shop, but they actually go online and they select their toys online, right? And that's where there is a growth in the e-commerce industry in the last around 3 to 4 years. And this has changed again the supply chain model, wherein the supply chain players who have been doing B2B business, now they are entering into the B2C offering also. So like some of our clients who have been doing B2B in the before pandemic, some of them have already digitalized their B2B to B2C operation. For them, it was a benefit. They can easily plug and play and start providing the B2C services. But those who were not digitalized, that's where the key power, and majorly it was an SME segment who had faced those issues. So what is the trends that disrupt the supply chain? So if you see at the first few segments, political issues have been playing a key role. And when we are talking political, we know about the Ukraine, Russia, right? That has been impacting the supply chain. We know that is Taiwan, China, that has been impacting the supply chain. The political issues have been key factors that is impacting the supply chain operations globally. Similarly, the consumer behavior, right? Whether the consumers' buying patterns, right, that has been changed. Where the raw material used to produce before, now it has been happening domestic, right? Make in India has been changed the model. We used to produce a lot of goods in China. Now we have been pushing to get that manufactured in India. So the consumer preference has been changed, and that is the key factors again on the impact on the supply chain. Disruption-driven supply chain concentration. So more focus is going on to the where the raw materials have been produced, where the finished products have been produced. All the focus is getting into that entire supply chain angle which was been there around few years back, that has been getting disrupted. Then we have talent that has been playing key role. When digitalization comes into play, right, how the leadership team and the on-ground team gets been uplifted with the new digital capabilities has been one of the key factors. So everyone is talking about digitalization, but whether the manpower has been ready with digitalization, that has been the key factor. Similarly, recycling, social engagement is becoming key factor. Go green is the word that has been going on in the supply chain globally, right? And for that, it is one of the key factor that has been disrupting the supply chain again here. And last is all the new cloud technologies that have been coming in play. AI, cloud model. This is again one of the key factor that plays a digitalization aspects of the supply chain. So with that, this is where we get into an autonomous supply chain platform, right? And every supply chain players are been trying to get their future supply chain as an autonomous supply chain. And when we talk about autonomous supply chain, collaboration models have been playing a key role here. So what we say collaboration, connecting to the shipping liners, connecting to the airline operators, connecting to the custom players, right? How we connect the supply chain to the ecosystem, right? That is becoming very key as part of the automation. Digital payments have been playing key factor, right? So as you see, government initiatives have been taken in order to digitalize all the payment stream within the supply chain. Buyers, suppliers, cash-free transactions have been increased, right? Most of the payments have been happening with the digital payments. So that's where the digital payments have been into key. We are into closed-loop integrated planning. So earlier, as I mentioned, buyers were focusing on the buyer-concentrated operations. Supplier was being focused onto the supplier-concentrated operations. Now, closed-loop logistics has been playing, supply chain has been playing a key role. Buyer needs to tell what is their forecast. Raw material, seller needs to tell what is the raw material production cycles. And that's where we say it's just a closed-loop closed-loop logistics is becoming one of the key factor here. Smart logistics, IoT, RFID devices are been playing key role, right? Logistics are getting into a smart logistics segment. RFID devices are being used to track the materials, right? IoT devices are being used, as you had seen, the vaccine supply chain, the entire, when the COVID happened, the infrastructure was not ready, and everyone, all logistics and supply chain players need to get into promoting those IoT devices to track the temperature of the vaccines. And that's where the smart logistics comes into play. The models of logistics, traditional logistics, have been changed to the now smart logistics model. Supply chain transparency has been playing key role. when we talk about transparency, as I mentioned, supplier needs to share what is the inventory positions across all their inventory warehouses. Similarly, buyer needs to let us know what is the forecast that what they can see. Of course, these are all volatile, right? The volumes are increasing day by day. But the transparency and sustainability has been playing a key factor, and that would be the future of the supply chain in order to get it digitalized. And last is artificial intelligence. Everyone has been talking about AI, which will help them to understand what is the forecasting, right? It will help them to improve the supply chain models. So what we see as a future of supply chain, all will be AI-based methods that will be used in order to forecast the volumes, forecast the growth, and that will be the key factor as future supply chain. So this is where we see how the supply chain has been now expanding, right? And all the supply chain players will be moving forward, catering to all these workflows. And that's where the innovation comes, right? Today, within the warehouse, in the supply chain industry, the logistics, warehousing, they have been using the current way of doing the warehousing operations. It may be a hands-free operations. Voice pick and light is one of the 5 years back technology which has been used by most of our clients. There are conveyors who actually are being used as part of the e-commerce and the fast-moving delivery. But this has been changed. Now what we are getting into is an autonomous mobile robots. And it has been there in the developed countries. Like we talk about Singapore, Malaysia. They have already implemented robots for their warehousing operations. Right? There have been drones that have been using to get into the cycle count or get into the inventory counting. There have been wearables for the digital payments, right? So nowadays we use all our payments happening to mobile. So this is where the wearables and mobile and digital have been playing key role here. Yeah. So all what we see as a key factor of transforming the digital supply chain, regulatory and tax would be the key factor, and that has been playing key role here. Digital transformation has been playing a key factor here. So a lot of technology companies have been getting into digitalization of the supply chain and end-to-end logistics. People leadership training has been key factor here. And the last is the digital payments. So how the suppliers will be paid on time, real time, right? So that they can cater to their cash flows and working capital. That's where the digital payments have been key factor here. So with that, I would pass on this to Bhakti to get more detail on how digital payments have been playing key factor onto the supply chain. Yeah, Bhakti.
Thank you, Snehal. So moving on, right, like definitely we know COVID has been an accelerator in people adopting to newer technologies, people adopting to ensure that they are sustaining. The idea was never to increase business in COVID, but at least to ensure that people are able to sustain. But what happened because of that time is habit. So when you spend 2 years trying to look at digitization, trying to look at how do we sustain and how do we get better, the numbers reflected. So when a survey was conducted by, I believe this is from MasterCard data, where we took up about 120 odd companies all over the place to see what is the reason they want to continue their adoption to digital payments, or the reasons that are driving. So obviously the 83% opted for the efficiency of payment systems, response times, reduced risk, payment settlement. Yeah, there are 2 points here. One is obviously the adoption of digital payments, because companies that were traditionally accepting wire transfers or were interacting with the banks all of a sudden had a variety of options globally, not just in India, to now be able to start accepting payments in a lot other forms. And the settlement, companies that would take 30, 45, 60 days for invoices to get paid, or even for certain loans or credit lines to get issued, a number of rounds with the banks. All of that drastically came down with T+2, T+1 days of settlement. So the visibility was far, far higher.
in terms of the payment system and the efficiency. And there was push from the government and the end user demand that obviously accelerated the entire program even further. All of this led to real-time payments. So not just digitizing payments, but also real-time payments. And that's what we see, that there are certain definite use cases when we talk about business payments particularly, and the segments that it's interacting with. So whether it is B2B, B2C, consumer to business or G2C, all of them have seen a huge impact, huge acceleration of digital payments across the different avenues. So in India, we all know the UPI numbers. I mean, it's no surprise, we've heard it. With the UPI Lite launched, UPI on credit card yesterday, those numbers are only going to go up. So with that, what then happens is, coming back on the supply chain front, from a government, consumer, business, there is an equal acceleration from all aspects to be able to adopt and accelerate their digital payment acceptance. And then the use cases. So from a supply chain point of view, now tying all of the real-time payments back to supply chain, there is a supplier, customer, manufacturer, distributor. They all have payment touch points, whether it is B2B payments or B2C payments. And while there are a lot more use cases that warehousing companies or supply chain companies deal with, we're primarily focusing on B2B and B2C. B2B is obviously a lot more volume and value than B2C, but B2C is where you would have your day-to-day customers really complaining or really reaching out to say, okay, my payment is not happening, right? So while the value and volume is bigger on the B2B, or rather I would say the value is bigger on the B2B, but maybe the volume is like way higher on especially smaller transactions or the e-commerce push on the B2C. So traditionally, these payments on the B2C front are happening on cash on delivery or PDCs. And that would again not give them a lot of visibility into how payments are going to happen. The cycles were longer. And on the B2B front, it was on the PO invoicing and the direct lending, which again had direct interactions with the financial institutes. So now with a lot of lending companies coming into place and a lot more credit available, whether it is through corporate cards, direct lending, digital payments across various networks, right? Not just Visa, MasterCard, but every country now has their own network, or rather have collaborated with other countries to use their networks, which we have seen during the Russia-Ukraine war, where they used other country networks to be able to see how we can not stop digital payments. And that was really the idea, not stop the money flow. And with UPI, we touched upon the new product launches, and with cross-border, again, Lyra, based with now Lyra, we would see a lot more inflow, which was, T+2, T+3, as it was highlighted yesterday as well. There was no visibility if the bill actually got paid, if that credit actually took place. So all of these factors help in ensuring payments are coming through and real-time payments are coming through, which actually helps in accelerating the business far more. And money as a habit or payments as a habit is something you get used to very, very easily. So it's not something that you would go back to a traditional way of doing things if you would see the returns far higher. So what this has led to is more on the benefits that the merchants have seen across the board. And the benefits are primarily into three segments. The settlement, because of the real-time payments. The reconciliation. Because of the real-time payments, you're reconciling at the end of every day or at the end of every 2 days. So there is no month-end reconciliation that everybody is trying to follow up and connect with your books, which also leads to straight AR, AP processing, which is very, very important. So while they are all marked as separate factors and they may impact the business differently, from a pure benefit, they're all linked. It all is happening because your settlements are happening much faster. And this is where corporate cards have seen a very, very big push by both the networks and the governments to be able to use that facility that is available. The other is the reduction in the frauds and the fraud control around it, because businesses have been able to forecast where the volume of they always had the B2B data. There was never a concern on a lot of fraud on the business side, but the consumer is where the real question was. But now, because of AI, because of everything Snehal spoke about earlier from a technology standpoint, there was a lot more visibility into where my customer base is. And that also led to a lot of fraud detection very early on. So technology partners have definitely helped in detecting this and thus evading the fraud payments which was happening. And because of all these benefits that we see here, we do see that in APAC, which is a developing market and rather keeps developing and is open to newer ideas, the growth in Asia Pacific, the numbers show it, is far, far more. So, in fact, like from a cashless point of view, it's leading in terms of the geography, and these numbers just keep going up. Like even if you look at the top 5 last 3-4 years, even after COVID, I mean not like just after COVID, these numbers are just going to keep growing up, and which is backed by the numbers that Snehal showed early on.
And this has been driven by the government, right? So, and these are some of the latest launch that our Prime Minister, Shri Narendra Modi, has been actually inaugurated. And that plays a key factor as part of digital supply chain as well as digital payments. So as we take first is purely onto the ramp launch, what has been done, which is purely focusing on the SME segment in order to get SMEs digitalized. That has been playing key factor, and in the last few years of pandemic situation, SMEs were the one key players who had actually impacted their operations into digital aspects as well as into their cash flows and working capital. So one of the SME initiatives that has been driven by government. Next is purely onto the logistics supply chain and the new policies that have been launched by government just last Saturday. And as that was quite pending for last few years, and now it is becoming important to change the logistics policies that will help in reduction in the cost. We are forcing the manufacturing Make in India concept will going to change the trend of the supply chain in India, right? And from that aspect, there is need of infrastructure requirements in India. There is a need of technology enablement in India. So that is playing a key factor as part of government initiative which has been launched by government. Then last is on to the payments, where we are under the RBI guidance, right? There's a lot of new initiatives as RuPay and UPI acceptance has been increased, right? We had seen the yesterday launch where what you would like to share?
The UPI products that came out, right? Or on the account aggregator framework. So even yesterday, it was announced in the inaugural, right? 1 billion accounts have been already set up. So the launch of the guideline to the actual accounts of the customers being aggregated has been less than a year. The Vision 2025 framework, Vision 2030 framework already in the pipeline, lending frameworks that have come out, that is really changing how finances are now going to be available to the end businesses and the consumers.
That's right. And as India as a part of vision, right? China being a dominating player onto the manufacturing segment, in the last 3 years of Make in India approach, right? We are seeing a major change in the supply chain models, as well as where initiative from the government, why digital payments needs to be keen in order to improve the entire efficiency and of the models of the supply chain. So with India being a strong workforce and lot of Fortune 500 companies have been setting up their manufacturing hub in India, right? Apple, one of the example which has been there. We have been getting as a most attractive manufacturing hub globally, right? So after China, it's like Taiwan and Vietnam, and now we are seeing India as one of the key factors as a manufacturing hub, right? Free trade agreements within 13 countries, that has been helping a lot, right, in order to do an import and export a trade business that has been increased. Double taxations agreements with around a few of the countries that has been helping in the supply chain model. So as part of the government of India's strategic priorities, Make in India, how the logistics cost can be reduced, because now they understand, like when we are forcing into getting into manufacturing in India, right? Logistics cost reduction is one of the key factor here. So pushing the infrastructure, so we heard about lot of cold storage is going to come in, lot of airport operators, they have been enhancing their infrastructure to take care of the cargo warehouses, right? So infrastructure improvement is one of the key. And finally, as we talk about how this entire payment processing, it may be an LC or it may be a supplier buyer financing, all that is being driven with the digital payments. So with this, we are what we had seen how the supply chain has been getting evolved from the traditional supply chain to the new digital supply chain to cater the digital economy, what we have been talking about. And that's where OrientPro, we come as a platform which will help the SMEs to get digitalized. So if we see at the top, it may be a manufacturer, it may be a logistics, distribution, transporter, or even the last mile delivery, right? End-to-end operations, what we offer to an SMEs to get digitalized. How we do that is getting them an online presence, right? So even if they don't have a basic website, right? And a lot of SMEs have been talking about digitalization, but they don't have even a basic website to promote their products and services. What our platform does is they can, within a day itself, they can enable their own website itself, right? If it is a trader or if it is a distributor, right? Currently, they have been doing traditional business of buying and selling via emails or via calls. Now they can go online by enabling their own online store. Or even they can actually promote their products to the multiple marketplaces like Amazon, Flipkart. So extend their products and extend their sales channel across multiple marketplaces. But there are so many players who have been doing this, right? We have Shopify, a lot of them, they can enable the website. The core heart is the supply chain fulfillment. We automate the entire supply chain processes. It may be for logistics players, it may be for manufacturing. So today they have warehouses, right? We can automate the entire warehousing operations. If they are doing 3PL, 4PL operations, right? For them, it becomes a complete automated platform to do import, export, console, customs, delivery, even the last mile delivery for the e-commerce fulfillment. So that's where the completely automate the operations across supply chain, right? For the distributors, including the last mile delivery, and they will get a real-time tracking of their shipments. And finally, the financing, that will facilitate invoice financing. So all the suppliers and buyers who are into our platform, or not even they have been doing their operations as they're using some third-party ERP systems, but the supplier wants their invoices to be paid earlier, right? And that's the challenge, right, across all the developing countries. The invoice credit period is 30 days, but the buyer has been paying the invoice in 60 days or 90 days. Supplier go on following the invoices, and that impacts the cash flows and working capital of the supplier. So what we do here is we facilitate invoice financing. So we partner with multiple banks, we partner with multiple NBFCs, right? And we will facilitate the invoice financing to the suppliers. It may be a direct lending, or it may be via the corporate commercial cards. So we issue the business cards to the buyers, and then the suppliers will get payment within T+1 or T+2 days. Now you can see as an integrated platform, which makes a key differentiator, where we allow SMEs to go online as a presence. We allow SMEs to automate all their supply chain operations, and we allow SMEs, facilitate SMEs, right, to cater their cash flows challenges and working capital challenges via our invoice financing and business payment platform. So that's what we have been doing here, right, as part of our OB's offering, and getting details on what we do as business payment, as well as payment gateway.
Yeah, so, we spoke about the supply chain management having multiple actors and then having their B2B payment needs and their B2C payment needs. So the business payment platform and OroPay basically cater to those needs, and all of this gets integrated into one OroBee solution where we talk about improving cash flows, working capital, reconciliation on the business payment side, and on the consumer payment it is more about collecting the payment from the end customer, whether it is through e-commerce, payment link, invoices, and so on and so forth. So with this, what we then present to the merchants and their suppliers or buyers is one solution where they can cater to all their needs, all the way from going online to the supply chain management part of it, and finally the payments part of it. So they have one system to be able to reconcile, check, deliver the final solutions to their customers. And lastly, about OrientPro, right? So we have been doing this for the past 25 years. I mean, this is actually our 25th year in business, or rather we would be approaching the 25th year. We are present in multiple countries, and the solutions we did offer, or we rather did discuss today, have been present in multiple countries over the period of years. What we did over the last 2-3 years is integrate within ourselves to be able to provide the merchant a unique bouquet of solutions rather than disjointed solutions, and see what is the need and how we adapt to the market. So our core really is an adaptation. We have tried to stay relevant in the market and trying to ensure that this is something that the customers can resonate with, and we continue to bring value add in that aspect. So that's about OrientPro, and me and Snehal are from OrientPro, obviously working on different verticals, but bringing in this unique solution that caters to what the merchant really needs at this time. Yeah. So I think that's all from us.
So any questions, please feel free to ask questions. And this is our booth at the front of when you enter the hall, right? OroBees, which allows a complete platform for SMEs, OroPay as a payment gateway, and business payment as a payment platform for the suppliers and buyers. So that's where we are. Yeah.
Okay.
Any questions or how it works?
Yeah.
So I have a question regarding the supply chain platform that you showcased right now. One aspect that I want to ask is whether this covers underwriting as well. Is it a part of the solution? And second, is this in line with trades which is already in place for suppliers and buyers? Is it similar?
Okay.
Or how is it different from trades?
Okay. So as part of the supply chain offering, yes, it's part of the OrientPro offering what we have been giving as an end-to-end solution to automate their businesses. So as I mentioned, like when we talk about logistics, it may be a third-party logistics players, or it may be a warehouse operators, or it may be a distributors of key shippers, maybe Nestle, Unilever, right? We automate the end-to-end supply chain. So that comes as a part of the key integrated offering what we do. How it differs from trades? Yes, trades also do invoice financing, and they provide the platform for business payments. But they have been more focusing on financing, right? And that is one part of our offering. So as you saw, business payment, that is where we are in the similar offering what trades do. But see, when the invoices comes into play, validation of the invoice plays a key role, right? How accurate this invoice is, or how authenticate that invoice is there. And for that, linking in back to the supply chain against that particular purchase orders, right? Against that particular transactions that has happened, or the milestones that have been done, again, for that invoices plays a key factor. And that's where our integrated offering of supply chain as well as financing plays a key role and differentiator from trades. So if the banks wants to evaluate that whether this invoice is authenticate, they can go back to the purchase order level. They can go back when the stock was departed from exporter, when the stock was arrived at an importer, when the custom clearance was been done. You can imagine the entire authenticity of that particular invoice gets at a higher level, right? Rather than just taking it as an invoice and we are saying like, can you finance that invoice? Our expertise of 25 years being into supply chain, being into the banking solutions and the financial supply chain offering. We brought it all together so that we can have a complete visibility of that invoice before the payments have been done. And that differentiates from trades. You know.
So you mean to say that suppliers, buyers, banks, I mean the lenders,
Yeah.
all these are actors who have to be on the platform?
Are to be in the platform. And they are like supply buyers are already onto the platform, right? And the banks will be coming as part of the platform to lend or finance the suppliers and buyers. Yeah.
I think we'll address one more question.
Yeah.
Hi, Gaurav this side. Thanks, Snehal Bhakti. On the supply chain flow and fulfillment, can you enumerate the different pieces of your tech stack? And also
different pieces, sorry?
Of your technology stack.
Okay.
And are those something you working with partners or you've developed yourself?
Okay. I can go back with this. Yeah. So if we see on the technology, on the key offering, right? So if we start from the manufacturer here, of course, manufacturer would be using some ERP systems for their production and process and everything. But we have been seeing challenges of all the big manufacturers of like every supply chain operation is more localized. You can actually standardize the production process. But when the stock goes to India, right, India supply chain challenges are different than the Indonesia challenges and Singapore challenges. And that's where we come into play, where we actually automate the process of the supply chain, not as part of their manufacturing process, but their supply chain processes. So as part of the offering, we focus on getting the manufacturer, their raw material and finished products inventorized. If they are doing their distribution by themselves, we automate their entire transportation to the last distribution centers, right? And all these players, right, if it may be a third-party logistics players who will be using like Polestar, who have been purely into the supply chain logistics movement, they are the one who actually use our platform to automate their entire logistics processes, their transportation processes, right?
So I meant like, I think you mentioned track and trace.
Yeah.
Tracking and visibility, one.
Right.
Then I read order management system. So this, for example, the order management system, is this something which is developed in-house? This is your own OMS?
The entire platform is an in-house platform, right?
So OMS is one, track and trace is one. Is there a TMS? Is there a WMS?
Yes, so all this comes as part of offering. When we talk about transportation, it's a TMS.
Okay.
Right? When we talk about logistics, it's about freight forwarding, right? So 3PL operation, 4PL operations, all that has been offered. When we talk about warehousing, retail and trading, it offers a complete warehousing suite, right, for your receiving, dispatch, and it's completely paperless mobility operations that what we provide. We also do last mile delivery and e-commerce. So if any of the merchant who actually have a large distribution centers who take orders from Amazon and Flipkart, they use our platform. Merchants use our platform for doing the entire fulfillment of the orders. So when I talk about order management here, the orders comes from Amazon, Flipkart. The entire packaging process, QC process, how the orders can be delivered on time. So when you get an order from Amazon, right, at the backbone, there are a lot of activities that have been done at a warehouse before it gets packed, labeled, everything. That's where our last mile and e-commerce comes into.
Do you also have your own WMS?
We have our own WMS.
Okay. Can this work across channels besides online and offline?
Yes, but mostly for SMEs, we are enabling as an online platform as ROBs.
So in terms of exposing, say, inventory from all my channels to all buying points, can that be done?
It can go at the first level, second level, till the third level distribution where the inventory is being stocked. So at a core hub, till the distribution center to the last mile points.
Thank you.
So last. So we have your email ID, you're right, and you can please visit our booth, right, to get more info. If you haven't gotten time to answer any of your questions, please send emails, right? We'll be happy to answer that. Thank you very much. Yeah, please.
Sure, give it up for Snehal and Bhakti. Well, that brings us to an end of this particular session. And right next, ladies and gentlemen, I think we want to keep up on time and be right on schedule. And I see most of our presenters for the next product showcase are also here. So without any further ado, we shall move forward towards the product showcase supported by HSBC. And if we have more audience coming in, I would request them to take your seat, please. Both of them were there. Right, welcome back to Global Fintech Fest, brought to you by NPCI, PCI, and FCC in association with Department of Economic Affairs, RBI, and IFSCI. Well, as mentioned, Product Showcase is our future presentation supported by HSBC, and an interesting lineup for us. To begin the session with, may I please invite Mr. Visham Sikand, co-founder and CEO, Goals 101 Data Solutions Private Limited amongst us up here on stage. Please help me welcome with a round of applause, Mr. Visham Sikand. Would you need an extra mic, Cordless? Yeah? Okay. Yeah. And the...
So how do I go ahead on this? What do I do on this? Just press the play. And how do I go back here?
Yes.
Okay. Hello. Hello.
Check. All right, and one special announcement for our presenters that we want to keep it up on time, so please kindly restrain and limit yourself to the mentioned timing, and provided a minute or two, we can address a few questions by the end of your session. Thank you.
Thank you. Thanks, Prachi. Hi. Good afternoon, everyone. Quickly, okay, so we'll make this a little more interesting and fun for all of us over here. Because obviously you guys are doing multiple presentations and attending multiple sessions. So just a quick background to myself and the company. My name is Visham Sikand. I'm a pastor from Harvard Business School. This is my third startup. In my previous role, I was the chairman to Aetna. This is the second biggest health insurance company of the world. They bought out my previous company. And before that, I did a bank tech company that was bought out by a UK company called Serco. So this is my third startup. Milan, my co-founder, is here. Milan was the country head of Liberty Insurance in his previous role. So let me quickly show you, a lot has been discussed these days around data. But if data is used very interestingly by a country like India, a lot can be done with it, with the power of it. So the world's economy runs on a customer spending at a brand. All of us, at the end, we're all sitting here to earn money. We go and buy an insurance product, we go and buy something at Amazon, and we go and buy at Starbucks, or we go and buy the registration at this place. So the entire thing works there. A lot of interesting companies have come who are talking about how to enable more transaction. They are POS companies like Pine Labs, Razorpays. They are companies like NPCI who are trying to ensure that the networks are good. NPCI, Visa, MasterCard, the connections are far and beyond the countries and merchants. But there can be a lot of interesting other companies that have come in the space saying that, for example, there are companies which are giving loans to merchants and saying, hey, can you get more products and sell? Just imagine if the banks start playing a very interesting role in this. All of us are transacting on our credit card, debit card, UPI. Imagine a small merchant, let's say it's a Chinese restaurant where you eat and you live in Chembur. The banks obviously know that you live in Chembur because they have your office address, your residence address. Imagine if the bank gives a user interface without giving out any data to any merchant and says, hey, Chinese restaurants of Chembur, come on this user interface and target a customer who is eating Chinese food with, let's say, ABC Bank. So imagine, so I'm just saying, let's say I'm mainland China and Milan is eating at a Chinese restaurant in Chembur. And suddenly there's a user interface given to mainland China saying, I want to talk to all people who eat Chinese here. I'm ready to give them a 20% discount. But this person, and they can put a filter that I only want it to be females. I want it to be people below the age of 30 age group. This goes back in the bank's system. And the campaign that comes out to you is from that Chinese restaurant because you are staying in Chembur and you get that 20% extra off. Let's put a bigger use case of this one. Let's say Amazon wants to go and talk to customers in the category B and C cities where people are still not come to e-commerce. Obviously, e-commerce is still about 20% penetrated. So they go and say that all those people who are spending offline in this bank, can they be given an Amazon program and offer, and that goes there. So today, Goals 101 does this. Banks, Visa, MasterCard, NPCI could provide data to us, which is non-PI. We do not know who the customer is. We do not need to know who the customer is. Where that, for example, that customer hash ID is doing a transaction yesterday at 400 rupees at Starbucks at 4:40 p.m. What is the customer data means? What kind of customer? Is it a male? Is he 40 years plus? We don't need to have date of births here. And merchant data that, okay, this was Amazon, merchant category code, merchant ID, and terminal ID. Imagine if this data comes on a platform which is completely privacy compliant, and this data automatically gets ingested, cleansed, because data is very junk most of these times. What happens in this? A merchant comes there and he hyper targets a consumer. He says, like Facebook, like Google, I don't know whether you all know that the 4th biggest digital channel in the world now is a business concept like this. So Google is number 1, as we know. Facebook is number 2. Amazon is number 3. Cardlytics in the US is number 4 now. 49,000 merchants come on their platform on a daily basis, say that I want to talk to this kind of a customer in Bank of America, and that program goes to that customer in Bank of America. So today, merchants are ready to target a customer of a bank by getting a user interface on this. So no data is given out to the merchants. They just come there and say, want to talk to this person who's spending more than 2,000 rupees on offline apparel. And that's where the program goes. And the customer gets that. It's relevant for the customer because he's spending on offline, so he's spending on Zara. He gets a Marks & Spencer program. So merchants come, they get more transactions. So if you are a small SME, your biggest desire is to acquire new customers. If there's a platform which brings this to you, this is what you want to solve for. So this, obviously the customer is happier because the offers are stronger, the campaigns are stronger, and they're more relevant for the customer. So what happens here? Merchants come here. It comes, the data is already there in the platform. Each of us in the banking community now will get personalized communication. So no one will just get a random McDonald's offer. You will get an offer which is relevant for the kind of transactions you're doing. It could be a cross-sell product. It could be, let's say you have a EMI. Let's say you're an ICICI customer. Your EMIs are running on, home loan is running on SDFC. And they can clearly see that you're paying, let's say, 50,000 rupees on EMI. Immediately, ICICI can send you a program saying, hey, we have a home loan buy our product. Why don't you do that? Today, randomly, some agents call you up for health insurance, for whatever. Now the systems will automatically do it. So everybody gets that. The customer uses the program, and it is completely, you don't need to go and do anything. Just go and swipe at the merchant, and automatically you get the benefit of that campaign. So just quickly telling you, so we already working with around 12 plus banks. Most of our banks are outside of India. In India also, we have 6 leading banks. 4 billion data points are analyzed by the platform daily. The points come to us every day. The transactions come to us every day. 100 plus merchants are already on the board. The campaigns sent out by the banks now have 600% higher conversion rates because it's relevant for the customer, it's stronger, and it's more hyper-targeted. So it's a deep tech, privacy compliant platform which is built on AI. We are one of the first ever white label products for Visa globally now. So Visa has obviously seen fancy in the product, and they have partnered with us for 89 odd countries, which is Central and Eastern Europe, Middle East, and Africa. We're now building a global product with Visa. So that's our next thing with them. This is for 89 countries. That will be for more than 200 countries. Our partnered banks are in India, UAE, and Malaysia, IndusInd, ICICI, Kotak, Yes, SDFC, Deutsche, RBL. Actually, one of the banks is also HSBC. So just to tell you all, similar business and entity in US is partnered more than 500 banks. So in US and UK, this concept is already big. In Asia, we are the first company to bring this over here. So that's where we are. We have won a couple of good awards on our journey in this space. We have a nice team also over here. So I'm the founder along with Milan. All of us, we have a decent team which still owns majority of the company even after multiple rounds of funding. And on the board, we have the previous Facebook CEO, Nexus, previous Oracle MD, the CEO of Amex, and the previous Google MD of India. So, and obviously our current investors are some of the good ones. These are our partners. We have the best data security and privacy compliance on the globe to global standards. So what are we looking forward in the next couple of years is in this data that comes from credit card, debit cards, or whichever, for example, yeah, it could be anything else, your wallets. We want to completely automate. Banks do not need to have 100 people doing this for you. Data should come on a platform. Automatic communication should go out to you, which should be relevant. You don't need to have people who are culling out data, doing things on a manual batch basis. Solve for India. Obviously, we'll solve for India. We're looking at a big partnership in India, which maybe you will hear next quarter. And then obviously with Visa, we're trying to go for more than 100 countries. And then launch a new product line on this same data set. Can we automate your cross-sell products? So very interesting stuff. There's a link that I have sent, Prachi. Can that link be played? Yeah, so I'll quickly show you a 2-minute video on how this entire thing works as a product use case. This is how Visa shows it to the world.
Introducing Vmap, Visa's marketing automated.
This is our product.
Vmap connects issuers, merchants, and consumers in a way like never before. Through our cloud-based AI-driven platform, we are now able to connect issuers' database to merchant partners, allowing banks to gain access to continuous merchant-funded offers that are personalized to the issuer's consumer segments. The system hosts anonymized issuer data at a platform level that allows merchants to provide bespoke offers without the need for any issuer PII. For the merchant, this provides them with an opportunity to increase market penetration by gaining access to the issuer's base via the offers repository housed on the Vmap system. Only the most relevant offers from the repository are selected by Vmap and provided to the issuer. Once the offer is selected by the issuer, this will automatically integrate to the Vmap system via the issuer's own database. Where Vmap gets even more effective is in its output through the continuously automated process.
So the front end now you have from banks will be very exciting that you will see compared to what you get as emails today.
Management system. When the consumer redeems the offer, the data is updated in the issuer database. This then generates an automated report back to the merchant, who can track the direct business impact from each offer they made. Vmap's automation engine can automatically create on-brand creative versions for digital, social, and traditional media formats. Design consistency is automatically hard-coded into the system, ensuring the output is consistently on brand. Final assets can then be shared with media agencies, activation agencies, or other key stakeholders ready for campaign rollout. The system can also push the assets into the issuer's own asset platform. This will dramatically reduce production cost, while in turn providing a critical mass of assets to be able to effectively test and optimize in real time. Vmap, the new way to integrate a merchant ecosystem to make intelligent, personalized banking a reality.
Thank you. That's it. So broadly, I'm just saying, so if you do it in a good way, it can have a good result for the customer, for the bank, for the economy. So just to tell you, we have run about, in India, we have run about 40,000 campaigns till now. The results of each of those campaigns is at least 400% better than what the banks would have done by sending you individual emails and SMS. So yeah, so that's what we are about. And thank you everyone for listening to us. Thank you. Any questions? Yes, please.
So I want to ask one question, that you are planning to be a performance marketing platform or something like that?
Yeah, one side of it is performance marketing.
And what about then integrating with different third-party vendors such as applications and different websites who have a lot of traffic, and you want to definitely, from banks you are getting the details and who won't be able to capture, but definitely if you are running an ad or playing a campaign, you must be integrating with that platform as well. So how are you going to do it? And if you have done already, so who are your partners?
A good question. So there are a lot of countries where they're open to do third-party integrations with apps like this. So as we are launching with more than 100 countries. So there is where we are looking at that. In India also, we're looking at how we can do it in a privacy compliant way, so that it can't be the customer seeing it suddenly on their Facebook because bank, right? So right now it's banking channels in India. Internationally, we are looking at what you're talking about, and we're talking to the biggest, one of the biggest digital players who will help us in doing this, yeah.
Okay. And I also want to know that, is bank are getting benefited, or like,
Yeah.
they
so what happens to a bank is, for example, this customer is spending, bank's goal on credit card, debit card is to increase your number of transactions. So if they give you more relevant, aggressive offers, you spend more on it. So you become, instead of going offline and using cash, you'll start using the credit card, debit cards, or the UPIs of the world, right? So if you give more and more relevance and more ease of such programs, that's how the country becomes more and more digital. That's what
So
we
do you have any specific campaign pricing which you have set, or you leave it on a bank or
So
to
yeah,
decide?
good point. So globally, it is 6% of the transaction amount is what we charge. So for example, let's say Starbucks says, I want to talk to all coffee drinkers in Bombay, not coming to Starbucks, and let's say 10,000 people do a transaction, 10,000 to 500 rupees into 6%. So it's a new attribution model because we know the transaction value and outcome, which others do not know in the world. So that's why it's around 6%, yeah. So that's why it's much higher than interchange and much higher. So that's it's a very highly profitable business to be in.
I get it. So what kind of campaigns you are planning, like email marketing campaigns, banners, or is there
All
any
of them.
fixed-
We have done
all
all
of them?
We have done all of them.
And
Yeah,
okay.
all of
Because,
them.
you-
Notifications, everything. So we have done all of them. The next one that you will hear next quarter will be something which will be maybe globe changing. Yeah. Yeah.
Thank you.
Thanks.
Thank you so much.
Anyone else? Okay. Thank you so much. Thanks a lot.
Well, thank you so much. I'd have to request you to step once again. There you go. All right, give it up once again for Mr. Sikand, please. Up next, ladies and gentlemen, in the next product showcase, I would like to call upon President Sales, Mr. Jayesh Bahadur, representing Probe Information Services Private Limited. So, please help me welcome him with a round of applause, and let's keep up a little high on energy. I know the lunch time is here and nearing soon, but yes, over to you.
Good afternoon, everyone. I know I'm intruding into your lunchtime, but trust me, the presentation should be good enough for you to really enjoy it. So the last speaker spoke about data, right? That was more B2C. Not sure how many of you have heard about Probe Information. We are India's #1 corporate information platform. And so today, every banker, nearly every banker, we work with almost all the banks. You name the bank and we work with them. PSU banks, private banks, MNC banks, cooperative banks, most of the major corporates that we work. So we have close to 65,000 bankers and over 40,000 corporate users who are using our platform. So essentially what we do is we collate information on 1.7 million companies which are registered corporates from 740 plus public domain sources and present to you on a platform for you to really make a very informed and quick decision for whatever use case that you're looking at within your own function. So today, some of the sources are bureaus, where you get the suit file cases, credit rating from the rating agencies, all the financials from MCA. So MCA is one of the big source for us. GST filing information, which is in public domain. We track 671 courts. So all the cases filed against a company, by the company, pending cases, disposed cases in various tribunals, you will get there. LEI information on companies. So typically, close to more than 70,000 companies are being viewed on a platform almost on a daily basis. We process close to 11 million companies every month. So essentially, we collect the information, we clean that information, curate that information, analyze, and then deliver it on a platform. Now, how do banks and NBFCs typically use it? For various purposes. Some of the use cases are when they are looking at CAM preparation, they use the information from our platform. ROC search report, you'll get to see all the charges that are got created by various banks and financial institutions, open charges, satisfied, modified, the date was created, the amount, the rate of interest, property particulars that has been mortgaged, everything can be viewed on that. Beneficial ownership. So any company having shareholding or a person or director having more than 26% shareholding, you can track that here. Then for re-KYC, current account onboarding, credit monitoring, etc. So essentially, we help the banks improve their credit quality, the turnaround time, and also one of the big use cases in banks is for lead generation. So one can search companies and potential customers through various search filters as narrowed down to a PIN code. Yeah, and then of course industry, etc. Now, how corporates are using it? Essentially, corporates, we help them from growth perspective, yeah. So they can identify financially strong and growing customers. Again, they can do multiple searches through various search filters by industry, by segments within the industry, by revenue range, by credit rating, and multiple other features that one can really search for. So we help them in their growth. Then, of course, when you get business, you need profitable customers. You can assess them more from financial standpoint, right? We help companies reduce their credit cycle, the bad debts, etc. So you all try to then work with good customers. So we help in increasing their profitability. And also from a risk standpoint, in terms of, one can analyze the customers and suppliers, almost on real-time basis on a platform. So essentially, we improve the turnaround time, we reduce the cost, and we have the largest coverage. As I said, 1.7 million companies on the platform, which is the active universe, and 2.5 million companies ever registered in India. So every day, close to 800,000 companies are getting registered in India every day. You can see that information with the fly. Then, of course, you get unique company benefits. So within an organization, one can create team, and one company can be viewed by multiple team members, within the group. They are some of our customers in various segments. You can see almost all the banks, NBFCs, Fintechs, and most of the major corporates. 20,000 plus customers who are using our platform on a daily basis. Some of the expected features that we are going to release shortly will be Probe Score, which will help companies from risk scoring, size score, profitability, balance sheet, etc. From timeline alerting in terms of any changes that happen in a company. Of course, when you onboard a customer, vendor, supplier, you would also want to track it on an ongoing basis. So you can really, whatever changes are happening, one can track on that. Then like me companies. So today you have, let's say, 100 top customers, good customers. You would want to see what are the similar customers or similar companies having similar attributes. You can look at those companies from potential business standpoint. So these are up for release in a few months. So we'll be shortly announcing this. So this is what we have. Any questions? Any questions around that? Yeah, thank you.
The data that you have,
yeah,
is it all public data, or is there, data that should not be public? And if it's not, then how do you license it?
Yeah. So as I said, all the data or information that we have is from public domain sources. So there's no proprietary information. So we track MCA information, we track all the codes, LEI information, GST filing information, credit rating information on companies, and any other information from RBI or suit file cases. Everything is in public domain. So if you want all this information, you can still go to these sources, 743 sources, get that information. We organize it, collate that, and all these filings happen through documents. So we collect that information, present it in a format where you can analyze that, do peer comparison, see financials, see the graphs, see the sort of various other ratios, etc., and make an informed decision depending on which function you are in, right?
Sure, thanks.
Within an organization, yeah.
What about the pricing?
So pricing is, of course, we can discuss the pricing separately depending on, so we have a pricing matrix which starts as low as almost 309 rupees per company per year, and it could go up to 449 rupees, including GST. So typically, as I said, in an organization, it's about companies that we talk about, right? So you buy X number of credits. Let's say you buy 500 credits which means you can view 500 companies in a year. And the day you unlock a company, then you can view that company for next 1 year and any number of employees within the organization. It could be 10, it could be 100, it could be 10,000 employees as well, depending on the size of the organization. Any other question? Yeah. So thank you. Thank you so much.
All right, so that was Mr. Jayesh. And up next in the product showcase, ladies and gentlemen, I would like to call upon very quickly Mimo Technologies Private Limited, and to represent the same, we have Chief Sales Officer Nilopal Roy with us. Please put your hands together for Mr. Roy.
Hello everyone, very good afternoon. My name is Nilopal Roy. I'm here to represent an organization called Mimo Technologies. I'll not take a lot of your time. I'll quickly take you through the introduction part. So what is Mimo Technologies? Mimo Technologies, actually we are working as a tech-enabled distributor at one side. Also we are working as a B2B mobile wallet company, where we are trying to disrupt the entire cash collection model in deep rural part of the country. So in the first segment, as a tech-enabled distributor, we are working as an agent marketplace where we have more than 18,500 active agents working on ground. They are covering some around 18 different states, 3 union territories, and some around 8,000 unique PIN codes. We have been working in this industry from past 6.5 or precisely 7 years, where we are here to provide us kind of solution statement to kind of problem. The first problem for which we are trying to provide a solution is that nearly 70% of our population stays in rural. However, it's a big opportunities for the enterprises. Despite of that, enterprises struggles a lot in entering the rural market. The second problem statement in the rural market is the unemployment rate is very high, which forces an youth after completing his primary education, they tend to migrate to tier 1 cities in search of job. So over here, Mimo comes into an existence with a solution. At one side, we are helping the enterprises to go to rural and giving them an access or gateway in the rural market. On the other end, through our digital entrepreneurship model, we are engaging the rural youth and asking them to join in our ecosystem where we are ensuring that their life is being sustainable. A sustainable income is there for their entire time. So how we are doing this? So what we do in the ecosystem, that we tie up with companies like bank, MFIs, NBFCs, microfinance companies, marketing companies, and aggregate their product and services through our agent network. Though it's not a traditional or orthodox vendor management company, it's a hardcore tech-enabled company. So all 17,500 agents who are working in the ecosystem, they are using an app. Through the app, they are doing all kind of activities. So we can also say that it's a kind of Uberization of the entire ecosystem. What normally happens in Uber, same thing happens in our ecosystem. Suppose if any client want us to assign us or want us to get any work done, using the portal, they upload the work in our portal, and the system automatically assigns the works to a ground level agents. All 17,500 agents who are working in the ecosystem, they are blue collar agents. However, they are skill trained agents. So all the agents who are working, they are trained agents in all the processes, all the activities which they are performing on ground. This is the approach which we have taken. At one end, we have enterprises. On the other hand, we have our ground level agent network, where we are working as a bridge between an enterprises as well as ground level network. At one side, we take work from the enterprises, convert those work into a micro job opportunities, and supply those work to a ground level agents. So using the application and using the technological model, we are getting everything work done in the entire ecosystem. So our end-to-end ecosystem is an automated process of ecosystem where we don't believe in having a manual interaction. So the client any companies with whom we are working, they doesn't have to interact with our entire operations team or entire team in order to perform any kind of activities. So if using the portal, they will have an access or visibility of all kind of activities which is being pushed in the entire ecosystem. These are some of the list of services which we are offering, and we have an expertise in these kind of services. This is the product stack, or you can say our dashboard portal which we are offering to our client, which have a multiple layer of access where any activity or any work which has been pushed in the Mimo's ecosystem can be tracked down and can be traced at a minute level. So in brief, holistically, I can say that Mimo, any work where a manpower requirement is there, a feet on street requirement is there, or where you would require a last mile connectivity, Mimo is helping the enterprises in engaging those activities. So this is a dashboard view where our clients gets a detailed analytics or detailed representation that what are the views available. This is why Mimo, why client approaches us in terms of work, because we have a very strong presence in the rural market, though we have a presence in urban cities as well, not predominantly in rural. In both a mix and match combination, we are offering catering services to our enterprises. These are some of the list of clients. As I rightly said, it's not a traditional or orthodox vendor management company. It's a hardcore tech-enabled company. So why we are saying that? Because we are working into a diversified business model. It's not restricted to BFSI segment or not to the marketing segment. We are working with various startups. There are more than 80,000 startups registered in India, so all the startups might not be deep-pocketed as Amazon or Flipkart. So we are helping these startups in doing all kind of BTL activities, doing all kind of promotional activities, door-to-door marketing activities, road shows, and trying to create a penetration mainly in tier 3, 4, and 5 cities of the country. Apart from the logistics, we are also providing last mile end-to-end logistics to various partners, whether it's a hyper-local logistics, whether it's a mid-mile logistics, or whether it's end-to-end logistics services. We are engaged in the logistics part as well. Software, yes, we have it's an in-house developed software where we are providing the software as a service to our existing client, which includes your NBFCs and microfinance who have a lot of resources available on ground. To track the resources activity on ground, the software is being used by various companies. So these are some of the agents' reviews, the transformation which we have done in past 6 or 7 years. These are some of the rewards and recognition which we have got in past years. So that's it from our end. We are open for the question. Any questions? Thank you. Thank you. Thank you, everyone. Thank you for your time. Thank you.
Well, moving forward in the product showcase, very quickly and swiftly, I would like to call upon Mr. Vineet Singh, co-founder and CEO, Castler, with us. Please give it up, guys. 2 more presentations on your way before we actually break and have ourselves some
I'm so relieved that I'm not the last one. Yeah, so we'll try to make this as quick as possible. So hopefully this will increase your knowledge a bit. Castler is slightly, you can say, neglected subject, slightly unknown area, especially in India. A lot of people don't know about the benefits of escrow banking and how it can protect you and why everybody should know about it and should use it at the right times. So Castler is a 18-month-old startup. Our endeavor is to democratize escrow banking. The suite that we have built is transaction and industry agnostic, and now we are building for cross-border export-import transactions as well. Just to run through, opening an escrow account is very tedious in India. An escrow agreement has to be done. It takes almost 4 to 6 weeks to prepare that agreement. The TAT for opening an escrow account in India is anywhere from, you can say, 2 months to maybe 4 to 6 months. It is reasonably high cost. 3 actors are involved in the account opening process. Bank charges you for escrow account opening and management. Then either you have to appoint a trustee or a lawyer as the escrow agent, so they also charge you, and you have to pay a fee for the escrow agreement as well. Because it is a, you can say, specialized area of banking, a lot of banking folks themselves, they don't know. So a lot of leads and requirements get dropped at the local branch level for escrow banking. So we work with 10 banks integrating into another 10. So almost you can say the top 20 banks of India on the private banking side. And they convert hardly less than 10% of the escrow leads that they get. So huge supply-demand mismatch. Since we have been commercially operational for close to 16 months now, so there is empirical data that yes, there is a need for an alternative solution. In terms of market size, escrow banking is the existing market is very big in India. Around 1 lakh companies in India use escrow accounts. The existing escrow deposits at a very pessimistic level are around $100 billion. The revenue pool is around $4.5 billion, around $2 billion in fee income, the fee that banks, trustees, and lawyers charge you, and around $2.5 billion in interest and forex income, the income that accrues to the bank. If we extrapolate the numbers, and what Castler's agenda is not only to make the, you can say, workflows seamless and smoothen it up for enterprise usage, we intend to launch for MSMEs, SMBs, and consumers as well. So we feel that escrow is going to be a $260 to $300 billion kind of a market by 2030. Just to give you an example, just for general knowledge, we are not the only ones or the first ones across the world. There are many escrow banking players across the world. Almost every major developed economy or geography has a significant escrow player. Escrow players are bucketed into two segments. Either they do payments and banking or they do real estate. So real estate by regulation in North America, Europe, let's say you are buying a resale home, as we call it in India, a secondary real estate transaction, you have to use an escrow account. You have to escrow the title as well. You have to take title insurance so that after the purchase transaction, if you find out that the condo was bought by 3 more people, there is no title fraud. Okay, so you protect yourself from that. Then the Castler Digital Escrow Platform. So we tie up with banks, integrate into their APIs, and then we give a combined suite with the bank, with a Castler transaction management, escrow transaction management solution to our customers. So it's a complex kind of a suite, takes around 6 months to integrate and go live with a bank. So we currently live with 5 banks, doing beta testing with another 5 right now. And we offer, customers can consume our services through APIs, through a web portal. We can white label the solution, and for banks, we can provide a on-prem solution as well. How it works is very simple. We mirror the bank, so we do enterprise level KYC while onboarding you and provide you a user ID and a password, account number with an IFSC code. And then instead of logging in into a bank's internet banking, you log in into the Castler systems and consume our solutions. Performance, we've been live for 16 months now, so around 150 enterprise customers, around 6,000 users, 9 banking partners. The average revenue per enterprise customer per year is around $1,000, around 85,000 rupees to be precise. The average account balance on a daily basis on which banks earn interest income is around 50 CR. The monthly GTV is close to 800 odd crores, 850 crores. And so these are all organic customers. This is a specialized area of transaction banking. So business comes through banks, business comes through referrals. Around 70% of our business is financial services. We built plug-and-play escrow banking stacks for co-lending, supply chain financing, revenue-based financing, fractional real estate. New buzzword now, save now, buy later, or save now, pay later. So tomorrow you want to start a fractional real estate business, come to Castler, we'll give you the entire backend. Okay, so save now, buy later, or pay later, similar. We work with 8, 10 angel syndicates and investors as well. So small team, 15 odd people, and most of the business on the financial services side, though some customers on marketplaces and PropTech as well. There is a small network effect, though we've just been live for 15, 16 months. So through these 150 customers, around 6,000, 7,000 enterprise users have flavored the service of Castler Escrow. These users include folks like Fab India, Trent, Aditya Birla, Flipkart, Adani, Reliance Infra, Lifestyle, Cloudtail, and so on. Okay, so our future roadmap, we are revenue accretive. So naturally, this is a money-making business. We solve hard problems for enterprise customers, so they're willing to pay reasonable amount of revenue for that service. So we intend to become profitable by 2027. This is not a business as well where we'll need hundreds of millions of dollars. So this is a frugal kind of a business. There's hardly any burn, frankly. If we want, we can break even, become profitable in the next few quarters as well, if there is a push in that sense. So we will have four, you can say, clear revenue models: the domestic escrow business, the enterprise, the cross-border export-import escrow business, the retail business, which will be split into peer-to-peer and marketplaces, and the PropTech, the real estate business that we are planning to build. So we feel that if we get this right, if you see, there are around, I don't know, more than 100 plus stalls. For every, you can say, usage category, there are multiple players who are trying to do the same thing. But amongst the 125 stalls, there's only one escrow player, Kasla. So please do visit our stall. We are at F3. Would love to do a serious conversation on your use cases and requirements for escrow banking. So look forward. Thank you guys for your patience. Any questions? Yeah, sorry.
I think we don't have one right now, maybe later, and a lot of networking that can happen over in the break time as well. So up next, after Singh Saab, of course, we have Mr. Abhinav Nair with us, who would like to talk about Mool. I think that would be quite interesting to, and I would request you to educate us all regarding this particular showcase. Would you need a mic, or the podium is okay?
That's okay. Hi, everyone, and good afternoon. Let me start with a simple question, and let's be honest with each other. How many of you feel that you are good with money? Right? So a lot of us feel that way, and there's a reason why. If you talk to most people in India, they will give you one of three responses, right? Either they feel that they don't really know how money stuff works. There's a lot of information online and it's all kind of confusing. Or somebody's already quite savvy. They understand that the bank is going to give me about 2% or 3% interest on a savings account all year. I have a cash flow business. I'm happy to stay in cash. And then there are folks who are sort of aware about different kinds of financial products that are available to them, but are faced with these marketplaces where they say that you can pick one of 5,000 mutual funds, and that's where the journey sort of ends for them because they really don't know how to go about making that decision. And it's surprising that this is the case because what you have in India is really the world's largest cohort of new savers, and 95% of them do not compound their savings faster than inflation, right? There's no wealth being created from their savings because they can't avail financial services properly. And as a result, you see a very slow accretion of financial assets in Indian households. And if you ask them why, they'll give you very simple and obvious answers. Either they'll say, I don't know how to do this. They'll say, this is too boring for me, I couldn't care less. Or they'll say that I don't really understand, right? And we did a lot of research to understand this mindset and made as our cornerstone 3 guiding principles about creating great design for a consumer finance product that reduces effort and is universally accessible. And so that's what Mool is. We are a digital financial services brand connecting multilingual users from a cash to growth experience. And what that means is that from the moment you have cash in your hand to the time that that money is doing some work for you, you can operate within the Mool ecosystem and be led the right way. And we look at a very special consumer segment in India, which is called, which we call as the riser segment, right? These are people who are, in many cases, the first in their families to have real personal disposable income. Many of them are urban, active, smartphone active, Indic language users. They have substantial income and collectively save about $200 billion in India annually. And so keeping them in mind, we built a full stack neobanking product. On Mool today, you can open a digital account, a digital bank account without any paperwork or branch visits. You can start an assisted journey to investing into personalized growth funds or flexi deposits that pay you 10% interest, and you can take the money out at any time. You can avail insurance which is as affordable as 75 rupees a month. And make payments, right? So we become a single brand through which, with great usability, through which the right person is able to access the right financial product from the right provider at the right time. We were very excited last year to win what's called the Curious Best Digital Product Award. This was across not just in BFSI, but across all segments, where we competed against the likes of Zomato and Swiggy. So we provide 100% digital banking in about 14 Indian languages. We offer India's first credit builder card, which is a card that can improve your credit score by about 200 points over 3 months without you really taking on any loans, which is really attractive to a lot of thin file and new to credit customers. Investing is one of my favorite things. About 90% of our users are first-time investors. They've never, invested in anything before. They came on not knowing what a mutual fund is, and somehow we were able to, through a digital process, understand what their risk profile should be, give them a growth fund that matches their needs. And the portfolios we offer all tend to are designed for low volatility while still beating the market benchmark, which is not an easy thing to do. And finally, you can buy insurance plans that protect your health, life, and property. So this is sort of the product, the MVP version of our product that is now about 2 months old. We have about 150,000 customers in that time. And one of the favorite things that people come back to the app for is not to make more transactions, but just to read in Malayalam or Odia, what is credit? How do I, why should I care about a credit score? What are the basics of personal financial management? We think of ourselves more as a design company than a technology company. We've worked with IDEO and the Gates Foundation to go really deep into the kind of mindsets that people have about money, especially for this new to digital segment, and develop journeys that sort of go away from the Silicon Valley thinking about an app as a playground to creating an app as a journey, and hope that currently the only 6% or so of banking customers who are actually able to use their mobile app, that we can start pushing the numbers on that. And the best thing is that, how this has worked out for us is that for less than the cost of sending a letter, for 5 rupees per customer, we're able to acquire that customer and turn them into a banking, investing, and insurance customer. We also have a physical merchant network of about 3 lakh merchant locations, where just as you would buy bread, you can hand cash over the counter and see it deposited in your account. If you have a larger amount of cash at home, somebody will come pick it up, and instantly you will see the transfer when you hand it over. We provide help through all kinds of ways in ways that are accessible. We're fully compliant with the regulatory and InfoSec standards that we have to keep up with in working with multiple financial institutions. And the best part is that, through this, despite working with different financial products and in multiple financial service verticals, we really have a 360-degree view of the customer. We know exactly what their cash flow curve looks like, what their needs are across banking, credit, insurance, and investment, and are able to service that need in a really accessible and low-cost way. We're proud that we've gotten some support in the form of pre-seed investment from the Nilekani family, the Patni family, one of the heads of Amazon Pay, and others. And this journey has just started. As I said, we're about 2 months old. We have 150 people, 1,000 people signed up at an acquisition cost of under 5 rupees. I got into this, my background was in international development. I used to work with the World Bank and UN agencies in different low-income countries around the world, and then figure out that the answer to, for all the poverty alleviation efforts in the world, if you just compound people's savings faster than inflation, then they're going to have more money at the end. And we're excited to build a strong consumer brand, that if in 2022, what SBI was in 1950, right? If we can build as strong a consumer brand for a new to formal finance segment in 2022, then we really hope that Mool is what that looks like. And I'll end with just one video, if you could play that. That'll tell you a little bit more about the types of customers that we engage with and how broad that spectrum is. Thanks so much for your attention. Happy to take any questions.
So in terms of the banking, where does the bank account actually go? Which bank? Is it SBM Bank?
It's SBM Bank, though those accounts actually lie at HDFC. Through SBM, because HDFC is the processing partner and actually holds those accounts. So the IFSC code for our accounts is an HDFC IFSC code. I think it's just because SBM is a newer bank, so HDFC does a lot of the collections and processing for them. Our banking partner is SBM. We open SBM savings accounts. And SBM has a partnership with HDFC. Great. All right. Thanks so much.
Thank you, Mr. Nair. Give it up for him. And with this, we conclude the product showcase for this particular session. Up next, sharp at 2 p.m., we are going to have yet another workshop. If you would like to come back again, you can always scan the barcode and have a look at the agenda as well. So that's about it. Thank you so much for joining in, and hope to see you all soon. Thanks. address the topic for his presentation. We're going to do a quick workshop, Central Bank Digital Currency, a Global Perspective, and this is Mr. Vikram Pandya, Director of Fintech, SP Jain School of Global Management. Thank you for your patience, sir, and over to you.
Thank you. Good afternoon, everyone. And I know that this is the session just after lunch, so just making sure that you guys will stay awake, and this will be more interactive session than any of the other sessions that you may have so far attended. The idea is that this topic looks like very boring, right? Central bank digital currency. What is that I am supposed to do, given that it is something which central bank will do? And in India also, if you logically think about it, initially we will be having not the retail CBDC, but the wholesale one. So why even I'm directly bothered as of now? But the interesting part is that, remember that opportunities, as soon as you know about them, better it is for you. And second thing is that whenever you are looking at the growth of the market, it is slow and steady step towards that. So once you start understanding this space, it allows you to look at the global opportunities, not only Indian opportunities, given that CBDC is global in nature. And it is the framework, concept, the architecture that we are going to discuss. So very quickly, setting up today's agenda, in next 1 hour, we are going to cover what CBDC is all about, what is that you are supposed to know about CBDC. Second thing is that how CBDC may impact you guys, and then what are the opportunities within that. Then, not only in India, across the globe, what are the different frameworks, architectures, implementations, POCs which are done. And finally, concluding with how can you design, right? One CBDC, if let's say you are working with regulator or working for regulator, how can you design that we can identify, understand the opportunity there as well? And what are the concerns which are there, which you should be aware about as a citizen, as a user of that CBDC? Ultimately, you are going to be impacted. So this is the agenda today. And the interactive part will be that we will look at some of the live examples, and I will be asking you questions on what are your views on some of the things and why. So we will ensure your inputs are covered, and questions whenever you have after a concept is covered, feel free to raise your hand and we will discuss about your questions. So with this, let's begin. First and foremost, a very simple understanding around what is the CBDC all about, right? What exactly is the CBDC and how do you see CBDC working in current environment? Very quickly, a summary of how fiat currency works, you all know. So I don't need to explain in detail, but to understand that rather than doing barter with commodities, you are trying to identify, okay, what can I create which can allow universal acceptance, correct? And that is where the fiat currency comes into picture, that is backed by government and you have the trust. The majority people can trust today's fiat currencies because you have government trust. When the ecosystem is changing and you can no longer trust the government, at that point in time, you look at the second option. Can I look at something different, right? So you have seen countries like Zimbabwe where the inflation is so high that you can't even trust on your own local currency or government. And that is the time when people start asking this question that what can I do? But at the same point in time, while you have alternative digital currencies which are available in the market, you can't still have a proper functioning economy unless until everyone is accepting or trusting that single currency, right? When we think about local and then go global, from local to global journey is very difficult even when we talk about fiat currency, let alone digital currencies and central bank digital currency. So within the current ecosystem, just to divide this into two parts, you have first set of people who are looking at CBDC as a new opportunity, while others are looking from challenge perspective. They are skeptics. very quickly understand what are the benefits and what are the challenges that you might see, right? So this is nothing but digital representation of fiat currency, but directly issued and managed by central bank. There are no intermediaries directly involved. In India, what you will see as an architecture, for the wholesale it will be different, and for retail it will be different. I'm sure many of you are aware about RBI's retail platform for the investor, right? GSEC and other investment around the T-bills you can directly get from the RBI website now. So that is what you can compare this with. There you don't have an intermediary, you don't have banks involved there, you are directly going to RBI platform and getting security, government security, and the same concept you can imagine here, where you are approaching RBI and you are getting the currency directly. Now, what are the implications of something like this, right? Because end of the day, you go ahead, you get the currency in your account. In India, it will be account-based system, which we will see later how it works. And in some of the countries in the world, you have one token-based system, which means that it can be stored in a wallet as well. Here you have account-based system, which means there is a specific account that you will maintain. Very quickly, dividing this further into two parts of how the CBDC can function in country like India, where you have majority of the people who are not even currently able to use technology, right? They are not clear about how to use technology. But the good part is that with UPI, we have seen different channels of digital payments. Not only a simple net banking, but you have now, as you may have seen, UPI Lite, UPI 123, USSD, which was created for feature phones specifically. So you have multiple channels around how rupee can be used even from the pure digital part. Tomorrow, when the CBDC goes live, in India, you will further see that some of these different features and channels that you today see will be combined together. To give you an example, e-rupee. E-rupee is an instrument. It is an instrument which allows you to make a conditional, person-specific and purpose-specific conditional prepaid voucher, correct? Which means that you go ahead, you try to use it for some other purpose, it will not allow you to use, because the issuer, currently who can be only government or corporate, can issue this e-rupee voucher, and it can be utilized for a specific purpose at set of merchants only, okay? And here when you think about how this will benefit overall in future, CBDC by nature will have one smart contract layer if it is on DLT, which is distributed ledger technology. Or even if you don't have DLT, let's assume it is a traditional system without any decentralization, still you can have a specific condition-driven layer which can allow you to integrate with multiple different use cases. To give you a couple of examples here, let's say that today when you are trying to issue an invoice, GST invoice, right? The major issue that country faces that GST invoice, the moment you issue, next month, by 28th of that next month, you are supposed to make a payment. So it creates working capital mismatch and you need to borrow, right? Unlike that, in CBDC world, what you can do is that you can directly deduct payment whenever the actual payment happens. Why? Because the invoice itself is in this CBDC, which can be smart enough to understand that the payment is now being made using CBDC and I need to collect this much amount as GST, or I need to deduct this much amount as TDS. Based on the settings that you once do, those things can be automated. So that creates that condition-driven layer, smart layer. So you have another advantage where you have monetary policy and fiscal policy are getting more effective. When we think about it, today what happens, right? There is a delay in transmission of monetary policy. You have RBI in so many meetings that they have mentioned, right? And if you remember, earlier RBI had base rate. Remember, you had base rate in India. Then they changed the base rate to MCLR. Why do you think that happened? Because even after base rate, even before that there was a PLR, prime lending rate. Even after base rate, the monetary policy transmission was not happening as effectively as they wanted. And because of that, they tried to ensure, using MCLR formula, every change that they are doing through the policy rates can be transmitted to the ecosystem as soon as possible. Here, given that it is directly connected with central bank and there are no intermediaries involved, you can have 100% transmission of monetary policy, fastest way possible. And because of this, you may see impact of policy much more apparent and effective. Fiscal policy, how? Because people may think about CBDC directly linked to RBI or central bank, but even fiscal policies you can effectively monitor. How? So we discussed about the conditional payment or conditional outcomes when the payment is happening. Now let's talk about conditional payment itself. Fiscal policy, you can have use case driven benefits, correct? You may have seen that government is doing away with Chapter 6 deduction. You may have heard about that, right? So when the Chapter 6 deductions are going away, how can you incentivize certain policy? Fiscal policy, today you require someone to ensure that those policies are as effective in the final intended outcome. So here what you can do, you can have those fiscal policy embedded as a part of your payment. It is a payment outcome driven fiscal policy implementation that you can do. And that can create another level of opportunities for everyone involved. And this ecosystem can thrive and survive given that it is government backed and you will get output very quickly there as well. So same thing as I mentioned. And finally, cross-border payment. Cross-border payment, why? Because end of the day, it is of no use unless and until you can replicate current system which allows you to trade across the country. And in India, you start with CBDC and that CBDC should be interoperable with the global standards. So we'll start looking at how it is going to work, how things can work out within the ecosystem. And very quickly, I wanted to highlight what is the status, but we'll discuss more in detail about how many countries are working on CBDC, what is that they are doing. Very quickly, retail barometer, what people think about CBDC in different countries based on the survey taken, latest survey taken. And you can very clearly see that almost all the countries in average, if you see the first column, none of this I would not consider using a CBDC, 23%. But Germany like country where GDPR is more prevalent and they are more worried about security, privacy, control, you can clearly see that number is much, much higher. Similar in US also, where you have privacy concerns, where you have people who are thinking about how government will misuse the data, misuse the authority, there you will find the reluctance in acceptance of this entire model. Another point that I wanted to make out of this chart is that there is a trilemma effectively in implementation of CBDC. Number one, if you want to control and trace, then the acceptability becomes an issue. So if you want to control and trace, effectiveness also becomes an issue. At the end of the day, if you don't control or you don't trace, what you wanted as an outcome sometimes may not be achieved. So at one end, you want acceptability. Second, you have effectiveness of the entire solution. And then third, you want to track and trace so that you can identify terrorist funding, you can identify some unproductive utilization of resources, direct benefit transfer. So all those things that you are normally looking at, how can you track and trace? All those issues are there. And this trilemma is going to be very difficult to handle in case you want acceptability across the nation, not only in India, not only in few countries, but across the globe. So what does that mean? Does that mean that it will not be possible? No, that is not the idea. It will be possible, but it will evolve over the period of time. And people will always start with some suspicion, and that will go away as and when it becomes more transparent. You have governing standards, and in India specifically, if you look at, right, Once Data Privacy Bill comes into picture, which is Personal Data Protection Act, once that becomes effective, you will definitely see either a special carve out from the bill, or you will see some specific mentions around CBDC, how it will be handled. So that is what we see, given that India is going to launch wholesale CBDC by 2023. So let's think about how the structure architecture works, and we will take example of certain questions to look at the design of CBDC. So before you implement, as RBI or any other central bank, before you implement CBDC, these are the 5 questions that you ask. Why? Are you implementing to track and trace control, or are you implementing it to increase the monetary transmission pace, or are you implementing it just for the PR value? There are many projects which we have seen across the globe, banks doing some blockchain related stuff. It is a pure PR value for them. They are not serious about it, but that will fail. It will fizzle out. So you need to understand why you are doing it. If you are doing it for long term, take your time. No need to hurry. Look at the POC. We will see one live example of Project Ubin, which has done great amount of work under the POC, where over the 5-year period, they had gone phase by phase and implemented wholesale CBDC effectively. Second, what? Refers to type and model of CBDC to be eventually chosen. Now this we'll see what kind of type and model that you can choose, but architecture wise, there are 2 architectures that you need to worry about. One is operational architecture, and second thing is technical architecture. Operational architecture is more critical, given that technology a vendor can handle. You can ask vendor to handle technology, but operational architecture is your baby. As a central bank, you need to identify what level of integration that you want with the ecosystem, who are the participants and how they will participate, what level of access control that you want them to achieve, and those things are going to be very critical when we go ahead. Where and how? Sometimes, as I mentioned, you want to start with POC. You can't have a big bang. If you have a big bang, then most probably it will not be accepted by majority of the people, because you don't have education, you don't have people understanding what is this all about. So majority of the time you have to start with some POC, look at what are the results, and then you start with the big bang, right? Then how? How will you implement it? Is it going to be account backed, or is it going to be a token backed? If it is account driven, then who will have authority over the account and how the account will be handled? Is it going to be a wallet driven account if it is a token, and who is the custodian of that wallet, right? Is it a custodian driven, or is it a non-custodial? Those are the questions. Then who are the participants, as I mentioned, and all these things once you identify, then you are deciding on the architecture. So what kind of architecture you may end up with? CBDC architecture, one is indirect CBDC, which is synthetic 2-tier multi-sale. Now here very quickly we'll understand. One, the CBDC's claim on an intermediary. So here you have intermediary involved. You have central bank on the leftmost side, and then you have CBDC bank X, Y, and these are the banks which are part and parcel of this ecosystem. And then you have merchant and customer who are part of banks. This is the model which is useful for retail CBDC typically, where you have a indirect CBDC model through intermediary. Okay. Second one is direct CBDC, where central bank is dealing with merchant, customer, and this becomes your direct CBDC model where no intermediaries are involved. And then you can have hybrid model where you can create a specialized approach, similar to how payment banks are created, similar to how a special purpose intermediaries are created. You will have an option to use ecosystem to distribute, but people can also come to you and get it, right? So CBDC can be hybrid as well. In India, I personally see that for wholesale it will be this, direct CBDC, and for retail it will be this. That is what I envisage, and given the talk that we have seen in public domain, given the discussions which are happening, these are the models which we may end up with for wholesale as well as retail. Globally also, if you look at US, most likely they are also going to do the same thing. Singapore, same thing. So now we are coming to one such project called Project Ubin by Singapore as a case study to look at what they have done, right? How they have done it, what they have done. And I'm going to very quickly show you different phases of that project. I don't know whether it is visible to everyone, but you have phase 1, which started in 2016. Okay, this was the phase 1 which started in 2016, and that phase was around how to tokenize SGD. And as you can use this word, you can understand the word used here is tokenized. So it is a token-based approach and not the account-based approach. Okay, it is a token-based approach. In India, we will see account-based approach. We will not see token-based approach directly. And when I say token, it is similar to how digital tokens work. You will have a wallet where you will store this. It can be a public wallet, custodian wallet, non-custodial wallet. Then they identified the ecosystem players who will work together. So all these players were identified. And a consortium was created which started working on the implementation of the project. This was the phase 1 and it ended after 1.5 years. So then the initial use case started as a phase 2 where RTGS, which is real-time gross settlement as you know it, and RTGS system was envisaged, and in India also same thing is going to happen. As you know, wholesale CBDC in India, when we start, same thing will happen. We are not going to look at retail use case as a first use case. We will exactly have similar model where RTGS will be explored and we will see settlement happening on a real-time basis on DLT through CBDC. Here, banks will not be involved. For India at least, that's what we have seen in public domain for wholesale. So there you had several banks which were involved. Then you have, so all these technology partners were identified, phase 3. Under this, capital market use case was taken, phase 3. Delivery versus payment, the settlement, etc. was taken as this phase, and just started in 2018 and ended in 19 when the COVID hit immediately after that. So after this phase, phase 4, when it started, right? It fortunately started in November 2018, but when it really got implemented, it took much more time. And cross-border payment and settlement, when this use case came into picture, you had so many players already working on CBDC internationally, interestingly. We'll see how many players are today working on CBDC. But because of this, Bank of Canada, Bank of Thailand, all those different banks were in talks to look at the interoperability. And that got finalized as a part of phase 5, enabling broad ecosystem collaboration. This is where MCBDC bridge with BIS and UAE was created. And this bridge allows for the interoperability of various central bank digital currency. So these were the 5 phases which Project Ubin used. Fortunately for us, we already have good amount of learnings that we have seen in the ecosystem. And when India is implementing, we can use certain parts from whatever others have done. Like MCBDC or even alternative to interoperable bridge that we are trying to create will help our position overall. Let's look at another part of it, which is on the technical architecture. Many people may want to know about how the technical architecture may work, right? So this is the simplest way you can see the entire architecture. You have these activities as a part of CBDC: issuance, transfer, redemption, conditional payment, and reconciliation. If you have a smart contract, these are the things that you can go through. As you can see here, you have a multi-currency blockchain-based payment network. Project Ubin was built on Quorum, JP Morgan's DLT, which in fact is derived from Ethereum. Now, when you think about this, you have key management. Here is when the HSM comes into picture, hardware security module comes into picture. And you have new opportunities here. Those who are IT vendors, you will find good amount of opportunities because you will require UI architecture. This is not going to be a small one, right? Then you have gateway, and this gateway, and this gateway, right? Here you have a payment channel, and this gateway is around the UI, UX, and APIs. Both the gateways will allow for the interoperability within the country. Understand the difference here. This interoperability is within the country. And when you connect with MCBDC bridge, for example, then it will become interoperable across the globe. In India or in Singapore, when you are trying to integrate, this is what you end up with. You have UI, UX, and APIs, which is allowing you to integrate with the system. And this gateway is across the channel, payment channel that you are having. It will allow you to become interoperable. But at the same point in time, this smart contract architecture, which you have here, will allow you to work with the smart contract network, whatever Ethereum or Polygon or let's say R3 Corda, whichever bridge you are using or framework you are using. At the end of the day, it will allow you for the conditional payments. And this conditional payment, as we discussed, can really change. You can have a fiscal policy implementation via payment. You can have even the collection via payment. So taxation can become integrated as a part of payment, as we already know, but much more effective than what we have today. Even operationally, it will be less costly, given that you are not supposed to do any other compliance. Everything is payment driven, right? You don't need to file any forms. As simple as that. Everything is covered through invoicing itself. And today also, you know, under UPI, you have a feature. Under UPI 2.0, there is a feature called invoice in the inbox. Okay, under UPI 2.0, you have invoice in the inbox as a feature. And this feature can be extended to CBDC, and it will become invoice in the inbox, pay with CBDC. And once you do that, this entire thing can be interconnected, and you can have much more robust ecosystem where the cost of compliance goes down, your effectiveness around collection goes up, and the cost of even checking the compliance, not only you doing the compliance, but for the government, cost of making sure or ensuring that you have done the proper compliance also goes down. Okay, so this can create huge operational efficiency across all the participants' entire value chain. Coming to some of the use cases which were useful using the Project Ubin. Under capital market, under private equity, one exchange created private exchange to facilitate trading of equity, OTC market basically, right? This is what they did. Then they have done another private equity around the iStocks. This is the issuance, custody and trading of digital securities, bonds and debentures. This we will see one more time when we cover Germany's example and Eurobond example. They also have done this same thing. Syndicated loans, both primary and secondary syndication they have done, and they have achieved this latency of less than few milliseconds to make sure that it is robust system. Multi-stage investment and disbursement of the infrastructure asset, and then finally cross-border settlement. These were some of the use cases in capital market. Similar to that, you have use cases in trade finance. I will just summarize very quickly. It is divided in two parts. One is documentation of supply chain, and second is around the settlement of supply chain or supply chain financing itself. And finally, you have use cases around insurance, where using the smart contract, you can do the entire life cycle management of healthcare insurance claim and sharing the information. In India, interestingly, you have ABHA, which is National Health ID. And this National Health ID is already getting integrated under SSO with Meri Pehchan. There is one SSO which we have created called Meri Pehchan. This, once we do CBDC, can get integrated directly with this the platform that we discussed, and this entire thing can work seamlessly. Beyond financial services, in media and advertisement and salary payment, it was used. Okay, coming back to some of the other projects which were popular. Right? So MCBDC Bridge I mentioned about. So it was in September 2021, last year itself, when Thailand, Hong Kong, China and UAE came together with BIS and released the report. And this M-Bridge project now is on phase 2, where entire CBDC landscape will talk to each other in a standardized format. Similar to ISO standard, they are trying to create a way in which you can communicate across this different CBDC. This is mainly for wholesale, not for retail. As we know, for retail you have different complication for different countries. Country like India, you have very different landscape in retail CBDC versus someone like Singapore, for example. Right? Much smaller country, much less complexity. And if you look at, let's say, UK also, similar example, right? Same. So you can compare Singapore with UK, but you can't compare India with them. Now, Project Dunbar. Here, Australia, Singapore, Malaysia, and South Africa, with BIS again, they began exploring international settlement through the blockchain. And here, same, multiple CBDC were used, and they were trying to look at how it will scale up. The result was that scaling up was a challenge earlier, but then under the new architecture, they were able to scale up rapidly, and that was the main outcome of this project. Similar to that, you had multiple such projects, but to give you some summary, here you can see all these projects were wholesale projects, right? None of them were retail. And the only reason why you have not seen this retail right as of now is that all these countries, it is a multi-country project. And all these countries can come together only when you have a common ground. And the value-wise, when you look at value-wise, highest transaction amount will happen in wholesale, not the retail. So few more projects that I wanted to highlight. All of them are wholesale, right? Just wanted to mention that everything is around wholesale, given the reason. Okay. There are few more comparisons across different countries. What is that they are trying to achieve? What I will summarize here is that the main component, right? What was the main motivation when they started? And then when you look at whether it was interest bearing or not. So apart from one country, none of them you can see is interest bearing, and you will not see 95% of the countries in the world going for interest bearing CBDC. Can you tell me the reason? Why do you think interest bearing CBDCs may not work? Anyone? You get interest on your savings account. So why do you think even for retail project you cannot have interest on CBDC? If you do, what may happen? Logically try to think what may happen if you have interest on CBDC. That is a side effect. Come on, just attempt. There are no marks for this. Sorry? Currency creation, that is fine. Today also you are doing, let's say, cash printing. You are just replacing that. It can destroy entire banking system. Why? If you are getting, understand this thing, right? If you are getting from the government themselves interest rate, on cash equivalent, correct? Then why will you keep it with the bank? No, but if you are saying with the bank, if you do, then it is different. If it is through intermediaries, right? I'm saying that CBDC by default will never carry interest. Understand like this then. If the CBDC is having interest, then the normal deposits will not be there with the bank, right? Then the normal deposit will not be there with the bank. You are always taking lower risk with government than the bank. You agree? So, even if you give 3.5% interest vis-a-vis 5% interest, many people may be interested with government, right? Why would I even worry? So, never ever you will see majority of the countries going for interest-bearing CBDC. And this creates a challenge, right? Because end of the day, interest is what people think you will get when you are talking about account-driven CBDC. But no, this is where you need to remember, interest-bearing CBDC will not exist in most of the countries. Then, what are the limits on holding and transactions? Do you have any limits? As you can see, Bahamas and under Caribbean islands, you have some limits. And what are those limits all about? It is around how much you can hold and for how long you can hold and how many transactions you can do. That was the limit that they had implemented. And why they had done that? Because you can stop holding in a way, right? That was the idea. In India, you will not find such limits initially for sure. And even if you find some limits, it will be around the end use for the DBT. So you may see classes of CBDC in future in retail. And you can have a CBDC type AB, for example. B is for DBT only. So whatever you get in e-rupee, for example, is a precursor to that, where the CBDC can only be used for certain purposes. And class A is, let's say, without any restriction, you can use it for whatever purpose you want. This will become the future reality. Similar to that, Universal Basic Income, UBI. You may have heard about this in multiple debates and whether to give UBI or not, whether it increases efficiency or not. But when you think about this, Universal Basic Income is a concept which will be required as we go for more and more automation. You have people who are getting obsolete, and then you need to make sure that some sort of tax is there on the technology to support these people in future, because you cannot really train the workforce as fast as the technological changes or improvement, right? And because of that, you will need to do something. And in future, you will see many countries in the world, they have tested UBI, and CBDC can have another category for UBI, where same thing you can do, that you can have the use case driven approach, and those things will have a different architecture, a completely different architecture around how you can track and trace, how you can do certain things. So this is the future that I foresee. Currently, as of now, we have not seen people directly using CBDC for UBI, for example, but in future, we will see that. Similarly, offline usability, you can see a couple of countries are providing that. In India, we already have seen initial push towards that offline payment mechanism. RBI, under the first sandbox cohort, regulatory sandbox cohort, which was on the offline retail payment, they have already tried and tested some of the offline methodology. And you will see CBDC in India may go for offline methodology as well. So this might be true for India. Okay. Then we have international access. Initially, we will not have, in my opinion, it will take some time, but under phase 2, as we become interoperable, we will have international access. And finally, most probably, while India is right now, as we speak, has not yet finalized on whether to use DLT or non-DLT based, given the advantages that we have on DLT based ecosystem, like no requirement of reconciliation, you have better tracking and tracing finality. In my personal opinion, they may end up using some sort of DLT mechanism. But as of now, nothing is finalized. That's what I know. Okay, coming back to the next part of the point where you have some examples and some tools. So very quickly we'll see a couple of demos and try to understand. This is in Thailand and Ghana. This company has implemented in Thailand and Ghana. There is no sound as such. You can just see this and understand how it works. So this is the prepaid card-based CBDC, card-based CBDC approach. So this is a dual offline. There is a wallet on your smartphone. UPI Lite is already there in India, like you have wallet on smartphone. And in phase 2, as we know, UPI Lite will also support offline payment. This is the offline. And people say dual offline because you have one, just to give you some context, right? You have one type of offline, which means without internet. You still require network, but it is without internet. So people say that also is offline sometimes. But here you have without internet and without network, both dual offline, right? That is what they are referring to. And this can work with two different technology. One is Bluetooth and second is NFC. But here, yeah, RFID, that's what they are using. But NFC is RFID technology only, by the way, just for your information. But another one is data over sound. Okay, NFC, RFID. Okay, done. So that was one example. This was a token driven as well as account driven. It can be anything. So this company implements that. And just to give you one example, right? This is the complete picture over where all are standing today. You have overall 112 countries, 11 have launched, 14 are piloting, 26 under development, 47 under research phase, and 10 are inactive or not publishing anything on that, to have cancelled completely. And those who have cancelled, so learning will become why they have cancelled it, right? For example, Singapore has clearly mentioned we are not going for retail CBDC as of now. Why? Because they were looking at the acceptability of CBDC in retail, and they realized that we already have enough payment instrument and channels in Singapore that CBDC will not add any additional value in retail. But for wholesale, they realize that there is a value. So they have outright said that we are not going to use CBDC for retail as of now. Similar to that, some of the other countries which have denied CBDC, same concern around, let's say if today's government is good, but what happens if tomorrow's government is not good? And what if they decide to track and trace or put some features which are against the privacy rights? And that is when they decided that it is way too much of a risk for people to go ahead with this architecture. That is the reason that they have cancelled it. And those who are already working on that, under development, right? You can see India is also under development. And now this will change. US, as you know, by 2023, they also are going to launch their own CBDC. And they are working on this actively. I don't know about US, but I can tell you India may do it by 2023, definitely. CBDC in US, once it is live, it will also have additional feature around the use case of CBDC in healthcare. It will be HIPAA compliant in some of the cases, how to make sure the privacy, etc. in the healthcare is preserved when the payment is made. So those things are being taken care of, and the framework they have launched and accepted very recently, as you know. Just to give you an example, you can also go through this later. These resources and links are provided as a part of PPT. You can go through them. So the idea here is that what are the use cases, and it is account driven. You can see access is account driven. Right now, we are looking at first wholesale, but later on we may look for retail as well, which we have communicated. Underlying technology, while it is written both, it just means that it is not yet finalized. They are considering both, right? Whether it is DLT based or non-DLT based, they are considering both. Let's look at summary of all the major projects. And this is like complete list of all the different countries with the technology. This file also will be provided to you later. This gives you complete in-depth overview of what are the technologies used by which country. I will just show you there are 27 out of 112, 27 countries which have selected DLT by default, okay? And these are the countries which have selected DLT. Yeah. Australia, Austria, Bahamas, Brazil, Canada, France, Japan, Kazakhstan, Sweden, South Africa, South Korea, US, UAE, Vietnam. These are the countries which have selected. Out of 112, 27 of them have selected DLT based approach. Okay. And when you look at company which is working with them, here in Switzerland there is a Jura company. I will give you a couple of solutioning how they have implemented and what they have done, right? I just wanted to highlight what they have done so far. And yeah, what is the account structure? So out of all the different countries, there are only few of them who have opted for both account and token. Like hardly 2 countries, Sweden and Canada, where you have both account and token driven. So in India, definitely it is account driven, we all know that. But there are several advantages of even token. And what is that advantage? It becomes interoperable with the digital asset ecosystem, which is otherwise not possible if you don't have token driven approach. If you just have account driven approach, then that requires another middleware for you to work with the digital asset ecosystem. Okay. Any questions so far before we look at some of the other examples? We have 5-10 minutes here. Yes. Sure. Yeah. Swift is different network itself, right? So what we are saying through the interoperability of channel, payment channel, you saw that? Just to bring that diagram again. So if you refer to this diagram, you can see payment channels, right? On this side. Payment channels. This will be part of that, channels. Swift is also one of the way you are making payment, whether it is international payment or domestic, doesn't matter, it is just one of the channels. So it will become part of it. This will connect here. In future, it may consider. Right now, Swift is not carrying CBDC. Yeah, so I'm saying that is the reason you are creating this new architecture of interoperable CBDCs. If Swift was already supporting, you don't require that architecture separately any which ways, right? So in future, if whenever Swift is doing that, you will have a interoperable system there.
Okay, and the second question I had was about the interest payments on the CBDCs. If there is no interest, then why would anybody, institution or retail, hold the CBDC overnight?
Okay. Look, CBDC is replacing cash. Do you get interest on cash?
But it's still central bank. I mean, yes, I agree. No interest on cash, right?
So
Yeah.
that is what I'm trying to say. What is the message, right? Are you planning to replace cash or are you planning to replace deposit? That is the fundamental question. That's what I started with. Why you are issuing CBDC? If the purpose, and everyone agrees that the purpose is to replace cash effectively, and if that is the purpose, you should never ever even think about it. Otherwise, it will replace deposit. That is the simple answer.
No, but I just want to just take that one step further. If you hold CBDCs in your account,
yeah,
then whether it's with the bank or with central bank, you will still not get any interest on it.
No, that's what I believe. You should not get. If you get, then you have incentive in a way to replace the deposit. You understand one thing, right? Can you lend out of CBDC?
As collateral, maybe?
No. So that is the idea. So if you are, understand the fractional reserve system. You are saying central bank is issuing this, and then fractional reserve system will indirectly bring that back to the central bank. That is not what you want. You understand how the fractional reserve system works, right? Let's assume that you have 5% CRR and 20% SLR, which means that you can only deploy 75 rupee out of 100. And that you can keep on deploying as per the systemic multiplier, correct? So as long as you start with 100, you can deploy 75. Then you start with 75, you can deploy 25% less than that, right? You can continue that, and maybe you will end up with, let's say, 3x multiplier of 3x. That you can't apply here. You should not be able to do that. It has more economics than the simply mathematical issue.
So it's like holding cash in a safe box, deposit box.
That is what it should be. In my opinion, CBDC should be that. You can see it is not like that there are none of the countries who are doing this, right? We saw that there are a few countries which are doing it. But for a country like India, which has very complicated architectures and different states are involved, right? It will not work. Yeah.
Just a follow-up to the questions that you were asking. It's very, very helpful when you're answering it. I just wanted to understand how will CBDC replace wholesale cash in India? I mean, how would that happen? Is something which I'd like to.
So the idea is that when you look at wholesale payment, right? RTGS when it started, just compare with RTGS. We will not talk about anything else. Just try to see RTGS. How RTGS works today? You have bank balance, current account. There also you don't get any interest, for example. Current account you have some another current account and you are transferring money, and you have directly a system which allows you to settle immediately, correct? That is what it is. Now you have intermediaries here, like banks, which are involved. But when you are talking about CBDC, without intermediary, you are transferring CBDC between two participants, right? Who can be a Reliance and Tata, for example, correct? Now when you are transferring this, it has much more advantage. The cost of that transaction is much lower, almost negligible. Second, because it is backed by government or central bank directly, you don't have any issue on the settlement as well as reconciliation side at all. You don't need to do anything on that side. It is DLT as well. So that creates that operational efficiency in the ecosystem. That is number one. Second, the main idea behind every CBDC that you look at is in future interoperability. Today, when you are talking about international payment, the cost of that payment transaction that you have is very high, and inefficiencies are also very high, right? But if you look at Forex as a business for the bank, is material enough. It is not immaterial. It is a huge business that you have, right? So, in my opinion, the balancing act will be required when we talk about the international payment, how it will be carried out. So far, I'm very clear about the domestic in India at least, how it will work. But international, we will need to wait and watch, because given that it can be programmed or it can be condition-based, you can have capital account versus current account, implementation of CBDC separately, correct? And we will need to wait and watch on that area. But at least clear on the domestic side how it will work. It will just replace RTGS system with more efficiency and lesser operational overhead for everyone involved.
Right. So it's replacing RTGS. It's not replacing, not the
And
cash.
in future,
So
once you use that as a system, right? Once you open up API, you can allow fintechs to come and create supply chain based solution, right? That fintech will take care of. What to do with CBDC will be taken care by fintech. Similar to how UPI was released and fintechs figured out what to do with UPI. Yeah.
So India had attempted demonetization some time back, and the idea was to get rid of informal economy, ensure better tax compliance, etc. So if we are to assume that Reserve Bank of India is to, let's say, offer 10 basis points, right, or 25 basis point on the CBDC deposited, and that would ensure that there is incentive for, this is essentially a surrogate for physical cash.
Negligible, that is fine.
But people who hold
negligible
cash,
is fine.
So why can't we attempt having a because
that,
it incentivize.
that may even happen, I'm saying. Negligible like 0.5 basis point or 0.5% or 0.2 basis point. Yeah, those things are fine.
We can essentially ensure that this larger value denomination of
20, 50 basis point is okay. That we may even do.
Exactly.
But I am saying that you are trying to incentivize people over cash, but at the same point in time, there is enough incentive for them not to replace deposit.
And there is also cost in managing currency. You need to print it, transport it.
Correct.
So obviously this 25 basis point will possibly kind of offset
currently,
that.
if you look at per basis point, right, it is 60 to 80 basis point of overall cost of the circulating currency in managing your entire thing, right? So any which ways you are saving that out of, if you will not save everything, you will save maybe 30, 40 bips. So 50% you are saving. You can definitely pass on the remaining one if you want to. But as of now, none of the discussion paper outlines that. So I am very skeptical on that, but you can do that.
Okay.
Architecture-wise and design-wise, it is a good practice to do that so that people can use that. Definitely agree on that. Any other question, anyone? Yeah. You can pass it on to him.
So I just voiced out.
No, I think for the recording purpose, I can hear everyone by the way.
Yeah. I think one question basically in terms of the success rate based on the studies that you've highlighted, was there any failure rate that was identified during the studies of CBDC?
When you say failure rate, what kind of failure?
Failure rate is basically when you have transactions which is happening either through distributed ledger or any other means. There are chances of transaction not happening or failing.
You are talking about technical failures, right?
Yeah, technical failures basically.
There were many. That's what I said. In one of the projects, scalability was an issue. So they had to work with the revised architecture for scalability. Those kind of problems we have seen. Another problem was around, let's say, diverse systems, right? So they had to, again, rework their architecture for working with different architectures and systems. So those were the challenges which were seen. But failure, when you think about, this was a POC in a way, right? And wholesale, for example, everywhere we have seen wholesale. So you will not find acceptability issue as such there. So that kind of issue will not see. But technical issues were there, definitely. That is the reason everyone started with POC. You want to understand which is working, which is not working, what is the fine-tuning that you require for the system to go ahead. So all those things they have tried and tested. So all these systems which are there, in fact, there are 100+ pages of white paper for every project. So if you really want to get deeper into that, you can go through each and every white paper which they have published. Even with BIS, and there are independent countries who have published their own white paper on what they have done, how they have worked. Just to give you one example, Ghana. That example which I have shown you in Ghana and Thailand, they have also seen this, right? So there, they have tested both retail and wholesale in Ghana and Thailand. So what was the outcome? Same thing, that people were skeptical in terms of what to do, how to use it. Training-wise also it took them some time. There were operational issues there. Those are different again. So POC-wise, there are issues, then you are having technical issues. But definitely in future you will find those things are ironed out. Because ultimately POC can't give you the real world scenario, definitely. So you will have new issues emerging as you really implement, right? It will be figured out over the period of time. It is not a one-day journey, nor it is going to be a one-stop journey, right? You need to have a continuous iterative process. Identify issues, try to create a roadmap of how you will prioritize, which issue to prioritize. It will take some time.
And will there be any speculative thing which currently happens in other crypto-based currencies?
No.
Will there be any part of that? Because it's not really backed by any
It is backed by.
It's backed by central banks, but yeah, no, not anything.
It is backed by similar to. Just think about it. You are replacing cash, right? What kind of speculative things you can do with cash? Nothing as such. Speculative as such, right? Here, in fact, it is more transparent. So you will not even have illegal things directly happening, not easy to do. But if you want acceptability, as I mentioned earlier, and you want to really keep it anonymous, then you can have several other issues. But still, it has that track record and recording of the transaction, immutable data, right? So that will have even more benefits. So you are looking at benefits when compared to cash for sure. But yeah, if you want to have illegal activity, etc., that is not possible directly.
Just trying to understand, will this change in any way the dynamics between valuing currencies and the volume of currency in circulation? Long term, not right now.
Long term, it may. Short term, no. But long term, why it may? Think about that, right? So if you really look at some of the currencies which are getting more global acceptance, let's say, right, that trading or quoting of that currency, today you have one market. If you have token-based currency, for example, you will need to have definitely two separate markets which will be interlinked. So there will be new arbitrage opportunity, number one. And second, because of that circulation and volume and value both, you will find some opportunity over there saying that, okay, how to value this in this sort of environment, right? Because sometimes the future use case or future amount that you require is hidden today. Today you can't see that. But with this sort of CBDC where everything is recorded, even the future usage you can see. So there will be more transparency in some of the transactions that you may have happening in future. Today it is not there as a market information. So it will reduce the information asymmetry further. So definitely you may have a different value attached to that. And it will also open up some of the opportunities in arbitraging and hedging. Those are the opportunities you will see.
But then where does, I don't know, maybe I'm wrong, but how does that draw the line between, say, the concept of just printing money and this?
So printing money, understand this. Printing money is one activity where you are generating exchangeable instrument, as simple as that, right? Now, whether that instrument is physical or digital, the only thing which can be improved here is velocity of money.
Meaning?
Velocity of money, when we think about that, here, because it is digital, etc., you have much faster velocity in principle. And also when you think about on the retail side, right, if you are tracing it even, let's say not at personal level, but on an ecosystem level, you are tracing which use cases it is getting implemented in, you can have a better policy making, which is not possible in cash.
Okay.
Right? Policy making with privacy, I'm saying, not without privacy, with privacy, you can still do better policy making. Just think about COVID, where majority of the money is going. If you can track, you can really use that information to do real-time policy making.
Okay, fair enough, thanks.
Yeah. Yeah, last question, so sure. So quickly we will try to discuss these two questions.
Yeah, so basically I just wanted to know, like, let's say a central bank, any central bank adopts this retail CBDC, right? In that case, how the transition is going to happen? I mean, is it like overnight? Today there is cash and from tomorrow it's
No.
CBDC, or like how the transition is going to happen? And secondly, what if like cash is also existing there and CBDC also existing there? Then how the whole settlement process, you know, like intermediary, there will be banks, and then there is settlement. How that settlement process will work?
In interest of time, I will summarize this.
Yeah.
First answer is that yes, they can coexist, and it will not be a big bang any which ways. You can't do that. We have witnessed that in past as well, and I'm sure we have learned from that. It will never be a big bang. Second thing, it can coexist, as I mentioned, so it will work together. There is nothing which is stopping you from converting CBDC to rupee as well, right? Actual physical currency. So the answer is very simple, it will coexist. So yes, I think we have run out of time. I will catch with you. Any other closing remarks that you have? Thanks for your time today. Bye everyone.
Give it up, guys, give it up. An interesting, very enlightening workshop that we just witnessed. Well, coming up right next is a fireside chat, and we would take 2 minutes for the setup here. So we can break for a 2-minute short break, and the ones who would like to retain for the same, please be seated till we resume back. Thank you. welcome back to Global Fintech Fest 2022-23. We resume back right here towards a quick chat that we are approaching towards 4. And to discuss the same, the topic to be addressed, I think we have patrons still coming in. We are good to start, right? Yes. So we are going to be addressing a special topic here. They are going to, in fact, with moderator Ferruccio that is here. He's the head of Global Business Development, Kalera. And alongside, we have Mr. Ajit Anantharaman. He's the Chief Information Security Officer, Hansa Quickwitty. And alongside, we have Mr. Abhishek Vishwakarma, Head of Business, Banking Products and Digital Business Partnerships, Unity Small Finance Bank. Technology game changers to enhance consumer and customer experiences is the topic, as you can rightly see on the screen. So without any further ado, I would request Mr. Moderator to take it over from here. Thank you.
Thank you for the introduction. Good afternoon, everyone. Let's see if it works properly. So just a word from about Kalera. You know, we enable and we help high regulated enterprises build the omnichannel strategy. So today is not about Kalera, it's about building knowledge and learning, myself and maybe something on your side as well. So I'm pleased to introduce the contribution. So they are the man on the stage today. I'm just the moderator. So Abhishek, you want to introduce yourself, and then Ajit, just a word?
So thank you for getting me on this panel. So brief introduction of what me is. I'm a banker, almost 20 years into banking, and I'm going to bring in the business aspects of how customer centricity is brought in from a banking product standpoint.
Hi everyone, good afternoon. Thanks for having me here. Yeah, so I'm, as she said, playing my primary role is basically Chief Information Security Officer and Data Protection Officer, but I also contribute largely towards enterprise solutioning for MarTech solutions. So technically we both complement each other. So I hope to add some value today. Thank you.
Thank you. Thank you. So the contribution, you understand, it's the great balance between security and business requirements when it comes to customer experience. And well, fintech, BFSI sector is like very dynamic. You can see the various booths, and competition and cooperation are bringing a lot of new technologies, as you know, on the incumbents and neobanks as well. So on this side, what we'll focus on today is what the banks are doing right now as omnichannel strategy or omnichannel banking solutions. So it's funny, or it's interesting how we judge a bank not for the services or the rates, but typically for the customer experience, how the app works, how they contact a customer, or how we can handle issues with them. So this is pretty much the focus. So right now, banks are using and shifting from physical to hybrid to do-it-yourself. What we see in Europe, and why we are here today, is to understand also the Indian specific for my side of the business is really how the interaction are changing, and how business-related, your experience on your customers are choosing the right interaction from physical, digital, and let's say hybrid, where the human touch is always there. So the professional side is important. Abhishek, what you think about this?
So there has been a tectonic shift in how customers view the bank and the banking products, right? In the erstwhile past, it was always physical channels. So people would walk into a branch and try to open bank accounts. Today, it's become totally digital, where the young population wants to open up bank accounts without even walking into a branch. They will use a mobile app and start transacting with it. So there is a tectonic shift. If banking products are created with customer centricity, right, where keep the customer at the center and then try to build the products around it, make it much more user-friendly, and then make it such that it's very intuitive for them to kind of open and transact with the bank. I think that is the future that we are seeing, especially in India.
Yeah, and about your view of your banking customers as a consultant, what you think is the trend or what you are observing. You know, you have incumbents and neobanks that they have different targets, but more or less are copying each other or cooperating in this field.
Right. So essentially, what's happened is, while COVID was not appreciated for the obvious reasons, but it also brought in a lot of technical changes, right? So technology became a big it was adapted in a big way. And now people expect that we continue it that way because we have got used to getting services without putting that extra effort, which earlier we had to put to get the same thing done, right? So the older banks, to your question, the older banks are trying to get more mature in terms of using the latest technologies. Obviously, it's more difficult for them because they have legacy systems and data, and it's a humongous ask to make it compatible. The newer banks are thinking out of box and saying, okay, we don't want to do what a traditional bank was doing all these years. Can I start from a gear 5 rather than starting from gear 0 or 1, which would be how a typical bank would actually start. So yeah, there's a big shift. I think it's good for the end customer. And as Abhishek rightly also said, the entire focus is customer, right, and experience. So there's a lot of focus on knowing whether a customer actually got a good experience. So there's more effort being made to actually take feedbacks and improve the system. While earlier, with the few options in hand, the banks possibly were not so keen, and they were more focused on the revenue part of it.
Yeah, thank you. So digital is the default mode for a lot of customers, I say. Maybe the majority, well, then we can open a discussion on this. But if we are building an omnichannel strategy on digital environments, so which kind of channels the bank are investing on, bringing a seamless experience, a customer journey that is really smooth and seamless? Which channels do you see the banks are using as a communication tool?
Right. So traditionally, we are known to have the old-fashioned way of sending emails, SMSs. Right now, WhatsApp obviously is the new thing, and a lot of new features are coming on WhatsApp. WhatsApp has a high open rate, so most organizations prefer WhatsApp. But then, more than the channel, I think you can't replace an SMS or an email for whatever purpose it is. You still have to use it. But now I think the focus right now is to do more of micro-targeting. So it's no longer to do mass blast. That fashion is out of the way. You are spending a lot of money on deep analysis, identifying the right audience, right, to whom that particular specific set of offer or that message has to go. And no longer it's a fashion of sending 1 million, 2 million, 5 million. I'm happy even if I send 100. But then it has to be targeted and it has to be measurable, right? So the returns has to be like, so out of the 100, I would want all the 100 to actually open it, read it, do whatever that message has to be done. So I think in addition to that, some of the new ways of reaching out to customers, where things like video calling, chatbots with AI, right? Siri. So you just ask a question and you get an answer through it. Metaverse is slowly picking up. So these are the new things. Maybe I'll keep a few for my subsequent questions.
Some secrets.
Okay.
Abhishek, your point of view here, banking stand-up view.
So I think one point which my friend just pointed out and it struck me was that contextual messaging, right? If you blast 100 SMSs or emails to 100 people, you're not sure how many of them are actually going to respond. But if I can contextualize it, for example, if I have transaction data for business, and I can then, using analytics, figure out what is the working capital requirement of that particular business on that particular day. And if I can then on that day send him an SMS saying, hey, this is an offer for you, you can get 5 lakh rupees of loan. The probability of he taking that loan is far more better than just sending out SMSs on the 30th of the month. So that's one point which is picking up very much in India. The second point which I would want to bring in is the omni-channel presence, right? You can't say that I will only send an SMS or I'll only do a WhatsApp message, because the customer could be interacting with you at any point in time, right? He could be walking into a branch. So if he even walks into a branch, the teller should be able to tell him that, hey, do you need a loan today? It seems that you are running short of, say, 5 lakh rupees from a working capital standpoint. Or if he's on the internet logging into net banking, then the messaging on the net banking has to be similar. So the consistent messaging across all channels and then contextualizing it for that particular moment. I think these are two main trends which I think are happening within the country.
Well, thank you both, because, well, I'm happy to hear this, because it's what Kaleida does. You know, we try to build this not only for fintech or BFSI sector, but cross sector. So it's all about strategy. So you need to choose the right identity or preference of your customers or your targets and choose the right channel. Maybe also the right time and other strategies that you can add. But this is really what we are trying to do right now, and well, in some cases successfully. So we're trying to do it also here in India with the banking sector, and this is important. So thank you. Well, another thing that for me and for Kaleida, I represent Kaleida, but I think it's the pillar of the banking sector is how you build trust. Okay, because before physical, you had the handshake. You can see the man in the eye, and you can trust them as a professional and you as a customer, okay? Going on digital channels that typically are do-it-yourself to, let's say, most privileged, what we want to understand is what you think about building trust in this environment. So the first thing that, for me, I think it's important, because it's a trend, actual trend, is how you build confidence on your customer on security. You know, you see commercials on TV or on internet, or now TV, it's old-fashioned, sorry, about trust and security layers on devices, or on, I don't know, other environments. So when it comes to a bank that relates with the customer on a digital environment, how you build this confidence?
So there are many ways to build this confidence. It's a great question. And I think today everyone is focused on the word privacy, right? Everyone is eagerly waiting for the Indian Data Privacy Act whenever it comes. The first thing is to be as clear and transparent as possible, right? So trust is something that we can't buy, we have to earn, right, as we say. So it has to be very clear and transparent, and it has to be something that relates to that customer. Customer's need or area of interest, or the situation that the customer is. For example, if I was to have a very complicated process, you fill this form, you do this, you sign here, but then I'm an uneducated person, right, and with a low income category, will I trust? I may often have to rely on somebody I know to say, okay, should I sign here, because I don't understand what is written here. Or if I have a 5-page privacy notice, and you expect me to go through those fine prints and then understand, and by the time I read the 5th line, I'm all lost, because I'm not from that domain or subject, right? So that is one. The proof of the pudding is actually in the eating, right? So when there are instances, how do you deal with them? How much you cover or not cover? How you actually go that extra mile to prove that, actually we did a mistake, we are sorry, we raise our hands, and we have course corrected it. We assure you that there's no damage done, because we have enough systems in place to verify that fact. I'm not just saying because I want to say it. I have logs and etc. to prove. So my systems behind the scene should be able to actually justify what I say, right? Now, whenever there's a breach or any incident, you have these agencies running behind asking for evidences. Now, a lot of these things come, in the public domain. Now, if I'm able to produce everything upfront and show the right thing, automatically my name gets cleared, and that's how people start trusting me, right? Because of late we have had instances where there have been unfortunate, some of the banks, etc., where we have had certain challenges, right? Now, that must have shaken people, but then I need to build that trust back because you can't paint everybody with the same brush. So yes, we have to have a transparent notice and then follow the principle in actually letter and spirit kind of thing.
So you think that tracking every activity in the more clear displayed way and having all clear is how you build trust. And
you
maybe
need to actually show that
something.
you have ethical ways of doing things. It should not be just on paper, right? And you actually prove it by example, and then it's a word of mouth, and then people say, okay, you know what? I rather trust this bank than something else.
It's so interesting because you relate digitally, but you can make the relationship like very clear because each event or activity is tracked, even more than what you can do in a physical environment, I say. So this is interesting, and this is something that we really focus on analytics and tracking data because these are the target and the objective. So thank you. Abhishek, you on the business, you're more executing and you don't want to deal with the complaints or the compliance stuff, right? Or you need to, right?
So I think my perspective is slightly different on this one. Every technology has to go through its learning curve, especially you're educating the customer on a particular tech, right? So you could spread it out across various types of transactions. Some transactions are very view focused. They don't allow you to transact, but they give you a view of what the data or the previous transactions are. And then as you move ahead, when the customer is educated, then you allow that guy to transact over that particular technology so that then the execution of the transaction happens. So if I'm educating the person from this philosophy of first allowing him just to use the technology for viewing transaction and then moving him or graduating him to an execution of the transaction, I think the resistance level drops significantly. That's point number one. Point number two is when he is actually transacting and if there is a fraud that happens, how do you communicate back to the customer? How do you collect that information of what incident has happened? How do you go back and course correct? And then how do you again communicate back to a larger set of audience that, hey, we had a fault, we've corrected it, this is what it is, now let's move ahead because this problem is solved. I think that experience from a customer standpoint, if that is managed well, then the customers become much more palpable to a newer technology.
So you think that you're saying that if you build a very easy experience to handle that will make a training or make them trust also the activity, the conversion. And on the other hand, what you are explaining is if you are facing some alerts, frauds, or also all the activities that you perform to protect them against fraud, that's another element. So thank you. I think it's very important, and thank you for both the contributions. Well, trust, it's also on channels. How you build trust on the banking when you want to relate with the customers digitally. So for me, the first channel that there is a trend that everyone is now asking, mostly in India, but it's growing also out of India, it's WhatsApp. So bringing conversations that typically are started from, let's say, AI, so it's a bot, and then you hand over to a human. This could be a flow, a journey, a typical journey. But how you think that you can build trust with an application that it's not meta related, we're not judging meta, it's something that it's outside the banking environment because it disintermediates the mobile application or let's say the home banking web, but it's considered trusted. It's considered certified. So because we rely on meta or just because it's a trend? What do you think about this?
So I think as I see things, it's basically to do with how that architecture is built.
And by the way, we love WhatsApp. I don't want to, let's say, put things that somebody will cut my okay, just kidding.
So basically, I think it's to do with how that underlying architecture is built, right? So if you see the trend of, say, let's take WhatsApp again as an example, they have focused from day one when maybe even 5, 6 years, 7 years back when the concept of security and privacy was not as much as it is today, that we are a very secure channel, we will encrypt everything And they have actually proven by fighting out with the agencies when there were incidences that, sorry, I cannot decrypt even a criminal's conversation. Now, all these things people read, right? And it resonates with us. So if this can happen to, with an FBI or such, agencies, that means, they are also securing my communication. So possibly that is one of the reasons why WhatsApp has picked up. It's obviously to do with the UI, the user interface, the user experience, and I think they are the early adapters of a lot of new things that others are just dreaming and slowly trying to catch up. The payments part through WhatsApp and all that. So I think that's primarily the reason why WhatsApp as a medium has picked up so much. The convenience, ease of use, combined with the security angle to it, everything is encrypted, etc. And because more and more people started using it and we start receiving more and more communication, it just becomes natural that we communicate more through that same channel. So then we just get hooked up to that system. And now I don't think there's any phone out here, which will not have at least one WhatsApp account, if not two, right? So I think that's how. So as long as we have systems to prove that what you do there is going to be securely done, along with the convenience and the features that end customer wants, I think it's going to be a great hit.
Thank you. Your opinion, Abhishek?
I would resonate with what Ajit just said, that see, what WhatsApp has done is to kind of capture the customer and then start pushing in services, banking services to them. So that becomes like a one channel. From a trust standpoint, yes, encryption is one of the features that they're bringing in. But I think the ability to find out that there is a fraud happening or there is an issue with the customer, and then reversing that transaction to gain back the customer's trust, I think that's the critical part that WhatsApp does, which most banks would have to kind of imbibe as we go forward.
Thank you. Thank you. Well, I want to give my contribution to the discussion. As I was saying, I'm focusing on WebRTC. Okay, so WebRTC protocol in Kaleira, we build a successful solution for banking and financial institutions. So our first use case was a very simple one. Right now, if the bank wants to call you, I don't know, because it thinks you're using some fraud detection or you're using the card or they want to check if you're doing the right thing, they're calling you with the number that you don't recognize. So you won't even answer the phone. And typically, 80% of banking customer has a mobile application of the bank that they handle every day, like 10 times to make transfers, to check if enough money is over there, etc. So we wanted to build a simple interaction that was performing through the app because it's considered certified, secure. And it shows the brand, so the bank is calling you. So for me, as a story, but it's my part of the story, this is like something that you need to put in place because it's trusted channel and it brings the brand identity of the bank. So it's a handshake when you call it. And so in India, we're trying to pitch now, but first of all, we wanted to build the knowledge with you guys and other contributions before going and interact with banks, because I think it's the best way to represent a company is to build the knowledge and understanding what the sector is expecting. So for me, this is the most trusted and privileged channel that with Kaleira can enable, but on the market, I think nothing is similar. So according to WebRTC and how the communication can be natively integrated, you think that this is a trend, or we're going for do-it-yourself where nobody wants to interact with the bank anymore?
No, so there is a need for the bank to interact with the customer. So it's not like everything is do-it-yourself. The only difference in what you said and what I'm observing today in the market is where the customer is calling the bank doesn't call the customer for other than the cross-sell opportunities that the bank sees. So if there is a technology like WebRTC where you can embed your video calling through a mobile app, which is the bank's mobile app, and then the customer interacts with you through that mobile app, I think that's one of the most trusted mechanisms of communication with the bank.
Cool. So we can sell it to you, right? After this, we'll cut it.
Yeah.
I know this is just joking. So, what do you think about these kind of channels? Because it looks like bank don't want to rely anymore on the professional, just wealth managers or private banking. But even those guys, they don't want to handle relationship with the customers. So we think that, obviously, Abhishek was right. It's two-way. So you can decide if it's an inbound or an outbound. Obviously, outbound will show some features that are really, really cool. But these privileged channels and voice, video, and having an agent talk to the customer is something that will still happen, in your opinion, in the next years?
So, the interesting thing is, again, this is something similar we have been doing for the last couple of years. So during COVID, I'm especially talking about retail areas. So we have a lot of retail clients, and they came to us and said, you know what, because of COVID, we can't have people coming to our store, but then we have our store managers and the employees sitting there doing nothing, and we have our products there. How do I sell it? So one of the ways we actually brought out is something similar, where we actually did a store calling, right? So somebody from the store would call the customer who has shown some interest, say in a apparel or whatever, and give a virtual walkthrough of the apparel. Yes, you can't touch and feel, but you could actually do everything else, talk to that person, and then if you are happy, you actually strike the deal, right? And the apparel is actually shipped to you. So you are essentially saying something similar. Now that was done using WhatsApp. Now this would be a product that is integrated to a bank app, something. Now the only challenge that I see there is with regards to privacy, right? Now there is a communication, there is a FaceTime happening, there are biometrics being exchanged, like iris and other things. Now how do we ensure that that is secure? Because I'm sitting in one place, I may be, say, in a railway station or in an airport, right? And I'm waiting for my flight. So I had this conversation, I have half an hour. And the bank representative who was talking to me is maybe in some other part of the country. Now there is over the internet data being flowing. So, is it being recorded? Where it's being stored? How long are you going to store it, right? So you need to have the right appropriate consent management done around it, right? And we do have situations where you have had incorrect or improper apps, people using those apps. Now what if I don't realize that this is not a genuine app of the bank, and I end up using that, and if this gets integrated to that, then what happens? So there may be a lot of such questions. I think we'll have to find a way to make sure that it is addressed. Just like in WhatsApp, whatever communication I do is all encrypted, so that gives me that confidence. So similarly out here in this FaceTime, can I ensure that the FaceTime communication is transmitted in an encrypted way? So that may be the first way of assuring that it's secure between two parties, and only that secured party can actually access it. So those kind of mechanisms will have to be put in place, and I think it will be a great hit, because think of the fact that I'm working and I have maybe 10 minutes in between my meeting, and I want to just do a quick communication with a banker, and I don't want to spend half a day traveling to the bank. Can I just pick up the mobile app, have the talk, finish it off, and done? So I think it's a great thing.
Thank you, because superficial approach on the assessment of all these, let's say, data requirements and security checks is important, and obviously working with high regulated environments is something that we perform, but it's always good to remind that it's not an easy project or an easy assessment. So thank you. Abhishek, you think that, just to finally leave something, because I think we are running out of time. I don't know if somebody wants to ask something, but do we want to leave like key points, key pillar points that you think are necessary, are mandatory when you craft, or you want to craft as a bank or as a high regulated environment, the best customer experience as possible?
I think we've discussed most points, but I'll just try to summarize. So keeping the customer at the center, creating an omni-channel experience where the same look and feel or the same consistent messaging happens across all channels. Keeping trust in mind, obviously encryption and the other part that my friend was talking about, comes in. I think these are key factors in which we can design a customer experience, and that has to be unique in a way that it has to be intuitive and it has to be very customer friendly. I think that's from a business standpoint, that's what I feel is going to be key.
Thank you. Well, Ajit, you leave your key elements to the folks.
Yeah, so I think coming back to the topic, right, technology game changers. So, as a nation, I think we are doing pretty good with most of the developed countries to adopt the latest technologies, and in some places we are the early movers, right? While we may be able to, like go to great depths in adopting these technologies, there are 2-3 factors that we generally, when we pitch for solutions for our clients. The first thing is look at your marketing maturity model, right? See where you are. You may end up buying a technology or a tool, but you may not be ready to use it, right? And then the pressure comes, okay, I've invested so much, where is the ROI? So look at where you are. Maybe it's better to delay the purchase by a few months or years, get the background ready so that the day the purchase happens, you're able to use it from day one. The second most important thing is connected data, right? So CDPs are, gaining a lot, right? So there is no, today, we have, I was just reading somewhere this morning. So on an average, a large company would have a minimum of 1,000 plus systems where the data resides. So essentially, you are talking of 1,000 plus copies of data residing in each of the system on an hypothetical level, right? Now, do I need so many copies? And how do I create a single view? Is when you will be able to target the customer better, because marketing budgets are going to shrink year by year, and with the same amount of money, I need to target more and get more returns so that I can pump in back. So how do I connect these various systems? So I may have different systems from different entities. How do I connect them and then join the dots so that I exactly know that I, as a customer, visited a branch this morning. I did part of my transaction, or I had to rush back, and then in the evening when I call the call center should know that I stopped here, and from here they should continue the entire journey. They should not start from scratch. I think that is a really good thing, from a a good CX perspective. It's easy said than done. It's the most difficult thing to do, to connect these legacy systems, unless you are starting fresh and you build this idea, this design. So basically things like privacy and security by design incorporated in this entire thing would be the best mix to give you the best experience, right? So technology can only do so much, but we need to also know to use it and use it in the right way. Otherwise, it's just going to be a dead investment.
Thank you. Thank you. So I don't see anybody that is cutting our meeting. So I don't know if you have some questions for our guests, or we can check if we're out of time. Yeah, okay. You want this?
Thank you so much. I'm from insurance industry. I wanted to know, how can we use technology to reduce the unclaimed amount? One of the issues that we face is an unclaimed amount. There's a similar issue which even mutual fund industries would be facing. So how can technology help us reduce that particular gap?
So I think this is a typical problem, right? Basically lapse customers, unclaimed amount. So these are typical use cases that we at Ansas Equity get from our various clients that we are asked to solve for. And I think there are 3 or 4 answers to this. The first is use of the right analytical models to actually predict, right? So can I predict upfront that this is going to happen, this event is going to happen, and therefore I have better opportunities to take proactive actions to prevent that event happening in the first place, right? The second is to make sure that, there could be reasons why this thing is unclaimed. It could be that, the address is incorrect, therefore I don't know whom to, the mails have been sent, but it's not getting received, right? So how do I ensure that on a periodic basis, I have communication established with this customer, even just to say a hi, so that I know that I'm talking to the right individual, and all the checks and balances in terms of nominees and those kind of things are in place, so that the primary stakeholder, if he or she is not there, I at least have somebody to go back to, and then follow the the law of the process in terms of paying out. So I think these are some steps that we will have to do, because there is a reason why it has become unclaimed. So we will have to look at that and look at your underlying data. Now, typically, one of the main problems that we face as an organization is bad data. When I say bad data, it is non-contactable data. I have tons and tons of email IDs and mobile number, but they are not reachable. Now, what do I do with them? Because typically in an insurance, if I buy a term plan of say 90 years, 100 years, I bought it on day one, I just keep paying for X amount, and maybe after that I don't have to pay whatever the plan is, then if I don't reach out to the customer, maybe that customer has changed the mobile number, or that customer is, maybe it's become too old, and now the next generation is, operating on that behalf. So there could be so many reasons. I think we'll have to look at the underlying causes, but it is a solvable problem. Now, can you solve it as a 100% thing? We don't know. We'll have to look at the root causes and then maybe attack on an 80-20 principle to see how we are able to reduce the problem statement and bring it down to zero. First of all, and put in processes in place that you can prevent this in the first place itself.
Thank you.
And it's interesting because the data cleaning or the data update is something that our clients ask us, to understand if the number is real there, it's really there, how to have a feedback from the customer using a conversation. This could be a strategy, but what correctly Ajit was saying is all about building the right process, backbone and front end. But according to claim, a typically process that we are used to manage is how you manage claim remotely. Understand, first of all, if it's a fraud or if it's a real claim, okay, and you need some tools, but you can also easily build a video conversation very quickly where you take pictures, and all these pictures go in a logic that predicts or tells you if this is it's a good claim or it's a bad claim, okay? And handle it remotely, do it yourself, and physically when needed. When building the strategy, I think it's the best way to handle all the identity and the preference of the single clients, because we all know that there's not one channel and one strategy that works for everyone,
Just wanted to add one point with your permission. So, now the next set of technologies are where it's trying to understand so whether it's a bot or a human being who's actually doing the transaction. So basis the movement of my mobile phone, right? So I kind of build a pattern of how that, how hard you press a key, for example, right? When you type. And that's, so the impression, the force applied is actually measured. And that's, so the way he types and the way I type will be very different, right? So therefore, when next time you interact with me, if I'm not using that kind of a pressure, there's something wrong about it. So then I immediately activate my next level of cross-checking to make sure that it's actually me that you're talking to and not somebody else. It could still be a genuine case where you're talking to my next of kin or somebody, right? But then you still need to verify that you're talking to an authentic customer. So these are some new age mechanisms to preempt and prevent frauds.
Yes, in this, check. Check. All right, so for this particular fireside chat, we'll call it a wrap. Give it up for the gentleman present here. Quite some insightful conversation we just witnessed. Thank you once again. And with this, we will also move forward in the day. For the proceedings, we also have one interesting session coming up right next. But before that, we'll take a quick 5 minutes break. And the next one is also a report launch. So just in case if anybody wants to stay back for the session, you can please grab your seat right away. Thank you once again for joining in this session. Looking forward to have you in the next one too. Stay tuned. Thank you. quick announcement. We are ready to begin with our next session. May I please request everybody to kindly settle down. A very good evening and a warm welcome to one and all. Welcome back to Global Fintech Fest, organized by, of course, we have our audience coming in still, so I'm just going to give you a quick minute before we start. I request everybody to take your seat. Yes, organized by NPCI, PCI, and FCC in association with Department of Economic Affairs, IFSCA, and RBI. Well, up next is a report launch addressing the topic Rising Digital Business Spends Managing a $15 trillion India Opportunity, a joint white paper launched by Encash and Kearney. Well, to begin the session with, we have our representatives here. I'm going to announce for them, and may I please request them to step up on stage, beginning with Mr. Hemant Vishnoi, founder Encash. Please put your hands together. Help me welcome him on stage. I'd also request Mr. Naveer Bindal, co-founder Encash, to join him up here on stage. And जोरदार तालियों के बीच हम स्वागत करेंगे यादवेंद्र त्यागी जी का. He's also the founder at Encash. And may I please request Mr. Shashwat Sharma, senior partner and financial service leader, Kearney Consultancy, to step up. And I'm going to put the responsibility on Shashwat's shoulders to take the lead for this report launch.
Thank you very much, and great to be here in this room, and great to see a full house. So very glad to launch the Kearney Encash report on the B2B spend opportunity. B2B is a very interesting space, as all of us know, while a lot of focus and attention has been right now on the B2C space, but we see B2B as already as about close to about $7 trillion opportunity in India already, and going up to about 15 trillion by 2030 as India reaches its overall GDP of 6.5 trillion by 2030. So very excited about the space. As we all know, B2B, a lot is happening. A lot of startups are already there. We also have a lot of government policy, which is also fostering growth in the entire sector. What we tried to focus is on this report to see how could India at the industry level really leapfrog. All of us know about how deep the penetration in India is in the payment systems, and that's something which even countries across the world want to emulate. But one thing where India has been left behind is on the entire efficiency space. So while we've digitized and in some sense made real-time components like payments, but overall from an end-to-end perspective, we still see a lot of inefficiencies in the value chain. So we have what we call the Kearney B2B index, where we benchmark countries from across the world on two parameters, which is around efficiency versus penetration. And while India comes very high on penetration, we still have a long way to go on the side of efficiency. And that's really what we have focused on in our white paper, which we'll be releasing now. We always see fintechs really taking a lead in broadly in three directions. One is new propositions. So we're seeing a lot of things coming on the lending side, on the spend management side, on the payment side. We also see fintechs. The second big area is around digitizing elements of the value chain and really building on the India stack and the infrastructure. And we see a lot of work happening there with open digital commerce network coming in, OCEN coming in, also the India stack. So that's the second piece. And third piece is around marketplaces and acquiring the customers. So we see a lot of new age platforms coming in and acquiring customers directly. So we see fintechs play a role across all these three models. And what we truly believe is that with the potential to realize $15 trillion by 2030, we see four key levers to make it happen. Number one, the fintechs continuing to innovate and focus on these three elements on the opportunity. Number two, new partnerships developing between banks, financial institutions, and other infrastructure players. Number three, the entire regulatory regime focusing a lot more around incentives and making sure that there is more and more play happening here. And then finally, moving towards a world which is more standardized. And that's something to learn from some of our global experience. How do we reach standards both on data exchange and ways of working? So that's something we want to really highlight, and would great to get your feedback on the report. And with that, I would request Encash Hemant to come.
Thanks, Shashwat. Will not take much of your time. I think, Shashwat has well covered it. First of all, thanks AT Kearney team for putting marvelous effort and, for such a deep study on the business spend side. Not many studies, or probably, this is first of its kind study which has happened on digitizing business spends. A lot has been, talked about how the retail payments have kind of, evolved in India. There are studies which are, talking about lending as well, or credit side. This is the first time, this study has been done that, how the digital value chain of business spends is kind of, evolving in India. And I think, it's a great study which has been done, comparing various value chain factors within the business spends value chain. And it actually talks about kind of innovations which fintech and banks can kind of, do together. Great study. Thank you so much. Yeah. Over to you, over to Naveen to speak more about the report.
Sure. Hi, everyone. I think while the report itself, when you get access to it and read about it, will tell you a lot more about the opportunity and why the opportunity really there, right? So, but I'll probably try and give some insights in terms of what's really happening, what has not happened as yet, and what can happen further from here, right? I mean, I was on another panel yesterday where I actually spoke about it briefly, but to set the context really here is that as businesses grow in India, the need for the spends automation, or the need for the whole B2B commerce or B2B payments has to be solved for, right? It has to be streamlined. There are plenty of opportunities out there. I think we spoke about the availability of NEFT, RTGS as rails, but the solutioning that is required over those rails are still missing, right? I think the whole efficiency parameter is still very low, while the adoption in India is still better off, right? At least in India, we are not fighting checks and DDs. We're still sort of a little bit ahead as compared to other markets. But still, I think the piece which is lacking here is a solution that can sort of really leverage the rails in a very effective way, right? For example, today, if you look at the mid-market, people are still struggling with how one can sort of raise an invoice, how one can actually account for that invoice. When the payment is sent out to the supplier is still wondering whether the money that has come in has come for which invoice, right? There is no reconciliation of the UTRs that are generated and so on and so forth, right? So there's plenty out there that is broken. With the growth in business in India, I think the need for a very streamlined and all-encompassing ecosystem is required. Just having the ability to move money through NEFT, RTGS rails is not going to be sufficient. What needs to happen really though is that you bring all these pieces and parcels together, whether it's payable, whether it's receivables or any other expenses, as much as you can bring them together and solve for. I think those are the clear needs, and hence the opportunity growing from the current $6 trillion to about $15 trillion over the next 6-7 years, right? I think that's where the report also talks about the gaps that exist today and how those can be met. That's all about it. Thank you. I'll just ask Tyagi to come in and say a few words.
Can I talk from here, or I need to walk there? Okay, guys. So I think you've heard enough about this, but I would like to highlight two major events in our lives which brought in digitization, right? COVID-19 and demonetization. That's when everybody started talking about digitization of payments and things like that. And what people in this room sitting across see digitization is paying by UPI, QR, credit card on Amazon, Flipkarts, and the likes of it. But when Flipkart guy sells on Flipkart, there's 100 other transactions that happen behind that. He procures raw material, he pays rentals, he pays his wages to the service providers or whoever is there, his utility bills and everything. think of it that all those transactions are also transactions. That is also a B2B payment which is happening, right? And when you talk about the payment which is happening on a consumer to business, the backside payment is multiple times of that. So the size is humongous. Don't think about digitization or everything as a consumer to business, which we keep talking about. This is B2B payments about, even if you look at any FTRTGS volumes on the RBI website, 80% of that is business payments. And all of that is broken, right? There is a huge space out there which needs to be sorted out, which needs to be cleaned up, and each and every leg of cleaning up is where there is a transaction or a monetary transaction which is going to happen. That's what Encash is here for. That's what the report says. And I think when you read the report, you'll get much more to know what is happening and where it is headed in that sense. Thank you, well.
Well, up next, right here, because the gentlemen are here, I'm also going to invite Ms. Nidhi Tiwari up here on stage because we are moving forward towards an unveiling moment. So we're going to unveil the report here. So I request all of you together to kindly participate in this one. All right, let's do this at the count of 5, 4, 3, 2, 1. Give it up, guys, give it up. You can also have some picture perfect moments up here. Well, thank you for gracing the stage with your kindest presence, and thank you, lovely audience, for being patient. And yes, we will move forward, and that's about it from the team here. That is Team Encash and Kearney Consultancy. एक बार जोरदार तालियां हो जाए, फिर एक बार just yes. Thank you everybody for joining in for this particular session. Right after this report launch, we have yet another product launch coming up your way. Because the clock is ticking and we're running a little bit short on time, so I request our audience, I'm going to give a quick minute for them to settle before we start and begin with the product launch next. Well, the next segment, ladies and gentlemen, is going to talk about tokenization solution for omni-channel businesses, and we have our esteemed speaker, Ms. Tanya Naik, Head Online and Omni-Channel Business Pine Labs with us. So we shall invite her over up here on the stage for the next product launch. I request the ones who would like to stay to kindly settle down. And I think a lot of networking can continue, but outside of this hall room. All right, so here we go. Ladies and gentlemen, once again, a warm welcome. Global Fintech Fest will resume now to its product launch segment. And as discussed, tokenization solution for omni-channel businesses. May we please request the gentleman, sorry sir, we want to continue ahead and we would really appreciate if this networking happens outside of this conference room. All right, please put your hands together for Ms. Tanya Naik, Head Online and Omnichannel Businesses, Pine Labs, for the presentation. No, that's okay. What about the presentation?
All right, good afternoon, everyone. And first of all, thank you for letting us speak on a subject which is extremely topical, thanks to the advent of the guidelines that are expected to hit all e-commerce businesses by 1st of October, that is tokenization. What we're about to present to you is a solution that enables the benefits of tokenization to transcend into businesses that are available both online and offline. If we could move to the next slide. Yep. The next one. Right. So just a quick recap on what tokenization does. Simply put, it's an alias for a consumer card in the merchant ecosystem. Not very different from the way a UPI VPA is created for an underlying bank account, except that that UPI VPA, which is truly interoperable across the entire network that operates within the banking ecosystem, the tokenized card only operates at a singular merchant level. And that's where truly the complication, sort of arises. The reason why the guideline was introduced was primarily to make sure that online e-commerce transactions are far more secure. Merchants who store consumer data, especially card credentials, have a much more secure way of storing it. And only those merchants who are able to tokenize the card with a network can technically store that token and give a better checkout experience to their merchants. But what really happens when the merchant operates both online and offline? Currently, the guideline only covers what is known as the online e-commerce merchant, which is in the card not present world, where you and I go to a merchant and actually use the card at checkout. But the same merchant currently operates in the offline world, which is the card present world as well. Why not give the benefit of the saved card experience and not really let the consumer tap or swipe the card and give him a preferred checkout even at point of sale? So here are two use cases, if you move to the next slide. And by the way, tokenization has taken off in a big way since the advent of the guideline. Some of the numbers that you saw on the previous slide are absolutely staggering. To quote a few of them, Master and Visa collectively have now tokenized close to about 200 million tokens till date. And globally, Visa has now tokenized close to 4 billion tokens, which is more than the total number of issued cards till date. So obviously, it has taken off in a big way because merchants do realize the need to create a much secure and a much faster checkout experience. But as I said, the problem exists with merchants that work both online and offline. And in order to provide for them, we have what we call as the tokenization solve for omnichannel businesses. And we want to show you two specific product demos today. One for the travel and hotel industry. This particular demo is very, very relevant because when you go to a hotel, you obviously don't book the transaction at the time of going to the hotel. You pre-book your stay in a OTA, or you would go to the hotel website and pre-book your stay. And then at the time of the actual check-in is when you would actually pay for the remainder transaction. But as I explained to you the whole complication, if you couldn't actually pass the token from the offline world or the online world to the offline world, how is it that the consumer is going to be able to check out seamlessly like he was doing before? So here's one demo which will show you the benefit of what we call the omnichannel solution for hotels and travel through tokenization. Music. What about the music? Can you play the music as well? So what you can see here is where the consumer has first gone and opted to reserve his booking at an OTA website, not very different from what each one of us do or go to the hotel. At this point of time, what you can see is the user actually not just authorizing the transaction for his booking, but also simultaneously tokenizing the card so that we can store that token at our end in Plural. Once that happens, Plural has stored these card credentials and made sure that those transaction details are sent to the hotel. At step 2 is where the consumer enjoys the stay and checks out of the hotel, no different from what he would have done in the earlier stage before tokenization. This is what the hotel sees at the back end. As soon as the card gets tokenized, the merchant actually is able to look at the hotel booking and the associated card with the hotel booking. And at the time of checkout, with what we know in the hotel and travel industry as a motor transaction, able to continue and complete the transaction without second factor authentication. Let's look at the other scenario, where the consumer doesn't wish to actually use the remainder booking because, like many of us, we choose to book and then choose to cancel at the last minute. When that happens, the same solution works. The same motor transaction is actually used to cancel the earlier booking, which was tokenized. As you can see, the cancellation charge, which was earlier applicable, even in the pre-tokenization world, was able to be levied in the post-tokens world. That's a pictorial representation of how the pre-tokenized world was working, where the booking was done on the OTA. The transaction, which included the card credentials, was sent to the hotel. All the details of the hotel, all the hotel details, including the card credentials, were stored on the direct hotel web, the hotel management software, and then used to pay at checkout. And what happens in the post-tokenization world, where we, using the token feature, are able to not just convert the card into token, but also able to convert the transaction into a moto under the applicable RBI guidelines and still provide for a seamless checkout. There is absolutely no impact with respect to the way the consumer was able to book the hotel pre and post tokenization. And that, to our mind, is truly powerful, given the way the travel industry works today. An important point to highlight here is that the only exemption in the tokenized world for hotels is for corporate cards, or B2B solutions as we call it, or the GDS way of booking, where all of these corporate cards were stored with travel agents. Unfortunately, many of us like to go to hotel websites or go to a Make My Trip or a Booking.com and still do our bookings. And that's where no solution or no exemption exists except this. That's example number one. And here's another example, which to our mind wasn't really a truly, I wouldn't call it something which was not so great, but we just wanted to bring a better, more contextual experience to what we call as the endless aisle example for omnichannel retail. Here's a look at how one could do a booking today for an Apple phone. You go to the retail store, you scan the QR, as you would normally do. At the time of scanning, you would once again be able to tokenize the card in the form of a card not present transaction. Once stored, the consumer's token is also stored at the merchant through Plural. And on the day of the launch, when he has to pay the remaining amount of the Apple product or any other product, he receives the payment link that is linked to the original transaction, completes the transaction just like any other payment link transaction, but without the need to re-enter his card credentials. The solution, I may add, works on EMI as well, and pay later. And there you have it. The iPhone 2, iPhone 14 has been successfully completed, the transaction's booked, and the delivery will go as per plan. This, to our mind, is again pretty unique because it not only allows the same merchant to have a truly omnichannel experience for their consumers, but for the consumer not to enter card credentials every time, not to have to tap the card both in the offline world and not to have to again enter the card credentials in the online world as well. Given our presence both in the offline and online world, the fact that we could make the same consumer go through a seamless checkout is again pretty unique and pretty powerful. Next slide. All right, so there you have it. Two solutions, both in the omni-channel merchant space, one for hotel and travel, one for omni-channel retail, one which is a true consumer and a merchant pain point, especially in the hotel industry, one that we believe will enhance the experience of the consumer in a retail checkout, and both that are available in the Pine Labs ecosystem because of our presence both online and offline. So thank you very much. Thanks for your time. I'll open the floor up for any questions. All right. Yep. Yeah.
In the retail workflow, at the final payment, there was a requirement to enter the CVV.
Yeah.
But in the hotel example,
yeah,
there was obviously
not
the
in
card
the
was
final, not in the final stage. The CVV was only required to be entered at the time of the tokenization of the card and the initial
I
booking.
think I saw that in the video that when the
Not
42,000 payment came, then also it showed that.
Oh, you're talking about the endless aisle, that one.
Yeah,
So
the
that
retail.
one actually is, as I said, it's not really in the form of a no OTP, no
CVV,
authentication checkout. It actually just enables the same consumer to link his original transaction and not to have to enter saved card again, or not to have to do it again, because the merchant today is present both online and offline. So if he's completed the transaction in the offline world, given that we now have the stored card, we were able to offer the same consumer a better checkout experience in the online world. But that doesn't mean that the authentication doesn't happen again.
And in the hotel example,
that's possible because of the regulatory restriction doesn't exist. So you can always process that transaction as a motor transaction in travel, which you can't do in retail.
because there was no added authentication done
That's
at the time
correct.
of checkout in
That's
the case
correct.
of the hotel.
That's right. That's not, so that's the relaxation that's available in the hotel industry, but not so much in retail.
Yeah, so in the first travel example, what
Yeah.
Mr. Different workflow maybe, but let's say when you're at the booking stage, so rather than doing a pre-auth or whatever, so if there's a case where there's a 25% advance to be paid, right, and there's no other blocking of funds happening, right? So it's actually the ulta of the iPhone example. It's actually an online first and then offline.
So in the hotel example, it's actually online first. You're absolutely right. And because you can tokenize the card and also do a transaction auth of an amount in the same workflow, you were able to also pre-book a certain amount. Even in the second example, you could do that. So for example, when you are actually scanning the QR on the POS machine, you could decide the pre-booked amount. So you could book it for like 6,000 when the product is worth 42,000, and you only pay 38,000 or 36,000 during the final checkout.
Yeah, but the question is, when you check out at the hotel, would there be a payment link sent for the balance amount? Because the hotel can't on their own go ahead.
No. At the checkout at the hotel, as you saw, we actually did a moto transaction. So there was no need for him to enter or make a payment link transaction. And we actually were able to integrate it with the hotel's dashboard itself. So when he clicks that, he's ready to check out, we actually executed the moto transaction as well. Yeah.
Not so clear about the scanning of the QR code at the store.
Yeah.
What is the app where the consumer is scanning? That's one.
Yeah.
Second question is that the consumer have to enter their QR code plus CVV plus OTP, which in my experience is cumbersome versus just scanning my card on the device.
So, that's exactly the point. Today, in the Omni retail example, actually, there is no guideline which allows the tap and pay card, the tap and pay transaction, or the swipe transaction to get tokenized. And which is why you had to actually scan a QR and generate another link which was able to tokenize the card at that point of time.
And the scanning is happening on the device, but the app is consumer app, merchant app.
No. So when you scan, you're actually creating a payment link transaction again. You're not actually scanning it on another app. So it's no different from you taking a QR and scanning it and a payment link opening up.
Got it. So I'm scanning on my camera.
That's right.
And I'm clicking on the link.
That's right.
And then I'm tokenizing that.
And because we already have pre-fed the transaction details, we would only need the consumer to enter his card number and tokenize it.
And next time I'm visiting the store, when I scan that QR,
it would already be available
it
because
will be
it's tokenized.
tokenized.
Yep.
Got it. Thanks.
Yeah.
Hello, ma'am.
Yeah. Hi.
For the hotel example, suppose the customer didn't turn up and he forgot to cancel also.
Yeah.
Will the amount get debited from his account?
No. So when the customer doesn't turn up and then he forgets to cancel also, the transaction stays in initiated stage. Because he would have either done a token booking, which is like a rupee 1 or a $1 authorization,
Yeah.
or he would have, let's say, 5,000 rupees blocked.
But it's a moto transaction, right?
No, that is at the time of checkout, right? So depending on what the hotel's norms are, they could
suppose
end
at
up
the time of
cancelling
the
it
checkout-
after. So I'll tell you how that
Yeah.
will work. So let's say that the hotel has a policy that if you don't confirm the transaction within, say, 60 days, we have the facility to either charge your card or cancel the card, cancel the transaction. So depending on that policy, because we've already tokenized and authed the transaction, the earlier transaction, the hotel will be in a right to execute the moto based on what they've signed up with the customer. So that would either mean cancelling it because they would have signed up with the customer saying we'll cancel after 60 days, or they will end up charging if that was the contract that was signed with the customer.
Okay, got it.
So that's the benefit actually of tokenizing at the first go, because you would be able to do that without requesting for authentication later.
It's beneficial for the hotel, but
Definitely,
But for
it
the
is.
customer side, suppose right now today I have gone for a contract that I'll be visiting the hotel after 60 days. Now something happens and I don't turn up,
Yeah.
right? I end up losing my entire money, and because
So
I have
actually,
already given the right to the hotel.
Yeah, so actually, the reason why, and most of these OTAs now have moved to full transaction blocking. In this solution, you don't need to block the whole transaction. You just can block 1 rupee, or you can just block as a pre-booked amount of, say, 5,000 or token amount, as most hotels take. So technically speaking, you don't need to book for the whole amount. And the consumer can then enjoy a better experience, because if he's not sure of the booking, he will only have lost a part of the amount and not the full amount.
Got it, yeah. Thank you, ma'am.
Follow-up question. If you're just
Yeah.
using it for 1 rupee and the
Yeah.
customer doesn't have credit limit at the time of checkout, what happens then?
I mean, it gets declined and it results in another follow-up, which is no different from any other hotel transaction.
Yeah, it's a 1 rupee transaction plus customer doesn't have credit limit at that particular time.
Right. So the auth which happens, and maybe Somalia, you can explain how this happens in the hotel. So Somalia, who I'd like to introduce to you, is our head of product. Maybe you want to come in here.
So what will happen is if you don't have credit limit, so first of all, banks have a policy of over limit charges and all. So yeah, there are few banks which can, let's say, you have a 10,000 limit and the final amount, let's say, it's 15,000. So either they process as a 15,000 debit in the issuer side, or else what will happen is that will get declined and you as a customer, you will be charged as a over limit charge. And then when the limit comes back, so there will be a mechanism of retrials and all. But that will kind of impact your credit history and all those things. So as a customer, you have to kind of ensure that that limit is there.
Suppose the hotel.
Yeah.
Hello.
Yeah, kind of, yes.
Suppose the hotel rent is around 10,000 and I don't have 10,000 at this point of time in my bank account, then the transaction pre-auth will not happen?
So these transactions are typically linked for your credit cards, not for debit cards. So pre-auth and all this cancellation happens on credit cards itself. Because
Okay, so
I
it's
can't.
not applicable for debit card?
No, this will not.
You
be
can't do
applicable.
pre-auth.
Pre-auth and all
only-
these limit-based transactions cannot be.
So right now, suppose my limit is below 10,000, suppose. So transaction will not go through even if, there is a rupee 2 or rupee 1 authentication happening.
No, when you are doing the booking, so it's let's say a 1 rupee, 2 rupee transaction, that will go through. Now, let's say if you don't turn up, there can be, let's say, one scenario is that it can be no-show charges. It's how typically, like when you book that, let's say the hotel, let's say you book for 5 days, and in the terms and conditions, the hotel, whichever hotel, the institution is, they will clearly mention you. Like, let's say before 5 days or 3 days, if you don't cancel, then you will have to pay, let's say, 1 night of room rent, or let's say 25%. That's typically a entire policy of the hotel. Now, let's say if you don't have, you did not turn up, you did not cancel it. Now, let's say it's a complete no-show. You did not, as a customer, you did not turn up. Then what will happen is that, if you don't have the credit limit, then it's like the transaction will not go through. But eventually, the hotel will start retrying that. But as a customer, you have to understand is that issuing banks take those calls, right? Because somebody will let you do an overdraft or over limit of the actual limit, and some banks have a policy that they don't allow it. and eventually it will impact, let's say, somebody who doesn't limit it, and you are kind of getting hits on like limits which you don't have. That will kind of impact your CIBIL and your credit history. So I hope I answered your question.
Yeah. Thank you.
Okay. Any other questions? Thank you. Thank you for patiently listening to us. Hope this was of interest to you. And we're always available outside for any further Q&A that you may have on the subject. But thank you.
Well, thank you everybody for joining in for this session, and thank you, Ms. Tanya, for having addressed this lovely tokenization concept with Pine Labs. Ladies and gentlemen, one last session in this hall room. We would be doing a quick workshop, ML use cases in fintech. The ones who would like to attend, we request your presence back in here. All right, giving our audience one quick minute before we begin the next workshop. All right, ladies and gentlemen, we are ready to begin our workshop, ML use cases in fintech. We request the members who are not attending this session to indulge into the networking outside of the hall, please. All right, welcome back to GFF. Global FinTech Fest presents its last workshop for the day in this hall. We're going to swiftly learn about ML use cases in FinTech, and to present the same, we have Mr. Satish Hariharan with us. He's the Senior Solutions Architect, AWS. Please help me welcome him up here on stage with a round of applause. Come on, everybody, the last session for the day.
Thank you. So before, I work for AWS. I'm a senior solutions architect. I work with fintechs in Bangalore. Used to be a startup co-founder myself before joining AWS. So this session is around AI/ML for fintech. What we intend to do is talk to you about how our existing customers, some of the customers, are using AI/ML in a fintech context. Broadly, we're looking at, just a minute. Yeah, 3 domains actually: banking, payments, and insurance, going through the entire value chain. I'm going to talk about how our customers leverage AI/ML. We also will talk about our AWS's approach to machine learning as well, and then we'll give a little bit of guidance on next steps, what you can potentially do to kind of build your own capabilities. So before we start, I just want to, I mean, it's a very sparse audience now. How many of you are actually building machine learning solutions? Okay, one. How many of you are on AWS? How many of you have heard of AWS? Okay. Are you building, anybody building on AWS? Yes, okay, good. Anybody in banking, payments, and insurance space? Okay, cool. All right, so let's continue. So what the objective is basically to tell you about how financial institutions are leveraging and how can you realize value from machine learning quickly. If you're trying to do something on-prem, you know, how you can leverage the cloud and build fast. That's the objective. Looking at 3 domains, quickly jumping into the banking use cases itself, right? So if you look at, I mean, if you've been around, you must have heard these terms multiple times, right? Onboarding and KYC, loan origination, credit decisioning, fraud, customer interactions. We just had a session around customer experiences earlier, and personalization. These are like broad categories of, you know, broad areas where we see AI/ML getting used today. Just going to quickly walk through some cases, right? So onboarding and KYC, typically the uses in terms of, you know, how do you apply computer vision? I mean, there are 2 things that one does, right? One is the onboarding, and second is the KYC itself. So on the onboarding side, customers use computer vision to kind of do liveness checks, things like that, to make sure that they are interacting with the real customer, even in a video KYC kind of use case. And then you have other things like OCR and NLP, which gets applied in terms of extracting information out of documents like Aadhaar, voter ID, driver's license, and so on. And that's where we see customers using this. So an example is actually Credit Vidya. This is a technology startup based out of India. They use a service called Amazon Recognition. This is a computer vision technology. It's an AI service. You can use APIs to very easily build computer vision on AWS, right? So it's a case that you may want to look at. This available in our website. Okay. Moving to the next one, which is loan origination. Again, we see a lot of uses in terms of OCR and NLP, right? Where you have to scan your documents and extract information out of that. So here, again, a different customer, Blue Wine. This is a US-based fintech. They use a service called Amazon TextRact. So TextRact is again an AI service. It's an API-based service that allows you to extract information out of documents. You can pull text out of documents and easily convert it to even entities and so on, and then use that to improve or make the process really fast as opposed to otherwise. Next, look at credit decisioning. This usually leverages data. This is structured data, or it could be data that you get in terms of credit scores and so on, or it could also be alternate data. So we are seeing more the usage of alternate data, such as social media data and so on, right? To understand how businesses are performing. And to get to a use case, we have a bank called Oaknorth in US that actually uses Amazon SageMaker. So SageMaker is a machine learning product that helps you build an entire pipeline on AWS, starting from annotating data to building and training your models and even doing inference. And this is something that even data scientists can use, and you don't need machine learning expertise to be using SageMaker. So this is an example where they're kind of doing credit decisions for SMEs, and they're using multiple sources of data, and one being the alternative data sources that I spoke about. Next is fraud detection, and this is again, we've heard a lot, and there are multiple customers using using machine learning for fraud detection. There are multiple services also within AWS. There is a AI-based service called Fraud Detector, which addresses a few use cases, but customers also use machine learning pipelines and build their own models as well, and they take advantage of our GPUs for doing this. The latest, I think, state of the art is actually using graph neural networks to build out really powerful fraud detection models. So an example is a company called New Data Security, which is based out of the US. They were acquired by MasterCard in 2017, and they built a solution for analyzing credit card fraud and using anonymized user data, and they in fact use Amazon SageMaker to build a fraud detection pipeline for themselves. So some metrics are out there. It's like they were able to passively block nearly 100% of the traffic for some of their customers using these models. Next is the customer experience use case, where we heard a lot of businesses are using bots and conversational UI today to interact with their customers and scale the experience itself, right? You don't need to build a large team of agents anymore. So chatbots and speech capabilities are another big use case for machine learning with fintechs. So an example is actually Capital One. They have built an Alexa-enabled service on Amazon, and they've used Amazon Lex. So Lex is a service that enables you to easily build chatbots on AWS, where you can convert utterances. Now, utterances can be speech, or it could be something that you type in a chat kind of an environment. And Lex converts those utterances to actions, and then you can easily build chatbots. We recently announced a complete UI builder as well for Lex, so that you can visually build your chatbots on AWS. And the last is personalization, right? It's a big use case again, ML to forecast the needs of customers and to make sure that you can have good recommendations. An example is a company called NerdWallet. They, again, a fintech startup. So if you're, let's say, a neobank with multiple lines of businesses, and you want to like cross-sell, for example, you have your benefits cards as one line of business, you have salary accounts, or you have a lending business. How do you ensure that you pick the data and recommend the right lending product to your customer? So this is something that it's a typical use case, and NerdWallet does that. So quickly moving into the payments value chain as well. So you would see a lot of similarities, right? Credit scoring, fraud prevention, customer interaction, personalization, all of them apply to payments as well. But there are some interesting use cases that are very specific to payments. One is smart routing, and the second one is actually transaction monitoring for anti-money laundering. So these are, again, areas where AML gets used. So smart routing, it's an interesting thing. If you're a payment aggregator, you may be working with multiple payment gateways. And how do you decide who should I send my payment to? So this is something that you can use data. You can leverage data to build machine learning models. And depending on the context or where the order is coming from, or time of the day and so on and so forth, you could potentially route the transactions to an appropriate payment gateway. So this is, again, a very interesting use case. We see some of our customers, even in India, using this. Can't name them, but one example is actually Razorpay. And again, this is their primary goal was to help businesses establish an online presence, but at the same time, make sure approval rates are the highest. So they have achieved this, this capability using machine learning models on AWS. So this, again, this is a transaction monitoring use case I spoke about. where you can detect suspicious transactions based on the data that's available. So this is an example is one of TravelX, where they, two things, that both for KYC as well as AML, they're able to leverage data to identify suspicious transactions. So again, this is a anomaly detection problem, right? In terms of, if there is most of your transactions at 90% would typically be, a good transaction, but how do you identify the, 0.5% or 0.05% that is a suspicious one? So companies use anomaly detection algorithms, and some of these are actually built on AWS. There is an algorithm called random cut forest, which customers leverage quite often to build fraud detection models. We spoke about credit scoring in the earlier, the banking case as well. Here's another example, which is in the BNPL space. BNPL usually kind of integrates into the payment value chain. So Affirm is actually a BNPL customer out of US, and they use this thing called adaptive checkout, and they leverage machine learning models. Next is fraud prevention. Similar, I'm not getting into a case study there, but it's similar to banking or other areas, right? Customer interaction, chatbots, and speech capabilities. Again, we spoke about this. And the last is, again, personalized offers. So this is, again, an interesting thing where you can use ML to forecast needs of customers and personalize recommendations, right? So this is an interesting case in the payment space, because you see data aggregators in payments, right? Now, if you are aggregating data in terms of transactions between 2 or 3 different travel use cases, for example, ride sharing versus airlines versus restaurants, you have the ability to actually create a personalized product offer using the data that you're gathering. So example is Tink. This is an open banking solution which is based out of the UK, and they use machine learning models. And they use the solution called SageMaker to build these ML models. Moving into insurance, similar, you would see similar use cases in the value chain. But some interesting use cases are personalized rates, for example. So I'll just quickly jump to the use case itself. Creating a personalized rate, insurance rate, based on how someone is driving, right? Today you have the ability to do capture data on driver behavior. And based on that, you can actually change the way you are charging your customers, right? So this is an example, a car insurance provider in UK, and they are able to do this. And drivers are able to save up to 50% on car insurance. Cross-selling and recommendations. Again, it's an interesting use case. This is an India-based case study. This is a life insurance provider, and they are using machine learning models to better understand their customer needs, and then they're able to provide recommendations in terms of what products they need. The interesting thing here is they've used something called an Amazon ML Solutions Lab. So this is like a solution where AWS partners with you, and we help you build the prototype. So if you have a use case, bring it to us, and experts from AWS will come, and it's almost a free service. We help you build the initial use cases, and then you take the model and expand on that. So that's a possibility that you have with AWS today. Claims processing, you have lots of documents in the insurance space where you need to kind of scan and so on. So OCR and NLP is another very big use case. An example here is Bajaj Alliance, and they're using TextRack quite a bit for doing document processing. Customer experience, again, chatbots and AI speech capabilities, enhanced call center operations. So this is again an example with Policy Bazaar. Here it's an interesting use of Amazon Polly. Polly is actually a text-to-speech converter that you can leverage on AWS. And they are using this as an in-house IVR service, and they are able to, send critical voice alerts and manage more than 150,000 inbound calls. So it's again a big use case in terms of how you can leverage AI, right? Again, fraud detection is quite popular. So that kind of covers 3 broad domains. I didn't speak about capital markets. That's again another domain where we see a lot of usage, but the customers are usually enterprise grade, doing things on pre-trade, post-trade analytics, settlements, clearing, and so on and so forth. We do see wealth managers quite use AI and ML on AWS. So there are some use cases out there. So just want to talk about what AWS wants to do with machine learning itself, right? We want to put machine learning in the hands of every developer, data scientist, and researcher out there. That's our goal. And how are we going about it, right? So if you look at the machine learning stack on AWS, we kind of categorize it into three different layers. The bottom layer is actually for expert ML practitioners. What we provide there is GPUs, machine images, containers, CPUs for inferencing, and so on, that machine learning experts can use. And we support popular frameworks like TensorFlow, PyTorch, and MXNet for you to build your machine learning models. Okay. The second layer, so if you have a team or a team persona which belongs basically of machine learning experts, you may want to leverage this. But let's say you have a team of data scientists instead, right? And you don't have machine learning experts. Then you go to this middle layer where we have a service called SageMaker. So SageMaker allows data scientists are very familiar with Python and notebooks, and SageMaker allows you to kind of use an environment which is where data scientists are quite familiar, and you can build. You can actually start with annotating data, do feature engineering, do training, and then do hyperparameter tuning, a whole lot of things, and even deploy your ML models. Okay, and the last layer, which is the top layer of the stack, is actually what we call AI services. Now, these are useful when the team persona that you have is a set of developers. You don't even have data scientists, right? These are products which are available as APIs, and you will have multiple APIs, Python, JavaScript, and so on and so forth, and you can very easily integrate these services into your existing applications. So kind of diving a little deeper into, double-clicking into that earlier slide, you can see some of the AI services here, right? Not all of them may be applicable for fintech. Some of them are actually very, let me say, industry-specific, like healthcare and so on. But you would have seen some of the use cases earlier, right? Translate, comprehend, extract, Lex. These are services that get used quite often. And these are all AI services that companies are leveraging, right? And the second one, which is the ML service, is the Amazon SageMaker service that I spoke about, where you can build an entire machine learning pipeline, starting from data preparation to deploying it, right? And you can even monitor your models for drift and so on and so forth, right? Recently, we also launched a couple of more extensions to SageMaker. One is called the SageMaker Studio Lab, which you can use to learn SageMaker. So you don't even need an AWS account. You can sign up into Studio Lab even without an AWS account and start learning how to build models. And SageMaker Canvas is actually a no-code ML for business analysts. This is a new extension to SageMaker. SageMaker is targeting data scientists, right, as a persona. In the case of Canvas, we are looking at business analysts. You don't need to write code in Python. We generate a lot of it in Canvas. And the last one I spoke about, basically we support the three major frameworks, PyTorch, MXNet, and TensorFlow. And it consists of CPUs and GPUs. You can use AMI. So we have something called an Amazon machine image that developers can easily use to spin up servers, and they don't need to then install a lot of these frameworks. Otherwise, if you're running your own machine, you have to install a lot of these frameworks and their dependencies. In the case of AMIs that we provide, you can simply spin up a server with the AMI, and you'll be able to get going from day one. So how can you deliver value quickly, right? That's the other question that we wanted to address here. One, you can leverage pre-trained AWS AI services. If you have a set of developers, pick and choose the AI service that you want. Many of these can be easily customized with the data that you bring in as well, right? Most of them work with the concept of transfer learning, right? It already has a lot of intelligence, but you can bring in your data to customize it and make it more specific to what you want to build. Second option is leverage an end-to-end ML platform such as SageMaker, and we have two case studies here. We spoke about one is Bluevine that is leveraging a lot of AI services, and then you have Intuit, which using SageMaker quite a bit. A few considerations from a fintech or a financial services standpoint. When you are building your AI and ML models, security and governance becomes quite important because you're bringing your own data into the environment. So for security, AWS provides ways to create your own VPCs, your secure defined networks and firewalls. You can do authentication and authorization seamlessly with a lot of our services. Data protection is possible in transit as well as at rest using our encryption services. Right? Model governance, again, a lot of our models are, or the machine learning models that you build, get stored in a service called S3, and we provide ways for you to audit, manage the artifacts, even explain the models in some cases when you're using SageMaker and so on. Right? So these are key considerations when you are in the fintech world that you need to think about as you are trying to build on AWS. What do I do? How do I move forward? Read our ML best practices financial services white paper. We have a lot of SageMaker demos that are available on YouTube, so look at it. We also have a lot of workshops that are available, so I'll share the links later in one of the later slides. You can also look out for something called an AWS Machine Learning University, and this allows you to build a team of ML experts. We also have something called SageMaker Fridays on Twitch. So if you were to go to Twitch, you can see a lot of either live sessions or recorded sessions around using SageMaker. How can we help? We have multiple programs. One, solutions architects like me, reach out. If you're already on AWS, reach out to your account manager. There are solutions architects who can come in and help your team build their capabilities on AWS. We can do training workshops and so on. We also have our professional services and partner network that can help build for you if you don't have the capability yourself in-house, right? And lastly, I spoke about ML Solutions Lab. We have a team of experts who can partner with you and help you build a prototype. If you have an idea, come to us with the idea and we can help you build this. Yeah, that's pretty much it. You can take down the emails. So my name is Satish Hariharan. That's my email ID there. We have a FinTech BD. Also for India, his name is Suchir Bhatnagar. And for any of the programs, you can reach out to Suchir. And yeah, some of these links are useful. You can, I referred to them earlier. You can take them forward. Yep. Any questions? Happy to answer. Okay. All right.
So has that been put in place on the AWS cloud?
Well, I have not heard of that company, but just now I spoke about Canvas, right? So one of the things that we are continuously trying to do with all our services is to make the developers more and more productive. So we are moving more towards no-code kind of solutions, drag and drop kind of UI and so on. So Canvas is something that you can definitely look at.
And I mean, I think I would probably, I'm assuming I think I know the answer, but what's your take on the no code versus like proper coding of machine learning models?
So no code is something that is emerging, right? It will give you a certain level of control today. You'll be able to build your models. But if you want to go deep, right, that's where all the 3 layers are available for you. We have customers building on all 3 layers. And the ones that have the experts, they directly go into the frameworks, right? They go into, and they use multiple frameworks. Some of them use both PyTorch and TensorFlow because depending on the use case, some frameworks are better than the other. So depending on the level of control, you may want to go deeper and build your capabilities there as well.
Thank you.
I had a question on the use case for loan origination, especially when you consider, say, credit on the go. And it is in case of supply chain finance. So the ML that needs to work on it, it keeps on evolving.
Yeah.
Ideally, it should, because customer behavior may not be the same at all points in time.
Right.
So in that case, will it require a continuous,
Absolutely.
change in terms of how one is the data feed,
Yeah.
and second is the underlying,
Models itself.
models.
Yeah.
So will it require?
Yes, it does. So SageMaker, for example, or even other open source frameworks help you build a pipeline where you continuously gather data. And many of our customers, run batches where they're continuously training their models. That's one. Secondly, once you have trained your model and it's available as an API, as an inference endpoint, you also today have the ability to monitor that for drift. And there are ways where SageMaker has something called a model monitor, which allows you to look for changes and then optimize your ML model.
So what would help, ML optimize in terms of you have defined a set of parameters based on which the ML model would work.
Yeah.
But if and when we change the the underlying information or the underlying questions, then in that case, would AWS be able to give those kind of analytics?
So this is, when you're building a model, it's based on you're bringing your domain expertise, right? What AWS is providing is the infra to build, right? But when you're building a model, the feature is something that you are thinking about as a domain, and you're
Yes.
building it. Now, if let us say you want to bring an additional feature, that is something that you need to bring the domain expertise, but we can help you build it out, right?
Okay, so there would be no analytics as such. I mean, apart from the optimization, probably we may not have analytics based on this was the model that we had put in place, and how impactful was it in terms of how did it translate in terms of
we do.
business growth?
There are very common ways to look at how well your model is performing, right? So you can keep track of those using analytics. So there are things like area under the curve, false positive, false negatives. There are a lot of parameters that get reported, widely, and those are available for you to look at. You can look at how it is changing over a period of time, and then you can optimize your models based on that.
Thank you.
Hi, I'm Sucharita. My question was, is the platform dynamic enough to allow the user to choose an ML algorithm, or does it choose on its own depending on the data set and the use case that's coming in?
So depends. I'll give you a consulting answer, right? So if you have a use case which is, let us say it is fraud, right? And you want to do anomaly detection. Now, you could use an AI service that says, okay, I'm going to do this for you. You feed in data, and you're able to use it for a certain set of use cases, right? But let's say you want to build your own, and let's say you want to use something like SageMaker or your own infra layer, you still need to know that I need to use random forest or random cut forest as an algorithm to do that. And there is documentation available that you can use for doing that.
Right, so it's user dependent, right?
It is depending, it depends on both your domain experience and if you're building on your own, your machine learning expertise as well.
Right, thanks.
Communication channel to reach out to you?
Yes, yes.
I don't want to spend a
Yeah,
lot
yeah,
of
it's
time
correct.
for the session.
Yeah, yeah.
Thank you.
We can connect after the session.
Thank you, thank you.
Yeah.
Well, thank you, Mr. Satish. Can we please have a round of applause for Sir? And with this, not only we conclude for the workshop, but we are kind of ending today's day. So the lineup is done with for today. However, we have many more workshops and in-person talk and chat sessions happening tomorrow that one can look up to. Thank you for being a part of this workshop and today. This is your host, Drashti, signing off. Thank you. Have a great evening ahead.
you.